1.2%. But the interesting thing to look at today is the sectoral heat map, because that is largely driven by the entire GST reform boost which is expected. Nifty Auto leading the entire pack, up 4.5%. I mean, that's not something usual that you see every day. If we can try to pull up all the counters on the Nifty Auto, you'll see that all the counters are trading in the green. There's Nifty Realty, which is also doing very well in trade today, up 2.7%. Consumption, the other pack which is seeing significant amount of gains, the FMCG as well as the Nifty consumption up 2.6%, the Nifty FMCG up 1.6%, as well as there is defense which is seeing gains of about 0.8%. Only the Nifty IT slightly in the red, otherwise all sectors in the green today. Let's also try to pull up the BSE 500 and see what are the specific counters that are doing well in trade today. Let's try to pull that up. There you go. There's IFB, which is up 20%, locked in upper circuit. Endurance doing well, up 9%, Relaxo up 8%, and all auto and EMS and even consumer durable names doing pretty well in trade today. But something that could have a negative impact of the GST reforms, that's Godfrey Phillips down 4% because there's a possibility of Sin Goods being taxed at 40%. There's Anupam Rasayan down 3%, Cohen's down 2%, Easy Trip down around 2% and Deepak Nitrate also down by about 2%. So that's with regards to where the markets stand. But with that, let's also welcome in our guest for the day, Saurabh Jain, SMC Global Securities, joining us now, and Brijesh L, Head Technical Derivative Retail Research at IDBI Capital, joining us now. Welcome to both of you, gentlemen. A very good morning to you. Before I go on to the question, Brijesh, your quick view on the markets. Do you think this 25,000 levels here on will be sustainable?
Morning. So basically, I believe that this momentum is going to last for the next this entire week, and my understanding is that 25,200, 25,300, which was the earlier resistance, that is likely to be retested, and I also believe that may also be taken out. So view is extremely positive. There can be a small profit booking close to 25,200. But directionally, I think this is opening up for 26,000 on the higher side. So maybe not this expiry, not this week, at least for during the monthly expiry, I have an understanding that we might be trading somewhere close to 26,000 level. So we are positive on the market.
If we hold at this level at 1.4%, it's going to be the best move for the benchmark Nifty 50 since the 15th of May. Which is quite a while, and you saw quite a few big moves in May, right?
Yeah.
Because of everything that was happening at that time. 12th of May was when you saw close to 4% up move for the Nifty 50.
Yeah.
And then a couple of days later on the 15th of May was when you saw 1.6%. But at that time, in fact, incidentally, was when we were very close to that 25,000 mark. On that day, we hit 25,000 again, moved up from 24,578 or thereabouts, or 666, yeah. So we moved up 400 points or thereabouts, 350 points in a day. Today we're up 350 points or thereabouts. We've got our first caller for the day. We've got Pradeep calling us from Kerala. Pradeep, very good morning to you. How can we help you today?
Hi, good morning.
Please go ahead.
Happy Independence Day.
Happy Independence Day. Wish you the same. Wish you the same.
Thank you. I think it's the last week I asked the same questions to add more Kitex.
Right.
Like right now I have a little loss. I feel like a little bullish trend is start. I don't know if I can add more.
Yeah. Should you add more? Yeah. So you currently, at this point, Pradeep, you wouldn't be able to because there are no sellers in the stock. It's at upper circuit right now. And so let me ask, and I know that you've got a long-term view on this one. So Saurabh, on the fundamentals, Kitex has gone through a little bit of a troubled time. Then if there is a boost for the sector, would you say that Kitex is the one to hold?
Of late, what happened to the textile is that because of the overhang of the duty, all the textiles stocks got sold off. And if you look at the latest quarterly numbers, there was a kind of a degrowth in the top line and the bottom line. While the company is good, the valuations have came off, but I won't be advising to add more. I think wait for a while, have some more clarity, and then take a call.
Very quickly, Brijesh, on the charts, at what point do you think that an exit is appropriate? Because he's still losing 85,000 rupees even at the current price. Where would you put the stop loss as well? You're on mute, I think. Yeah.
Yeah, Alex, I think the last week low that was 158. So maybe below 158, I will be talking on 156. So that would be my precise stop loss for the trade. So as long as this 155, 156 level is not broken, there is a probability that it may see some bounce. So that bounce can be anywhere close to 200 to 210 level. Time frame would be a bit difficult, but then yes, with the stop loss of 155, I think he can take a chance.
Okay, all right. So that's it with regards to where Tech's government stands. We've got our next question then from Rajesh Maheshwari, who is writing us from Singapore, and his question is on Global Spirit. He's got 90 odd shares at an average price of 1097, so sitting on profits of around 8,000 odd rupees, and wants to know if this stock can be recommended, to continue to hold in the portfolio from a longer term perspective. And what he's saying is that he wants a fundamental view basically on this one. So Saurabh, I'll come to you. Amongst the entire pack of the Alcobev segment, would you recommend him to hold something like a Global Spirit, or probably book some profits and switch to something else?
While we like alcohol beverages space, but Global Spirits is relatively a small company, and there is a volatility in the earnings also. So I would recommend him to book profits in the Global Spirits, and he can move into the same space by investing in United Breweries.
Okay, all right. So that's with regards to where Global Spirit stands. But we've got our next caller. Vikas is calling us from Hyderabad. Vikas, hi, a very good morning to you. How can we help you today?
Ma'am, actually I'm holding Genus Power shares.
Okay.
So the order book of the company looks huge, and the valuation also seems reasonable for me.
Okay.
So is it good to hold for 2 to 3 years or switch to other one?
Okay, Vikas, I got your question. I'll take this up with Saurabh again. Saurabh, he's done his research well. What would you recommend? Should he continue to hold Genus Power for the next 2 to 3 odd years?
While the company is good and the numbers are also, the posted numbers were also good, the valuations have came off a little bit. And right now, if you see the stock is consolidating in a range, from the 2 3 year perspective, I think the industrial space looks good to me, and it should be a good hold.
Hold. All right, so that's the view on Genus Power. Astral Limited is the name of the counter we're talking about next, and Bhupendra Mehta is writing in asking about this. He's bought at levels of 1,285 rupees per share, and he's looking to hold for the 12 to 15 month time frame. Rajesh, on the charts, I'm going to come to you. The stock is up and about in trade today, 3%. In fact, if anything, I think today is when he's moved into the green. What are the levels on the upside that you would watch for?
Maybe 1410, 1450 is the immediate upside, and I think if these levels are sustained, then it can go back to 1550, 1600 also. So we have a positive view, and these corrections can be an opportunity to take the long bets. So he can hold a long position. He can bet for 1410, 1450, and once if that levels are sustained, then further upside can be there.
All right, so that's with regards to where Astral stands. We've got our next caller. Arvind is calling us from Uttar Pradesh. Arvind, hi, a very good morning to you. How can we help you today?
Good morning, ma'am.
Good morning.
Actually, I want to invest 2 lakh rupees in NTPC.
Okay.
And I want to know the fundamental view. As per the technical label, the charts are looking strong, but the stock is not moving as per the records. I want to know that the fundamentally anything happening in the company or negative news in the company that we do not know as in. So can we tell us about that?
Okay, I got your question, Arvind. I'll take this up with Saurabh. Saurabh, his question is basically on NTPC and wants to know as to why the stock is not making moves as per what he was expecting. He is set to invest around 2 lakh rupees in the counter. Do you think that he should diversify some of his funds to some other counters or invest entire 2 lakh in NTPC?
The utilities did not perform this year because of the unseasonal rains, and there was a lower demand than anticipated. Lower electricity demand than anticipation. So that is what has happened and led to kind of a consolidation in all the utility stocks. While NTPC fundamentals are very strong, I think it is a good stock to hold for or to invest for the long term. They are venturing into the newer areas, hydro energy and in the renewable energy also. And a lot of capacities are going to be added in the next 2 3 years. One more stock that I like in this space is from the hydro space, that is NHPC. I would request him, I would ask him to invest maybe 2 lakh rupees in these two stocks.
NHPC and which was the other one?
NTPC.
NTPC, all right, all right. Yatharth Hospital is what we're going to look at next, and this is a question from Ekambaraya, who's writing in from Hyderabad, and he's got 250 shares of the company at a price of 580 rupees. The stock is down about 2% or 1.5% or thereabouts. He's asking whether to book profit in this one because he's holding with gains of about 30,000 rupees. And should he move to something like TCS or a Biocon or even either CDSL or NSDL? Brijesh, on the charts, what would your suggestion be?
Alex, Yatharth, we are having a positive view, and maybe after the quarterly numbers, there has been minor profit bookings. We can see a minor profit booking. But I believe this stock can go back to 750 levels in the short term. So if we can just hold on to the long position, it would be advisable. The maximum correction is 650 on the downside. The outlook for the Yatharth Hospital remains positive.
Outlook remains positive for Yatharth Hospital. All right. Ayush is calling us from Noida. Ayush, very good morning to you. How can we help you today?
Yeah, very good morning, Alex. Actually, I have Geo Financial shares. And 1,000 shares I have at the price of 298. My question is that, like, from recent 2-3 weeks, Geo Financial was completely following the pattern which Nifty was doing. But now today, even Nifty has moved 350 points above, but still Geo Financial is on the same track. So, like, what's the opinion on that? Will it go above or what?
Okay. Can you help me with how long you would like to hold this stock for?
For next 6 months, I'm planning.
Okay. Brijesh, I mean, it's not necessary for the constituents of a benchmark to move in line with the benchmark. So therefore, that answers the first question. But what are the prospects for the next 6 months?
Alex, I think the structure is positive. So what we can say is that in the weekly charts, the stock is now forming a consolidation. And this consolidation is getting up with a good volume. So my understanding is that sooner or later we'll see a breakout of this. And the previous resistance of 355, 360, that can be the next leg of upside. So I think there is another 30-35 points kind of a move there. There is a possibility of that kind of a move. And recently the low was 308. So that would be the stop loss for the long bets. And I think he should hold on the long positions. Maybe in 6 months, I think he can see another 30 points kind of a move on the higher side.
Okay, all right, so that's with regards to where Geo Finance stands. We've got our next question from Gaurav Baheti, who's writing us from Hyderabad. His question is on Bank of Maharashtra. He's bought 415 shares at a price of 56 rupees and wants to know if he can hold for the next 1 to 3 odd months and if there's a possibility of the stock reaching 58 to 60 rupees. Brijesh, I'll come to you on this one. What are the charts indicating from Bank of Maharashtra? And do you think it will cross the levels of 58 in the next 3 odd months?
Yeah, we are having a positive view on the Bank of Maharashtra, and there is a very high probability that this 58 level will be taken out. So yeah, on the immediate basis, this 58 is the resistance, but that can be taken out, and the level of 65 can be seen on the upside. So the view is positive, and if he's willing to add more above 58, so that is advisable.
Adding above that 58 levels is also advisable. All right, we've got our next caller. Murugesh is calling us from Bengaluru. Murugesh, hi, a very good morning to you. How can we help you today?
Hello, madam.
Hello.
Hello.
Hi, I can hear you, Murugesh. Tell us.
Already it is the 1,000 shares in the Ashok Leyland.
Okay.
Already bought it is 120.
Okay.
But present rate is the old or sell to your.
Okay. And what is the time period that you're looking at to continue to hold the counter?
Hello, madam.
Yeah, I can hear you, Murugesh. What is the time period that you're looking at to continue
Time
to hold?
period is 3 or 6 months is wait it you are.
Okay, got your question, Murugesh. I'll take this up with Brijesh. Brijesh, 3 to 6 months, what are the targets that you're seeing on Ashok Leyland's chart?
Maybe another 20-25% kind of a move can be there. So, and his entry price of this 120, can be the stop loss for the long trades, and easily 20-25% move can be seen from this continuation of the stock. So he should hold a long position.
Okay. All right. So hold is a view on Ashok Leyland. Stock is up and about, as is the rest of the automotive pack. And Mahima did tell you why. That is the GST impact that is playing out. Let's pull up the shares of Lumax if we can. It's currently trading up as well. And the auto ancillary space also seeing the benefit of this a proposal. At this point, it is a proposal. It's not been passed by the GST Council, but Lumax is up about 7.6%. We've got Sampath, I believe. Yeah, Sampath is written in. He's bought Lumax at a price of 3,349 rupees per share, and he plans to hold this for, no, I think he's talking about Lumax Industries, not auto. And he's bought at level of 3,349 rupees. He's planning to hold for the next 18 months. What's the view on this one, Saurabh, if you have a fundamental view on the counter?
It's a good company, primarily into the lamps, LED and all, and the use of these LEDs lights have been increasing in all the new upcoming models, and the company is also gaining market share in terms of per unit of OEM. So in that sense, I think the profitability and the revenues are both expected to increase. My sense it is a good hold.
Okay. All right. We've got a next caller from Hyderabad. Kiran is calling us. Kiran, hi, morning. How can we help you today?
Good morning, Alex. Good morning, Mahima, and good morning, the panel. Thank you so much for picking the call. Since a week, I'm trying to catch on my queries. But,
I'm glad that you finally managed. I'm glad that you finally managed.
Yes, exactly. Yeah. And before I put my question to the panel, I just want to request and advise on recently one of my cousin who lives in Mumbai, he forwarded a website. It seems like a suspicious trading website operating under the name of AEGIS.
Okay.
They were asking a couple of WhatsApp users to deposit the money to unrelated Indian companies, the bank accounts, in order to trade on their platform.
Yes.
The site claims to be a SEBI registration, but their certificates looks unusual, and the trading platform software does not have a proper customer support and a compliance and the SEBI related. All the details. So I just want to bring this notice to recently you cracked the Dabbawala kind of thing.
Yes.
So I work in software, so it seems like it was registered with the .vip domain.
Okay. So Kiran, so what we'll do is you've called us on this number, but we've also got a WhatsApp number. I would invite you to send us a message on that WhatsApp number with the details that you were just speaking about. If you can share the hyperlink of the website that you are speaking about, we will definitely track it on our end. And thank you so much for tuning in to the coverage of Spot the Scam that we've been doing on NDTV Profit. This is an ongoing effort, viewers, to educate you, as Kiran has clearly attempted to do. So Kiran, we'll do that on our end. In the meanwhile, can you tell us about the question that you had?
Sure. Thank you so much. I'm currently holding of 161 shares and making a profit of 1.29 lakh.
Okay.
Just wanted to know whether I can go ahead sell profits, or I can hold for a long term.
Okay. First of all, congratulations on having held and the kind of gains that you're making. Saurabh, on the fundamentals for BSE. BSE is the name of the counter, bought at levels of 1,728. Would you hold? He's making substantial gains.
While the fundamentals are good, the numbers posted for the June quarters were also good, but the valuation seems quite richly priced. There was a good amount of correction before, and then the stock gained a lot. My sense is that it is better to book some profits off the table and go with the rest.
Okay, all right. Okay, so that's the... Oh, okay, that's the view with regards to where BSE stands. We've got our next question from Somik, who's writing us from Kolkata. He wants to know about Inox Wind from a longer term perspective. He's saying he's holding 32 odd shares and he's also bought 13 more shares in the right entitlement, and wants to know if he can add more shares at the current level or wait for further dips to further enter the counter. So I'll take this up with Saurabh, you first, your view with regards to where Inox Wind stands, and then go to Brijesh to know if these are the right levels to buy more. Saurabh, your view first.
I think the company is posting good set of numbers. There is a good amount of good double-digit growth that has been witnessed, and they have a good order book too. It's the valuations were quite high, and now it is a valuation correction which is happening with the stock. I think as the time will progress, the company continue to post good set of numbers. Surely he'll get his price. My sense it is good to hold, but will not advise to average more.
Okay, all right. So it's a hold from Saurabh's end. Brijesh, your view, if he can enter more, enter at current levels right now to add more and average out?
No, I think I'm not very comfortable with the way the stock is correcting. I believe this 135 level or maybe this 130 will also be broken. The structure is very weak and there has been a distribution from the technical point of view. And if I look at the 200 moving average in the weekly time frame, it comes somewhere close to 91, 92 level. So I'm not saying it will come close to 91, 92, but then definitely another 10, 15 points kind of a correction is there in the Inox Wind. So maybe 125, 120 is what I'm looking at. So I would review when it comes close to 120, maybe somewhere close to 120 level. I will review the position, but on the immediate basis, I would avoid.
Avoid is a view on the technicals for Inox Wind. We have to step into a very quick break. We'll be back on the other side to take more of your questions, so do stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
एसआईपी करो, इन्वेस्ट करो, लाइफ में ग्रो करो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The markets move fast,
and so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
the answers you need straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit Research. shines a light on the biggest stock market movers.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
The markets move fast.
And so should your portfolio. Expert insights. Welcome back. You're watching Ask Profit. We're slightly shifting from those queries to a very interesting conversation about KC International, and because they've won a big order. And to discuss as to how things are panning out, we're joined by Vimal Kejriwal, who's the Managing Director and CEO at KC International, joining us now. Mr. Kejriwal, hi. A very good morning to you, and always a pleasure speaking with you. Before I go on to the specifics of the order, just want to get a sense, because this particular order of more than 1400 odd crores, that's in the space of TND, and the momentum in the entire order book of TND has been picking up. Just want to get a color as to how that entire space is shaping up, and of course your outlook with regards to where international orders as well for TND stand.
So, Mahima, the orders which we announced today, TND is roughly around 50% of that, and 40% is civil, and the rest is cables. So, but I think notwithstanding that, TND is shaping out very well. Out of our total order intake this year of 8,400 odd crores, almost 65% is from TND. And if you look at geographically, India is doing very well, and Middle East continues to do very well. So it's basically India, Middle East, and Americas in the TND where we are seeing a lot of action happening.
Mr. Kejriwal, hi, morning. And
morning, Alex.
I must say that this is one of the stocks that I had picked in my list today, because out of everything that has happened, I think 1400 crore order, and there's also one piece in the real estate space where you've gotten a repeat order. So, so as you've pointed out, 50% in transmission and distribution. I just want to understand as well, because part of this order comes in from the Americas, where you're talking about certain infrastructure that you're helping set up. So while there has been a substantial portion come through over the course of the year so far, is that trajectory likely to maintain in the rest of the financial year?
So as far as Americas are concerned, I think with the big bold budget, what we are seeing is that a lot of projects are getting expedited. So the number of inquiries from Americas are actually going up. And one interesting thing which is there, while everyone talks about tariff, but on steel, there's a uniform tariff of 50% across the globe, except for some minor concessions to UK. So that's not impacting us. And also a plant in Mexico, which comes under the US agreement, where if you use US steel, there is zero tariff. So I think we are pretty happy with what we are seeing in that market and the growth in that market.
Talk to us about execution as well, because as things stand, 34,400 crore order book. The question then comes about as to how much is executable in this current financial year, and what does that mean for top line and overall operations?
So typically, our order book is I'll say on an average around 18 months to 24 months. That's the way we look at our order book and when we take orders. This year, we have announced a 15% targeted growth, which will take our revenue to around, I think, roughly around 25,000 crores or so. That's the way we are looking at our top line growth and the numbers and the execution.
Kejriwal, how's the tender pipeline looking like right now, and what is the kind of conversion ratio that you usually have?
So usually what happens is we win around anywhere between 10 to 20%. I'll say around 15% is the average which we have of the tenders which we quote. If you look at the tender pipeline today, we are looking at around 1,80,000 crores or so of the tender pipeline, divided half between transmission and the balance between civil and railways and other businesses. So that's the way it is.
In terms of inputs for you, Mr. Kejriwal, can you give us a sense of whether or not they are relatively less problematic as they have been in the past? Are they more or less benign right now, and are they likely to stay that way in the near term?
Alex, there are two pieces to it. One is the raw material side, which is basically, when I say raw material, like cement, steel, and all of this. So I think, as you're aware, they are benign, and hopefully with whatever you're talking about, GST and all that, it should be good for us. Second part is the equipments which we buy, which could be transformers, which could be switch gears, which could be conductors, etc. So clearly on the transmission side, the situation has improved. A lot of capacities have gone up. On the substation equipment side, I think I'll say the situation is not improved significantly, but the project timelines have now been conditioned to the delivery period. So typically a substation which used to be executed in 12 months, now the clients are saying, okay, we'll give you 18 months. So the delays are not hampering the execution. Okay, we can execute faster if the equipments are available earlier, but the delays have now been sort of factored into the project timelines by all the developers.
Mr. Kejriwal, in terms of your margins, you've guided for a margin range anywhere between that 8 to 9% mark, and that commentary has remained consistent. Any timelines in place as to when this will be implemented and go through?
So what we have said is that for this year, we are expecting from 8 to 8.5%. We were at 7 in Q1, so we expect that gradually it will go up, and we should end on an average of 8 to 8.5%. And hopefully, we have been generally saying that we should be improving it by another 50 basis points. So next year should be between 8.5 to 9%. But next year is a little bit far away. I'm just hoping that we should be around that number.
Okay, all right. On that note, on that hopeful note, Mr. Kejriwal, thanks so much for taking the time, and look forward to speaking to you really soon.
Thank you. Thank you so much. Thank you.
Thanks.
Thank you.
All right, let's shift focus back to Ask Profit. And we've got Ajit Mishra, who's the Senior Vice President, Research at Religare Broking, joining us on this side of the break as well. Ajit, very good morning to you. I believe we've got a caller lined up, and we've got Shankar, who's calling us from Bengaluru on KPIT Tech, I believe. Shankar, very good morning to you. How can we help you today?
Hi, sir. Good morning, sir.
Good morning. Please go ahead.
Sir, KPIT Technology 800 quantity in average price of 1,350, correct level in 1 lakh profit loss. Stella rolled in technical analysis, please, sir.
Okay, Ajit, he's incurring a loss at this juncture of over a lakh of rupees. He's bought at levels of 1,350, elevated quantity, so 800 shares have been purchased. What is the advice here?
Yeah, good morning, Alex. Alex, in fact, if you see that KPIT is doing comparatively better than the other, mid-cap IT names, because we've seen a very sharp decline. This stock, on the other hand, is consolidating in a very tight range. Since he has bought it at around the previous swing high around 1350, we have multiple hurdles to cross, even for a break even. So first comes around 1260, then around 1310. So as of now, what is positive for him is that 1180 is the area basically where the stock has formed a recent base. So that should be a stop loss. And since he's, I guess, highly into it, means in case if his position is largely into this stock only, then he should definitely liquidate in case if the stock breaks 1180, because in that case, there could be a serious profit taking, which could push the stock towards 1020,000 levels. But 1180 strict stop loss in case of recovery around 1300, 1320, he should try to reduce his position and review as well.
Okay, all right. So that's it with regards to where KPIT Tech stands. We've got a next question on Sterlite Tech, and Neeraj is writing in from Satna. He's bought at the levels of almost 100 rupees, 99.97 is his buy price, and wants to know if he should book profits at the current levels or wait for further upside and then book profits. He's sitting on profits of over 9,000 rupees. Ajit, I'll come to you on this one. What are the charts indicating for Sterlite Tech?
So, Mahima, very sharp recovery, I must say, because from 61 to 138, almost in last 4 months. So, almost like 2 years of losses, something that the stock has already incurred. So, yes, since he's sitting on a decent profit and we have a strong resistance around 140 area, it's prudent at least to book at least 50 to 60% kind of profit at current levels. And for the remaining position, he should maintain a trading stop at 130.
Okay, all right. So that's with regards to where Sterlite Tech stands. We've got our next caller. Anvesh is calling us from Hyderabad. Anvesh, hi, a very good morning to you. How can we help you today?
Yeah, hi, very good morning to you. I'm having a Havells stock of 50 quantity at the 1565 level.
Okay.
What would be your short-term target on this?
Okay, Anvesh, I got your question. Ajit, again, a question for you. Havells on the chart, of course, the stock is seeing a significant amount of moves today on the back of the GST reform. But your view on the charts as of from a short-term perspective?
So, Mahima, all these stocks in capital goods space are finally seeing some traction, because of late we were seeing that almost majority of the counters were underperforming, be it Voltas, Havells. But sustainability is the key. Means for Havells, we need this stock to hold up with the long-term averages, which is placed around the current area, around 1565, 1570 zone. So let's say once we do that, then probably 1700, 1720 is something that the stock might attempt in the near future. So we should definitely stay put with stop at 1530 and 1700, 1720 as the positional targets.
Stock is up and about in trade today, as Mahima pointed out. Mohammed is writing us from Dubai, and he's got Idea Forge, which he's bought at levels of 458, incurring a loss on this one at this point. Is it advisable to hold for the long term? Saurabh, on the fundamentals, what's the view?
It is super expensive stock, and the company did not deliver on such high valuations. I think the valuations corrections are happening, and I think the investors are not happy with the kind of result the company has posted. My sense is it is better to get rid of the stock.
Better to exit at the loss that you currently have, which is about 5,000 rupees, is the view. All right, Surya is calling us from Karnataka. Surya, very good morning to you. How can we help you today?
Yeah, hi Alex, good morning. Thanks for taking up my question.
My pleasure. Please go ahead.
Yeah, so the question is on GAIL. Would like to know the long-term prospect of this company, and is it the right time to accumulate more, like from the present that I have already?
Okay, and what is the time frame that you have in mind? You said long-term, right?
Yeah, long-term, at least 3 to 5 years.
Okay, okay. Saurabh, on the fundamentals then, bought at levels of 117 and making quite the substantial profit at this point. 1,000 shares are held. Should he add more at this current juncture or hold? And what are the prospects?
I think the prospects are good. It is a very good stock to hold for the long term. It comes into the value buy category. It also having a dividend yield of more than 4%. So my sense, you can hold for the next 3 to 5 years.
Okay. Sasha has got the next question. Holding 790 shares of IRFC, purchased at levels of 205 back in October last year. Stock is down almost 40%. Should I hold until when, or should they book losses? Sasha wants to know. The question is for you, Ajit, on the charts. Where would you place that stop loss? What are the prospects on the upside?
So, Alex, like we all know, the kind of move that we had in most of these railway stocks last year, and since then we are seeing gradual drift. So, roughly in the range of around 35 to 40% on an average is something that the stocks have corrected from their record highs, and still we are not seeing any sign of decisive recovery. Though the good part is that we are not seeing any selling pressure either, means it's consolidating in a very tight band, so close to around 110, 115 on the lower side, and close to around 140, 150 on the higher side is something that the stock has been currently trading in. So in case if she can maintain a view of let's say 1 to 2 years, definitely she can stay put. And 1110, 110 should be the closing stop loss for this position. In case if it fails to hold this level, then probably we may see 90 or maybe lower. So as of now, it's a hold.
Okay, as of now, it's a hold for IRFC on the charts. We've got our next caller. Sanjay is calling us from New Delhi. Sanjay, hi, a very good morning to you. How can we help you today?
Yeah, very good morning to you and the panel too. I wanted to make an investment for a shorter period into a JM Financials.
Okay.
Is this the right time to enter over here? Entry prices are okay at the present current level?
Okay, got your question, Sanjay. Ajit, I'll again take this up with you. JM Financial on the charts. Is this the right time to enter?
So yes, it's been almost like nearly 5-6 years of consolidation range, breakout, very strong volume, price action. So everything looks conducive. But since it's a high momentum stock, so obviously you should be strict with your stop losses also, Sanjay. So in case in case if somebody is accumulating at current levels, the area close to around 165, 170 is a zone basically where we have multiple support. So that should be your stop loss. Upside is open, means we are trading at the record highs almost after 5-6 years of consolidation. So probably we can see 230 to 250 positionally, let's say in 2 to 3 months. So the risk reward is favorable if you can consider this for accumulation rather not at one go with stop at 165.
Okay. All right, so that's the view on JM Financial. We've got Ambuja Cement that we're talking about next, and Venkat Ramani, who's writing in, is saying that he is bought at levels of 478 rupees per share. He's in the green right now. He's saying now that the government has reduced GST, does it make sense to buy more at the current price or any other cement company? I just want a small clarification, to make a small clarification here. The announcement is a proposal. This is going to be looked at by the GST Council and the group of ministers over the course of the next month and a half or so. And September is when you could see something change. But let me go across to Saurabh on the fundamentals of Ambuja Cement, bottle levels of 478. Would you add more to this, or would you buy something else in the cement pack?
We're quite bullish on the cement pack, and Ambuja Cement is a good stock to hold. We expect that the construction activity and the infrastructure activity will gain momentum in the second half of the year, and the Ambuja Cement will surely get benefit out of it. The other stock we like from the space is Ultratech.
All right. Standard disclaimer here, Ambuja Cement is part of the Adani Group, and so is NDTV Profit through NDTV Group. Let's take our next caller then. We've got Ram calling us from Bengaluru. Ram, very good morning to you. How can we help you today?
Yeah, hi. Good morning, Ram. I just wanted to...
No, my name is Alex. Your name is Ram.
Yeah, Alex. Yeah, so sorry. So, yeah, I am a regular viewer of NDTV, okay, especially after the management has changed. You guys are doing a fabulous job. Even the guy who actually takes the guy or the girl, the lady who takes the call and then transfer it to you, that person listens very, patiently and then, put it across to you people. And two people in the morning and in the evening, and the host are doing a fabulous job. I really love the way you guys do this, and also the analysts you guys bring in every day are they're very calm and
I'm very glad to hear. I'm very glad to hear all of this. Now, I would like to take a few more questions, Ram.
Sure. I'll make it fast. Okay, I'm planning to invest in auto stocks. Around 2 lakhs. Should I invest in one stock, something like Bajaj Auto, or should I split it into 3 and make it, Bajaj Auto, TVS, and the Hero MotoCorp? I just wanted to know that. Should I go with one, or should I split it into 3 and invest in 3?
Understood. All right. So you've heard the question, Saurabh. What's the view right now? And already In the two-wheeler space, you have Hero, you have a couple of other stocks that are running up very substantially. If you have to deploy, would you deploy today or would you wait for a better time?
Well, the expectation of excise cut and the second half of the year, when the holiday season and the lot of events will come like Diwali and all, there will be there is expectation that there will be a huge buying among the stocks that he talked about. What I like is maybe he can go with the TVS Motor, Eicher Motor, and Mahindra Mahindra.
All right, okay, so that's the view with regards to where the auto space is concerned. We've got our next question on Vodafone Idea. This is from Mr. Ajit, who's, no, this is for Mr. Ajit. And do we have the name of this person? Okay, we don't. Tanuj, yes, Tanuj is asking this question. He's bought 30,000 odd shares of Vodafone Idea at 6.3 a piece. So he's sitting on profits of around 9,000 odd rupees. Wants to know if he can hold or exit at the moment. Ajit, on the charts, would you recommend that? The stock today is seeing good gains, and this is on the back of earnings, but would you recommend continue holding Vodafone Idea on the charts?
So definitely I won't recommend holding. He's getting decent profit, and we all know the kind of dead cat bounce the stock has experienced in past also. So there's no trend reversal as such. In fact, he can liquidate this position and shift to Bharti Airtel in case he is planning any fresh bet in telecom space.
All right, we've got our next caller who's calling us from Vijayawada. Bindu is calling us. Bindu, very good morning to you. How can we help you?
Very good morning. Actually, I hold 50 shares of NSDL at 1165.
Okay.
I'm a long-term investor. I can hold for 2 to 3 years.
Okay.
I want to add more.
All right.
So, at what price I can enter?
Okay, okay, I understand. And Bindu, do you also own CDSL, or is this the choice that you made? You bought NSDL?
Actually, I have bought CDSL at 1100 like few months back when there was dip, and I have sold it.
Oh, you sold it, okay. I understand. All right. So let me ask a pair question, right? So Saurabh, between CDSL, which is currently trading at 1598, and NSDL, which has just recently gotten listed and is up about what 45-50% from the issue price, which would you say is better to invest in at this point?
Well, the valuations are expensive, but it is way more expensive in case of CDSL than NSDL, considering the fact that the NSDL is a much bigger player than the CDSL. So I would recommend her to hold for the long term and stay put with the NSDL's holding.
Okay, all right. So that's in regards to where both these counters are concerned, CDSL and NSDL. We've got our next question from Ashok Pai, who's writing us from Bengaluru. He's invested in Titan from a longer term horizon, bought 62 shares at 404 a piece, and wants to know if he can book profits and shift to another stock. 404, oh my god, the stock is currently trading at 3,523. If we can try to in fact pull up, I don't think I have that skills in terms of even right now calculating the kind of profits he's made. So congratulations Ashok for entering at such low levels in Titan, and for sure has made significant amount of profits, and wants to know if he can continue to hold from a longer term perspective. Saurabh, should he book partial profits maybe and then continue to hold? Is that the view?
I think you see the gold is oscillating in the range of in the range of 1 lakh in the last 3-4 months. And if you look at all the jewelry players, they have posted good numbers. In case of Titan, the quarterly numbers were good enough. And since we are approaching towards the festival season and the wedding season, and the person is holding for such a long term, I would not recommend her to book profits or to sell its holding. Maybe she can or he can go with a small partial profit booking, but I would recommend to hold for the at least next 6 months.
More than 8 times gain, a multi-bagger and how, right? And 700 plus 770% gain on the stock. IRCTC, it's time for the rapid fire round, and this is where Saurabh, Ajit, we throw as many questions at you over the course of 2 minutes. The first one is IRCTC. This is a question from Mr. Mazumdar. 885 is the buy price. Would you hold for the long term, Saurabh?
Try to exit.
Okay, NMDC Steel is the next counter. Satapati is asking this question and wants to know if he can continue to hold from a longer term perspective. He's got 9,000 shares at 47 apiece. Saurabh, your view?
Hold for long term.
Daljit Singh wants to know a target for Ashok Leyland. Would you buy right now, Ajit?
Buy. We have recommended to our clients as a disclosure, 142 immediate target.
Okay, Hindustan Zinc is the next counter. Siva is holding 5,000 odd shares at 540 apiece. From a 6 months perspective, should he hold, Ajit, on the charts?
Hind Zinc hold 410 stop loss, but actual move is likely only above 450.
Okay, ABB bought at a price of 5,762. Ashok from Bengaluru wants to know whether to exit or add more. Can wait for less than a year. Ajit?
Yeah, exit and wait for a dip around 47, 46.50.
Okay, Greenfly Industries is the next counter. Satish has purchased 1,000 odd shares at 317 apiece. Up to 3 months. Can he continue to hold, Ajit, on the charts?
Yeah, hold stop loss 300, target 335, 340.
Hero Motor Corp, 4,200 is the average price. Parmesh wants to know whether to hold for the long term. Saurabh?
Hold for next 6 months at least.
Okay, Paradeep Phosphates is the next counter. Sushila is asking this question and wants to know the target for this counter from a longer term perspective. Saurabh, would you recommend to hold this counter?
You can expect 15-20% CAGR return from this stock.
Okay, Root Mobile is the name of the counter. 1,359 is the buy price. Neeraj wants to know whether to exit or average. Ajit?
Exit on any bounce. It looks, clear in downtrend.
Okay, all right. We're done with the rapid fire round, and in fact, the queries overall, 33 were done today. Not a bad number. Thank you so much, Ajit, as well as Saurabh, for joining in, for answering all the questions you did. That brings us to the end of this edition of Ask Profit from Mahima and myself and the team that put this show together. Thank you so much for watching. Do stay tuned. Up next is Know Your Company, and this is NDTV Profit.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में। फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
The markets move fast,
and so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
the answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
The markets move fast,
and so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Hello and welcome. Here's a business where there's a bit of a turnaround which may have been visible very minorly in Q1. The hope is that H2 will be a very strong half in that sense of FY26, and thereafter you'll start to see likely FY27 be a year where there's some bit of normalization which will kick through. There is scope for that. Margins have fallen quite sharply. We're talking about a century ply, and let's try and pull up what I want to know first off, try and understand that better. There has been overcapacity, and apologies, Puneet Javeri also joining me. Anyway, so there has been overcapacity. Pricing has been a concern, Puneet, but some of that is unwinding. We can see that. Second is there is also scope for positive momentum both on pricing as well as inventory. Both of those could likely improve things substantially, even with minor tweaks coming. Also, Q1, Puneet, has been decent even where volumes is concerned. So you are seeing some of those start to play out already. Some drags with regard to ad spends, and let's pull up that second metric. I'd want to know whether the real estate cycle is what you really want to look for when it comes to a century ply. But what they are really saying as part of their commentary in Q1, whatever I read of it, was that there has been a largest shift from unorganized to organized. That's what they're really targeting. They're saying real estate is not something we want to really benchmark ourselves to. What we want to benchmark ourselves to is this shift from unorganized to organized. So what I want to know within this, all of this, is does real estate not play a role at all? That's my first part of the question. Second is, as you shift from unorganized to organized, what is it that they are doing which is helping them stand out, if at all anything? Now, point number 3 is with regard to cash conversion cycle. We've seen cash flows be really muted in FY25. In fact, cash from operations was negative, minor negative, which doesn't look good on a 200 crore profit. And we look at those numbers as we look at the metrics. Does that turn positive going forward? Are we seeing that cash conversion cycle start to play out because they're doing heavy capex? Maybe part of that is also due to the heavy capex that they're doing, that they are keeping more raw material on their books as well as more finished product on their books. Maybe it's that, but some part of that has to turn positive. How fast can capacity utilization ramp up? We've seen capacity utilization of more than 90% on all their traditional or rather their legacy plants. So we're seeing very good capacity utilization there. But on the new plants, how quickly can they ramp it up? Because there's so much capex happening. Any more capex plans, and when will debt start easing? Debt has gone up substantially. We look at those numbers. Does that come off? Is there more capex in the pipeline? They've done 2,000 crore more in the pipeline or not? What's the outlook with regard to price hikes and margins, especially margins? And you look at the numbers, and that's what you will see as well, that margins is really what's pressuring the entire business and profitability. If that were to unwind, you could well see a bit of a turnaround coming in on the numbers. And last piece is on ad spends. They've spoken about Q1 FY26 being a tough quarter on the ad spends part of it, and largely due to IPL. But does that, from an FY26 perspective, is it a normalized kind of spend that we can expect, or will it be elevated even for FY26? That's the other piece I'd want to know. So that's all I want to know with regard to Century. It's a long one, but I'll allow Puneet to start off with about the company.
Well, definitely, it's one of India's leading, plywood as well as wood panel product manufacturers, the biggest to say the least, and it is one of the most pivotal ones because it is driving that share of organized space within the industry. Now, it's been 38 years in the business. It is listed, of course, on both NSE and BSE, headquartered largely in Kolkata, but now has pan-India presence with manufacturing and sales distribution as well. Over the last 38 years, they've built 4,000 dealers, 18,000 retailers, as well as now are targeting global exports as well, and are focused keenly on innovation, branding, as well as deep market research as well. Very quickly in products as well, because plywood continues to be the dominant share of the company. 56% of the sales come from there. We've also seen, it has key brands like Scenic in the mass market space, as well as Architect, amongst others. But Scenic is the real one. It has strong branding. Advertising has been the push over the last decade or so, and has really established itself in this particular space. Laminates is the other traditional legacy segment which Harsh was mentioning about. It's been the decorative overlay as well as panels and furniture that they do. Now it has been one of the legacy ones to say the least, but here is where it gets interesting, because over the last few years they've added MDF, which is medium density fiberboard, and the other one is of course addition of particle board. Both these segments have been a key drag on the financial, and we'll speak to the management on that. From MDF, that's roughly 20% of the company's sales. Laminates is roughly about 17 to 18%, and particle board is currently low at 3 to 4%. But that's been one of the key drags over the last year or so. So that's a little bit about the business, and decorative veneers as well as other products are largely new ones. But these are the 4 traditional businesses of the company. But Harsh, on product mix as well as geography.
Yeah, you spoke a bit about the mix, and there you go. So that's the mix broadly. We are seeing nearly 60% of that coming from plywood, block board. You have MDF, which is medium density fiberboard, which accounts for roughly 20%, or there's laminates, which is also nearly 18%. 3 to 4% is pre-laminated plyboards, and then there's others. So that's really how the mix has evolved. Look at the geography. 95% of the sales are domestic, so it's largely domestic facing. Domestic consumption and interiors, once that cycle picks up, or if that segment were to grow, this is a great play on that. Exports is very, very small at this point, even though margins are better there. When you're looking at capacity utilization, and that will give you a clearer picture of my question as well with regard to capacity utilization. apologies, let's first look at the manufacturing locations actually. First, you have 14 Indian, 3 overseas locations including Gabon and Laos. The Laos unit has actually been divested, so has Gabon, but nonetheless you still have those overseas units as well. Major sites are West Bengal, Punjab, Assam. West Bengal understandably and northeast presence clearly visible, but outside of that you have Gujarat, Tamil Nadu, AP, Haryana and Uttarakhand. All of those are the significant manufacturing facilities which are there. They sell to dealers, distributors, retailers. That's largely in the domestic market, that 95% plus share, which is the domestic share in terms of the top line. And when you're looking at capacity utilization, you'll see 91% in terms of the plywood capacity utilization, so extremely strong. Laminates at 90. MDF is at around 65 to 70, but after major expansion, it's come down to that level. Otherwise, it used to be 90 plus. And the particle board segment is also, or used to also be above 90% prior to the new plant which has been commissioned. So that's how we've seen how the company has evolved, and what they are up to right now is that large capex they are doing, due to which capacity utilization has compressed, and therefore you'll see some compression across the board with regard to numbers, especially on the return ratios, because that's the return on capital employed will come off because of that. That's how one ought to look at it. Now let's look at the metrics as well. We'll start off with the income statement, the balance sheet, the cash flow, the return ratios, the shareholding, the street cred, the street coverage and valuations. We look at all 8 of them, and I'll allow Puneet to start off with the income statement.
Well, largely it's been a decent performance in terms of revenue, Harsh, and that's grown at 14% CAGR, roughly in FY22, roughly about 3,000 crores in terms of revenue. The revenue from MDF as well as particle board has helped the consistent performance in terms of revenue CAGR. But when you look at the EBITDA performance, and here is where it gets, there's some disappointment that starts to set in, because both the new segments of MDF as well as particle board have had an impact both in terms of margins as well as in cash flow, which we'll discuss in just a bit. So actually the CAGR of EBITDA is actually down 532 crores what they did in FY22. It's down to 487. Subsequently, margins have gone down by 700 basis points over the last 3 to 4 years to 11% now, and profit subsequently has dropped from roughly about 313 crore to about 186 crore. Margin trajectory has been downward. That's largely led by the higher timber prices, which is impacted as a key raw material, but hence we've given this in terms of margin trajectory and neutral, but there's largely been a drag on margins because of the new segments that the company has entered.
Yeah, the double-digit top-line growth is still okay, Puneet. It's really that margin number which is dragging the overall profitability. It's also the increase in interest cost because of the large capex they've done funded via debt. And the larger depreciation as well that's come through. Maybe not the most relevant metric when you look at a company which has grown to look at depreciation, but nonetheless that's the other impact which has come through on the net profit number, and that's why it's looking lower. If I look at the same net profit in FY24, the number is around 325 crores. So that's just how large it was, and the compression has been extremely large from 325 to 186. So we've given this a neutral, also on the back of the fact that there's possibility of turning this around. The top line growth remaining as is, if margins were to improve, if raw material prices were to compress, gross margins improving, therefore EBITDA margin improving, you could well see some increase, some disproportionate increase in profitability, and that's why you want to wait and watch for that one where income statement is concerned. Let's look at the balance sheet now, and when you're looking at that, the book value is at around 2,400 odd crore at the end of FY25. Mind you, this has a market cap of 16,000 crore, so the price to book is obviously looking quite expensive. But when you look at the borrowing number as well, you look at the borrowing number of nearly 1,500 crore, and you look at it 2 years ago at just 300 crore. That's because of the large capacity increase that they've undertaken, the largest in their history. And due to that, what you are seeing is a very large increase in the borrowing number. Now, when I'm looking at the interest coverage ratio, which is the interest expense to the EBITDA number, it's roughly 5 times. So they've got themselves covered quite well. But the ballooning debt doesn't look good, so that's something you want to watch out for. And how quickly can they bring it off? They've guided that they'll bring it off fairly quickly. So again, we'll talk about that with the management, and you'll get a better sense of that. Cash flow, Puneet.
Well, cash flow, has been impacted, as I mentioned, in terms of similar performance to the company's CAGR, as we mentioned, in terms of margin trajectory downward. Cash flow because of that has been impacted. So net cash flow just hardly a negative 3 crore in this particular quarter. In FY25, they didn't. In FY24, pardon me, they didn't maintain 27 crore of decent net cash flow, but that's largely impacted in this particular quarter. Even the cash flow from operations have been impacted because of the 2 new segments, and we'll speak to the management on the trajectory of that. But cash flow largely a thumbs down because of this aspect.
Well, yes, to be improved. Return ratios, and this is also more of the same. When you look at the return ratios, they come off sharply, but earlier it has the potential of doing 20% business, that 20% ROC. That's what I would really look at if I were an investor, that the potential is there. Now, whether you can bounce back from 10 towards 18, 20 and above is really the question that one as an investor needs to ask themselves. So we've given this a neutral from a perspective that the potential of the business has, or the business has the potential to do 20-30% ROC, which is extremely good. But of course, due to the cycle as well as due to certain factors, that has compressed in FY25. Can it reverse is really the question. So we've given this a neutral. Shareholding pattern, Puneet.
Largely stable, and this is a credit to the management. They've maintained over 72 to 73% stake in the company. That's a very strong number. We've also seen an increase from domestic investors at a time, in a tougher time to say the least. So most look like they are anticipating any kind of turnaround, but foreign investors have actually reduced stake over the last 3 years, while domestic investors have increased stake. The share of public remains largely even at 5%, but even compared to the last couple of years, that has come down substantially from over 9%. So while we've given this a thumbs up on promoter stake, we have seen retail investors largely come in fairly quickly, and we've also seen that from domestic institutional investors like mutual funds as well. So largely it does anticipate we might be at the bottom of the cycle and a reversal soon. That's what the shareholding pattern indicates, but largely a thumbs up on strong promoter parentage.
Well, that's interesting observations from Puneet, but let's pick up what the street cred is. You look at the last 6 months, the stock is absolutely flat. If I remove the performance of today, in fact, year to date, the stock is actually down 5%, down 10% if I factor in today's move. You're looking at the 1 year performance also largely being flattish except today's move, and the 5 years though has looked very, very good. It's been a 5.5 bagger over the last 5 years, near 5.5 bagger. So therefore, we've given this a neutral. Long-term prospects decent, short-term not looking as good, and therefore that's how we stacked it up. Street coverage, Puneet?
Largely, fairly certain, because most brokerages have maintained their view. We're seeing a lot of hold calls on the company, roughly about 8 are hold calls. There is an error in the graphic. It should be 12 buy calls and 8 hold calls for the company in this particular time frame. And brokerages like Nuvama have actually increased the target price in this particular quarter, signaling that this could be the bottom of the cycle and a reversal could be upwards. We're also seeing a decent return potential going forward as well. But largely, given this, a thumbs up to a neutral rating, a positive rating to say the least, and that's largely because of most brokerages anticipating a reversal from the lows.
Yeah, most brokerages anticipating a reversal is surely good. Therefore, let's look at valuations and how those stack up. You're looking at 1 year forward valuations of around 50 times. If one were to pencil in a growth of around 15% and margins of around 12%, you'd land up at around 59 times earnings 1 year forward, which is FY26. That's of course the brokerage estimate of all the brokers put together. That's 50 times. When you look at some of the others, they are obviously looking slightly more expensive in comparison to a Century. And that's one reason why, but nonetheless, does that mean it's not looking expensive from a stock perspective? It is. It's trading at nearly 90 times trailing 12 months, of course, on a year in which the base has been readjusted completely, but nonetheless, it's surely looking more expensive in relative terms. We'll have to obviously look at the next 2 to 3 year view, and for exactly that, we'll speak with the management in just 1 minute. But let's really stack up all the parameters and give it to you in one slide. There you go. Those are the first 4. Those are the next 4, and that gives you 3.5 on 8 with regard to the KYC rating. Of course, this is everything included. And a lot of these are also factors at play in the market. So what I want to really understand is whether that things are really turning around or not. Keshav, Bhajanka, who's the Executive Director, Century Plyboards, joining us at this time. Thank you so much, Mr. Bhajanka, for joining us. Let me first start off by understanding what the outlook is going forward and what's the confidence with regard to outlook, sir. What's the kind of top line growth, FY26, mid-teens? Can we expect that for the next 2-3 years? And how do margins move in your opinion?
Good morning. Thank you so much for having me on the show. I think that, we have reasonable confidence that the current year is going to be a strong year. Our guidance given is 10% for growth for plywood, 20% for laminates, 20% for MDF, and 40% for particle board based on the new capacity that we have added. And I think we are pretty much on line to meet or perhaps even exceed these guidances. Weighted average, that would give you mid-teen sort of a growth for the year. And going forward, I think we have done reasonably well considering a difficult market scenario in the current year. So going forward, we may be able to accelerate on this growth slightly. But I think that next few years, the wood panel sector in general is going to do very well. And being market leaders, I think our aim will be to gain market share.
Mr. Bhajanka, very good morning to you. It's Puneet this side. Thanks so much for joining in today. It's been a while since we've spoken to you, sir. So just a couple of key points. We've seen since then the BIS implementation has come in and that is expected to benefit the organized space. What do you expect in terms of volume versus value growth for this year? Because you've given a decent guidance across the key segments. So what is the expectation on this aspect?
I think, we generally tend to give value guidance. The volume guidance is usually slightly lower because there is an inflationary environment currently. In plywood, we've already taken a price increase. In laminate, we've taken a price increase. So I think single-digit volume growth in the case of plywood and, of course, 20% or slightly lesser in the case of MDF is what we are provisioning for. Overall, I would say that the demand, the buoyancy in demand currently isn't very visible, but there are signs, there are green shoots that things have started to ease out, particularly after the rate cuts by the RBI, even though that hasn't passed on to home buyers yet. And I think there will be some easing out.
Sorry, sir, does the GST change likely, does it impact you at all?
I don't think that there is any major change that is coming up in GST for the plywood sector. I think, maybe sectors like cement or others where they're talking about a 28 to 18 will get benefited. But I'm not aware of any substantial change that is likely to take place in the wood panel sector. I missed the earlier question, sorry, with regards to the BIS implementation. The BIS implementation will definitely help us in a big way. The only thing is that it is effective only from this month because small and medium enterprises were given a 6-month sort of a breathing space where they were exempt from enforcing BIS from August. So they needed to ensure compliance with BIS from August. So from this month onwards, we should see a substantial benefit from the BIS implementation, and this should definitely aid the organized players.
Bhajanka, you mentioned that you've taken some price increase in plywood as well as laminates. Those are two segments that have done very well for you. The competition in MDF, rather not competition, in terms of oversupply that we've seen, how do you look to counter that in FY26? Because that's largely been in oversupply. You can't take any kind of price hikes in a segment that's been slightly struggling over the last year or so because of market condition amongst others. And your growth guidance also is, in terms of Q1 also at roughly about 19%, and I think most brokerages were penciling in 28 to 30% volume growth. So compared to last year, your growth outlook for this year is also slightly below estimates according to brokerages. What do you expect of MDF for this year, and do you expect that it will be slightly tougher for this segment and a larger, flatter performance is what should be expected?
I think, you summed it up very well, that in MDF, because of the oversupply, it is difficult to take price increases. But at this point in time, what we have been focusing on is an optimization. With the new plant coming up in South, last year we saw a huge jump in our volumes. Of course, that is because of a new capacity coming in. This is something that we will not be able to replicate year on year, but 20% plus growth, I'm fairly confident of in MDF. Because price increases seem to be limited due to oversupply, we are focused on operating efficiency, and I think that we have been able to save close to 4 to 5% just by optimizing, by looking at various ways to look at substitutions in raw materials, to look at ways in which we can optimize BOMs, our bill of materials, by optimizing consumptions, by redesigning our logistic network, where we supply where we supply from the Hoshiarpur plant and where we supply from the South Badbel plant. Through all of this, we have actually been able to substantially improve our bottom line. And in this environment where you can't take price increases, to maintain margins, you will have to become more efficient. So going forward, when the inflationary environment comes back, when we can take price increases, I think there could be a scope for a much higher EBITDA number.
And Mr. Vajanka, somewhere around last year, Q1 and Q2, the timber prices were hovering roughly about 6.5 to 7 rupees per kg in the northern belt, 5.5 to 6 rupees per kg in the southern belt. Is that still the pricing environment that you've seen in the market? Because we were expecting some kind of bottoming out of that aspect in this quarter, but largely seems to be absent. Could you give us some perspective on what has happened this quarter and for the year?
It has definitely slightly eased out. I wouldn't say that, there's been a substantial tapering down, but there has been a reduction in timber prices. However, the challenge here is that rainy season, which is typically this period, is always difficult for North India. In North, the availability of timber becomes difficult as far as Q2 is concerned. So prices look slightly elevated. Compared to last year, prices are lower. And in the next few months, we're expecting prices to further fall more. As far as South India is concerned, prices have tapered off, and we're expecting slightly further tapering off going forward.
In this environment, sir, you're expecting margins to hopefully creep up. I'm talking about company as a whole. How do you achieve that? Is it going to be some calibration on the raw material side? Is it scale? Is it logistics, which you spoke about? So that's the first part. The second part is, how do you stand out as well? You have insisted that you don't want to be linked to the real estate cycle. You want to be linked more on the shift from unorganized to organized. And therefore, how do you stand out within this space?
So those are two big questions. But in terms of margins, the profile that we have given, we have said that in plywood, we'll aim to do 12 to 14%. In laminates, we'll aim to do double-digit margins. In MDF, we'll aim to do 15%. And in particle board, at steady state, we'll aim to do 15%. So that in itself will take our margin profile closer to the 15% mark. I think this is something which will play out over the course of the current year. In order to do this, we have definitely benefited a lot from strong numbers, from growth that most companies in our sector have not been able to benefit from. Last quarter, I think plywood grew at 15% plus, MDF grew at 20%, and so on and so forth. So these have aided. Alongside that, like I mentioned, operating efficiency in terms of both consumptions, raw materials, and logistics have definitely helped us out. And going forward, to differentiate yourself, we have always believed that customer first and quality, these are two things that you cannot compromise on. So there are a number of initiatives that we have done, which have enabled us to reach out directly to customers, to understand their needs, their requirements, and to plug them faster. At the same time, the quality of our products, I think, is appreciated by the industry at large.
Right.
So this enables us to be a little different. This enables us to be more on the side of the organized play rather than just the real estate play. And the organized sector in us, in plywood in particular, is still just 30%.
Sure.
So there's a long way to go.
Right. Thank you so much, sir. We're completely out of time on this edition of the show. So thanks so much for joining us, giving our viewers that perspective. And viewers, from Puneet, myself, it's a thank you and a goodbye. And thanks for tuning in. Stay with us. More action on the other side on NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real
Strong start to the week for the Lal Street. Nifty manages to reclaim 25,000. Mid and small cap indices rally. Most sectors also in the green. Meanwhile, the government unveils GST 2.0 roadmap. 3-pillar plan promises tax relief, system overhaul and better lives. PM Modi in fact vows landmark reforms to roll out before Diwali. And Ola Electric's top boss talks about path to profitability, demand-supply complexities in the Indian automotive market and plans to de-risk the company amid a rare earth crisis. Stay tuned for an NDTV Profit mega exclusive. Moving on, then Ukrainian President Zelensky plans to meet US President Donald Trump in Washington today. Trump in fact had a lengthy call with his Ukrainian counterpart. Good afternoon. Thank you so much for tuning in to Markets at 12. In fact, let's take a look at what the markets are doing. I'm Shreyansi saying first things first. Let's take a look at Nifty's picture and what it is looking like. Of course, Nifty managed to reclaim that 25,000 mark. When you take a look at the sectoral picture, that's also looking very tilted in the favor of green. In fact, auto, rural, consumption, realty, FMCG and metal are leading gains. On the flip side, there's an IT and pharma sector that are slightly on the back foot at this point in time, but largely the mid and small caps also managing to rally at this point in time, and you do have a good start to the week that you're looking at, especially when you take a look at the list of gainers. In fact, select few names, the likes of Maruti Suzuki, Nestle India, Hero MotoCorp, Bajaj Finance, M&M, as well as Bajaj Finserv, some of your counters from within the Nifty 50 pack that are leading the gains. And in fact, there are a whole host of counters, the likes of PG Electroplast, Endurance Tech, you have an Ashok Leyland, Maruti, like I mentioned, KEC International, Amber Enterprises also up anywhere between 8 to about 12%. So those are some of the counters that are holding on to gains at this point in time. What's not doing so well from within the Nifty 50 pack is maybe a Godfrey Phillips or Suzlon Energy, Glenmark Pharma, Sonata Software. Some of the counters that are on the back foot, down anywhere between 2.5% to about 6%. That's Godfrey Phillips that I'm talking about. But tell you what, let's take a look at some very important conversations. In fact, on the back of earnings, let's zoom in on IRCTC. In fact, we have the CMD of the company, Sanjay Kumar Jain, joining us. Thank you so much for taking time out and joining us this afternoon. In fact, my first question to you is going to be that this quarter, you've had a base effect that has kicked in. You also are looking at slow ticketing growth, weighing on the performance. So given in the light of all of this, how does this really set the tone for financial year 26? What were the hits and misses according to you then?
You see, this is a stable and profitable quarter. And if you see, we are in 4 segments of business. Tourism, which grew by 21%. We have e-ticketing business that also grew by 9%. Really, it remains flat. And catering business, which is showing a decline, but actually it is not a decline. If you compare year on year with quarter 1 of 2025, there was an event, exceptional item of 32 crore rupees, and that is running, that is a catering facility on election specials. So this was one-off case. So if we reduce that, you will find that catering business has also shown a stability and growth. If you talk about misses and all, then I can say you that I could not materialize our company could not materialize the whole opportunity available to us. That's the only missing point I can narrate. But going forward, we are going to take many new initiatives, like we are coming with unified portal for travel need of our customers, and the basic point in that is how we offer affordable travel solutions to our customers, and in the process see a growth in that and earn a margin for us. Similarly, we are entering into, we have already got in principle approval for payment gateway, payment aggregator business from RBI. Now we are applying within 6 months to RBI for RBI license, and there also we are doing iPay business at the moment, but we are doing only to our internal customers, and it is around last year we have taken a transaction of GMB value of 13,000 crores. So this business we understand, once we get the license, we'll enter to outside other than our customers also. We can reach out to them, to government organization, to semi-government organization, to the private organization also. Similarly, in catering side, ABSS is also coming, Amrit Bharat stations are coming, new trains are coming. You see, the government has planned, Ministry of Railways has planned a large number of, huge number of introduction of Amrit Bharat and Vande Bharat trains in the coming future. This will create another business opportunity for IRCTC, both in catering and e-ticketing side. And e-ticketing also, our non-convenience fee has grown by 17%. So there also we are able to do a good business, but going forward we want to monetize our advertisement and website side using artificial intelligence also. So these are the business opportunity we are going to capture in Railneer. We are expanding our capacity of our plants, and our board has already approved 4 new plants to be set up.
Well, absolutely, Mr. Jain. I also wanted to scratch that point further. You, of course, talked about the RBI in principle approval to operate as an online payment aggregator. Tell us a little more about that, because this development, of course, marks a significant strategic milestone in IRCTC's fintech expansion. How do you then plan to leverage it, scale it in this competitive landscape?
You see, if you see our iPay gateway at the moment, how we reached from 7,500 meager amount to 13,000 crore in 1.5 years, there is a reason to that. We understood the gap in the system, and we started introducing new facility to our customers. One such facility of AutoPay, which I can describe it before you, where we have introduced the ASBA type of facility to the customer, whereby their fare is not deducted if they opt for AutoPay. Through our iPay system, iPay gateway, the amount is not deducted from their account, but it is blocked. Once they get the ticket, only then the amount is released. So this facility encourages them to come forward and book tickets through our iPay. So we understand the strength and nuances of the business, and before entering into any business partner, in that, be it government or semi-government, will look into the pain point of those business those places, and will go to them with the solutions. So I'm very hopeful to get a very good business out of that.
All right, then let's see how that really pans out for the company as well. Thank you so much for helping us out with the outlook on that as well. But tell us about your revenue from convenience fee, because we've seen a sharp uptick when it comes to that. But you do have convenience fee per ticket that has in fact come down. Give us a little more color when it comes to this then.
You see, our convenience fee depends on UPI system. Because we give some discount in UPI transaction, and the 48% of our transaction in this quarter is through UPI. But I am happy to share with you that 2 things are important here. First, in absolute terms, our number of tickets are increasing because of 2 things. First thing, because of our efficiency. And the other thing is, new trains are getting introduced. The second part of this is, UPI is coming with the UPI credit card facility. And around 12% of the market as on date is with UPI CC. So the transaction is getting converted to UPI CC, and it is growing with 16%. So we are already in the process of having MOU with them, and there will be able to translate this loss to a better earning prospect.
All right, then, point taken, Mr. Jain. I also want to ask you my last question before we let you go. That's about the new app. How is that really working? There is growth coming in, but how do you really plan to scale that up then?
As I discussed with you, we are coming with unified portal. There will be providing artificial intelligence facility. So that will certainly help us in getting more business out of that.
All right, then, thank you so much, Mr. Jain, for joining us this afternoon and helping us understand not just your earnings fine print, but also the outlook for what IRCTC then. But let's also move on. Let's talk about some important updates. In fact, when you take a look at Chris Capital, they've, of course, acquired Theobroma Bakery. That's an interesting conversation that we have lined up. And Harsh, there's a lot that we're looking at when it comes to this.
Well, yes. Generally, we don't talk very often to private markets, but it's important once in a while to zoom out and understand what private market investors are really thinking, because that gives you a lens into how the macro is also moving, because sometimes private markets are running ahead of public markets. And for exactly and precisely that, we have with us Sanjay Kukreja, Partner and Chief Investment Officer at Chris Capital, and we also have Rajiv Batra, who's a director and consumer sector lead at Chris Capital. Welcome, gentlemen. It's great speaking with you. Now, let me first start with that crucial Theobroma transaction. And Rajiv, let me start with you, since you lead consumer. What exactly are you seeing? What's the rationale behind this transaction? Give us a lens into why pick Theo.
No, thanks. Well, a good question. So at a macro level, one of the reasons we got excited about the space was we see this trend towards Western dessert as consumption patterns are changing and user preferences. So at the macro level, that was the key call that we took. And we are seeing these trends only moving in the right directions. And within that, idea was to identify which are the top 2-3 companies. And clearly, Theobroma stands up right up at the top, being the largest. No, thanks.
Right. Okay. Maybe some audio issue there. Let me go across to Sanjay. Sanjay, first off, welcome. Let me try and understand from you the macro perspective with regard to consumer. What's driving your thesis with regard to consumer? Since if I were to look at it more critically, GDP per capita hasn't gone up substantially. Is that at all a concern? And how should one look at the consumer space in India from a macro perspective?
Great questions. And, I think, consumer is obviously a big trend in India, right? Anybody looking at India wants to play in the domestic market. It's a large market. It's growing. Per capita income is relatively small and has long, legs of growth ahead of it. And so those tailwinds have always been there. But what you start to see is that, on points in time, sometimes there's, extra, I would say, exuberance, valuations start to move up, growth from time to time comes down. I think inflation has also played out in a different way. I think if you go back in FY22, 23, overall inflation was relatively high, maybe 7-8%. In fact, food inflation within that was running at 9-10%. And now fast forward today, what you're seeing is inflation as actually at a decadal low at 1.55%. And within that, food inflation itself has come down to negative territory for the first time, I guess, or in relatively near term. And so what you're seeing is, what has happened in the last 2 or 3 years may not necessarily be what may play out in the next, 2 to 3 or 4 years. I think overall, the secular trend of India getting richer has always been there and will continue to be there. I think you're getting now the part of the cycle sort of moving away, the headwinds sort of turning into tailwinds as inflation has come off. So at a macro level, I see that. And then secondly, if I overlay the lens of consumption, India, while it might be like $2,500-$2,600 per capita consumption, they're very different markets, right? If you look at metro markets in NCR, Bangalore, Mumbai, there are enough situations or enough small markets where you're able to see, $7,000-8,000 per capita, frankly, even north of $10,000 per capita in certain pockets. And these pockets are not that small. They are $100 billion, $150 billion GDPs. So frankly, we're able to, see how consumption trends are playing out as India gets richer in these sub-pockets, which then gives us a good flair for how consumption might play out in India as it kind of grows through. So we feel, that overall longer-term trend of India's consumption patterns and consumption growing, and the nature of consumption may also change, right? More, what are you trying from consuming from a base level versus more cosmetics, food, cars versus two-wheelers, etc. All of that will play out in India, I think. And that's what we are seeing.
Right. Rajiv, talk to us about the thought process behind acquiring Theos, the tenure, when do you exit, what do you do in the meantime over the next 3, 4, 5 years as you hold this investment? Where do you see it go?
No, fair question. So at least to start with, right, the thought process at a high level is quite straightforward. Our typical hold ends up being anywhere from 5 to 7 years. So nothing changes with that thought process. Idea is not to look at it from a 3-year perspective. And when we look at the business, right, currently it is at a very good scale of about 260, 270 stores, presence across 40 plus cities. In the last 2, 3 years, company has done a good job of opening on average 50 to 60 stores. We don't see that momentum to drastically change. We feel both the team, the management is quite capable with systems and processes to continue that pace of growth. And I think that's what we endeavor to do along with the management team to grow the business in a reasonably strong manner, go deep in markets where you have good presence, as well as establish new cities every year.
Okay. Sanjay, if I can come to you, what's the size of money you manage these days? Where are you investing? What are pockets of interest for you? And how big are you willing to go? Are you allocating a larger chunk of the capital on individual investments, or are you diversifying it?
So, we've been fortunate to continue to scale up. I think today we manage over 6.5 billion of, assets under management. We've been doing this for a long period of time, for 26 years. Our last fund that we've been investing out of Fund 9 was a $1.3 billion fund. We've taken sector calls. I think consumer, of course, is one of our sectors, but we've, invested a lot in enterprise tech, in pharma, healthcare, consumer, financial services. These 3 or 4 sectors have been our core. And then we've done manufacturing and some others, new economy, a few other sectors alongside consumer tech oriented. And that's really been the bulk of where we've deployed our capital. No one sector is ever, 50% or 60% of the fund. I think we end up being 20-25%, of the fund being driven by these sectors. And overall put together, maybe about 80 to 90% of the fund would be in these sectors. In terms of single deal sizes, we've actually now scaling that up to almost, I would say our sweet spot would be $150 million. Our minimum actually is now moving to more like $75 million or thereabouts. And our average deal size would be 150, but now we're increasingly seeing deals that we're competing in, which are even 500 million or so, from a single check perspective. So as the deals as India has scaled, I think our ability to participate in those deals is also, increased, and with the benefit of our own capital, but also, our LP, our investors coming alongside us, we're able to scale and do deals which are much larger as well. In terms of just overall deployment pace, I think we've been doing about $600-700 million a year. But I think I see that growing up to almost $1 billion this year. And including our co-investors capital that we get deployed, and in top of that, there's also a very healthy sort of exit pipeline that we are seeing. We have a whole bunch of companies that are IPO bound, and with that put together, we see that the pipeline could well be over north of $3 billion over the course of next 3 years. So it's a very healthy situation. Capital markets are active. We're actually deploying capital. We're seeing the Indian businesses scale. So it's coming nicely together. But I just wanted to add one more thing, on the to what Rajiv just mentioned on the Theobroma, sort of what would you do differently and all of that. I think the other interesting thing that we're seeing is just M&A related flow with interests from a lot of people to sort of say, can you try and do consolidation? And I think that's something that we would be open to considering and looking out for as we kind of develop this as a platform investment as a team. So that may be something incrementally that we may want to do over and above what the business has been doing historically.
Right. Sanjay, sorry, let me get this right. You're open to doing more consolidation within the Theobroma brand. Is that what you are saying? Adding more?
Yeah. Got it. No. Yes, I think that's what Sanjay was saying. Within the Western dessert sector.
Okay, fair. So that's what you seem to be headed towards. Rajiv, what's competition in the space like where Theobroma is concerned? How do you view risk, regional competition? How should one look at it? And what was unique which really attracted you to Theobroma and not some other players? There are plenty of players in the space.
Got it. No, so you're right. Broadly, Western dessert as a space is as competitive, right? Like any other category. More so in the last 3 to 4 years, we have seen A lot of bakery chains, right? 1 to 5 to even 10 store outfits have come about, right? In large metros and even in smaller cities. What was encouraging to see that despite the advent of intense competition, right, from a lot of these players, which are a combination of regional and even broader city specific chains, one, the business was continuously growing at a good pace. In addition to growth, they were not losing the focus away from profitability, which is another key metric that we like to look at from a business perspective. The other thing which is very encouraging to see when you look back, right, the entire journey of the business in the last 2 decades of existence, they have been probably very capital efficient as well, both in terms of how they've used the capital to not only grow the business, but also make sure the backbone, which is the entire central kitchen network that they've created across India, that is another thing that really stands out for them. Because broadly within QSR and even more so right here, it's about daily execution. It's about doing the same thing consistently day in, day out, and not compromising on product quality, making sure the customer is happy to the extent possible, which they have done much better than some of the other businesses that we have seen and we've been tracking. And at least that was also a key variable and a metric for us to look at. From a deal dynamics perspective, see, good thing is most of the transactions that we end up doing, we like to track the businesses at least 1 to 2 to even 3 years before. So in this case, we were doing the same just to see the progress of the business, more from our understanding of the space, but also trying to better appreciate the journey. And in this case, again, there is no primary infusion that is going into the business. Like I said, it's a profitable business, which makes good cash flows. So from that perspective, frankly, we were able to come up with our conviction. And I would imagine that's the key reason for us to get the acquisition done in our favor.
Well, great speaking with both of you, and gives us such a good lens, Shreyansi. Thank you, Sanjay, Rajiv. Gives us such a great lens, Shreyansi, into how they're thinking of consumer in India and why something like a Theobroma, that was essentially very, very key in even from a public markets perspective to understand what the trends look like.
Yeah, absolutely. That's a look into what their secret sauce is like, right? So that's the conversation that we were just talking about. But let's also move on. Tell you what the word coming in from the management of IRB Infra, in fact, is. Before we let you go on this show, in fact, we're timed out on this edition of Markets at 12, but let's also go across and listen in to what the management then had to say, because you do have the company reporting a stable growth in its first quarter. Revenue that is largely driven by higher InvITs. Let's hear out the word coming in from Anil Yadav, who's the Director, Investor Relations of the company. Let me talk about the first quarter results. If you look at the combined toll collections, they were up around 8% is what we are seeing. Just want to understand from you the overall outlook in terms of FY26 guidance and your assessment of the quarter.
Yeah, thank you. Thanks for having me here. With respect to the Q1, as you have rightly highlighted, that we have seen an 8% kind of growth in terms of the toll collection, and that has also led a steady increase in the EBITDA, and profitability for the quarter was up by 45%. And we are about to start Ganga project, which will further add to our toll revenue. Ganga project is expected to start in second half of this financial year. So that will further boost the toll revenue. And further, just to add that we have also reported the July month number. The 8% growth, what we have witnessed in the first quarter, July growth was around 10%. We have already seen uptake in the month of July in terms of the toll collection.
So you maintain this toll collection guidance of 10 to 12% tentatively, which is there. Also just want to understand on the order book, which is there. Does the pipeline remain healthy, considering that, awarding activity has still remained on the muted side?
So I think if you look at the IRB, 80-85% of the value comes from the asset business. We have 80,000 crores worth of asset. So in terms of the overall value, larger part of the value comes from the asset business. Our EPC contributes 10 to 12% kind of overall value. We have 30,000 crores kind of order book, and that largely 90% includes O&M order book, which provides a clarity for 10 to 15 years. And as the award activity will start, we will be participating for the BOT and TOT projects.
So how much of the order book is to be executable in this year? And in short, if you can also just say that how cash flows will improve considering these acquisitions that you've made for these uptick in order book that we are looking at.
Yeah. So I think this year we are expecting execution of close to 4,000 crores on a whole year basis. In terms of the order accretion and the cash flow which will be coming, we are transferring 3 assets from the private InvIT to the public InvIT, and which is expected to, private InvIT is expected to realize around 5,000 crores kind of equity. And with 5,000 crores kind of equity, typically our projects get funded 70-30 debt equity. Considering that this will be the equity portion, we can bid for 15 to 16,000 crores kind of project with this kind of liquidity getting released. We have robust balance sheet as far as the IRB is concerned. We have net debt to equity is close to 0.5:1, which is lowest amongst the industry. And with this transfer of the three BOT asset to the public InvIT, which is expected to increase the order book by close to 3,000 crores. And this is the broad aspects in terms of the transfer of the 3 assets from the private InvIT to the public InvIT.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in?
What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? No.
Hello and welcome to NDTV Profit. My name is Varsha. Well, Glenmark Pharma is in focus. Now this is on the back of Q1 numbers. Just on the key highlights of results, if I were to talk about, their India business grew 3.7%. US quarter-on-quarter growth was driven by injectable and the partner product launches. They also launched, biosimilar of liraglutide under the brand name Lirafit, and they're gonna, launch other GLP-1 products as well. They are anticipating double-digit growth when it comes to Europe from H2 FY26. But to speak more about the numbers, how was the quarter and what's the growth ahead, I'm here joined by Mr. Anurag Mantri, who is the Executive Director and CFO of Glenmark Pharmaceuticals. Well, hello and welcome, Mr. Mantri. Pleasure to have you on NDTV Profit. My first question would be on the US business, where you have seen growth when it comes to quarter on quarter, and you're going big when it comes to respiratory and injectable product launches. What's the outlook there? How many more product is expected to come when it comes to FY26, and outlook on the US business also?
Okay, thank you, Varsha. So, US business, as you have seen, Varsha, that in Q1, the US business delivered a 9% quarter-on-quarter growth. And if you see, that was primarily on our injectable launches, and partners product have done well. And we are seeing a growth coming back in Q1. And we expect that momentum to should continue. This momentum, what we have built in US, should continue in Q2 as well. We also have 3 additional injectable product launches in Q2. And H2, we are also expecting, we are seeing a better traction than what we are hoping to have a respiratory launches to come through, especially in like a generic fluent as well as fluticasone nasal spray. So we expect that US to perform well. I think going onward, what momentum we have built in Q1, I think we should continue and to be in Q2 onwards, and US business should do well over next 3 to 4 years.
Also, Mr. Mantri, when it comes to your India business, there you've seen some pressure. Now this is on the back of the diabetes portfolio, which has not done well, despite launch of Lirafit. But going ahead, what's the outlook there, and when you can see, growth coming back when it comes to India business?
So, Varsha, let me, I think before we go region by region, I think if you see overall, in Q1, we still delivered a very good marginal growth over on a YOY as well as Q1Q basis on our sales line. This is despite a challenging global turmoil and the regional market variation. So, because overall our well-diversified business and focus on branded markets are helping us to navigate the current adverse geopolitical scenario. Coming back to India, if you see, before coming to diabetic, if you see strong side, our cardiac, respi and derma portfolio continues to do very strong. India is a strong market for us, and that demand generation remains strong for us. We have 2 new innovative oncology launches, Tevimbra and Burkinza in India. And then consumer care business is doing well. Even on diabetes, we are trying to revamp the portfolio. Launch of Lirafit is helping to augment our diabetic portfolio, and we have already resolved the supplies issues and targeting the first wave of GLP launches and diabetes to recover and remain focused for India business going forward. So we are seeing a very strong traction in India market with our core cardiac, respi, derma already doing well. Innovative oncology launches, consumer care business growing strong and targeting a good 20% CAGR growth. The brands like Candid, which has a 60% market share, La Shield, Episoft, Square, continue to grow strong. So, and as you see, we have also discontinued our tail end brand. So all these, we expect the India growth continue to be a very strong for us going forward.
Understood. Also, in terms of FY26, you had guided a revenue growth of around 10 to 12% with EBITDA margin of 19 to 20%. Are you on track when it comes to, this guidance?
Yes, surely. So, and revenue growth we are expecting 10 to 12%, and we are on track for that. And because of the US market, as we said that we have already delivered a 9% growth, it's coming back on track, and we see a strong growth in US market. India also, I summarized to you that because of the new some of the new launches, our key therapeutic area doing well, and even revamping our diabetic portfolio. So India will also be strong. EU business, if you see, has grown more than 25% CAGR over last 3 years. And particularly the branded business growth has been very strong in EU. So we are confident of maintaining the similar double-digit growth momentum on Q2 onwards in EU. So that also we have two new launches, the DMF and Rivaroxaban in European market. And then we also have two additional recipe approvals in the market. Similarly, emerging market business has also grown close to 10% CAGR in last 3 years. And all our regions have done well in derma and recipe especially. And if you see across that, we have a good start in EM across all market in Q1, except LATAM, which is more of seasonal one-off, and we expect that to come back on track. So putting together, if we see overall, we expect that we are on track on our guidance, and we are confident of delivering our guidance of 10 to 12% of the sales growth. Margin side, we have said that 23% onwards, stabilized margin on Q3 onwards. So we are on track with all these combination across all the markets.
My last question, before I let you go, the profit impact that you have seen in this quarter was led by, exceptional item. Can this be seen in Q2 also?
See, this is with related to our ongoing litigation, which we have provided, and we expect that to maintain a double digit of PAT rate.
So that was the management of Glenmark. And what's interesting is the stock is now down 3%, and this was clearly on the back of the numbers which have missed street estimates, and that exceptional item that has impacted profitability this time around as well. And the read, Alex, was overall that in terms of pharma as well, it's not out of the woods, taking into consideration the tariff impact, if it comes in, when, what, nothing known. But for a company like Glenmark, the overall aspiration was that with the blockbuster drugs that they are launching, it is going to be a company to be watched out for. So an interesting one on that one. But let's quickly talk about the Mumbai rains. I think all of us have struggled over the weekend and today as well, because incessant rainfall has been actually taking over Mumbai as well. In fact, my colleague Anuj Raite is on the ground to provide us with the latest updates from city streets. Anuj, if you could take us through the situation right now. I'm sure you're doing pretty much, oh, that's all. He's absolutely submerged halfway in water. Anuj, can you hear us?
Yes, I can hear you. Am I audible?
Carry on.
We're going to have to actually try and fix your audio, Anuj. In the meanwhile, we have some visuals from where Anuj is standing.
Yeah, he's in Dadar somewhere,
in Mumbai, and it's very clear that the streets are completely inundated. By the way, what we've heard is that you have a lot of schools that have been shut. In fact, the administration has called for a shutting off the schools as things stand right now. But let's try and see if Anuj can hear us and if we can hear him. Anuj, very clearly inundation where you are at, and I think that a lot of low-lying areas in Mumbai, as is normally the case, would also be facing similar situations.
I'm standing here at one of the most rural-like areas
No, I think we're going to have to try and get back, because viewers, you'll have to appreciate the fact that he is standing in the middle of a completely, those are the live visuals. That's exactly where he's standing, and that's Dadar for you.
And then I think the other thing is, one, there is a red alert. Schools are closed in Mumbai on the back of this heavy rains. You are seeing waterlogging, which is already on your screens right now. And it's a triple digit in terms of the centimeters or millimeters, the way we call it. So overall, it's going to be interesting to see how this pans out, because it's coming pretty much at the last leg of the rainy season, right, Alex? the anticipation was of a very good monsoon initially. The monsoon came in early, spoiled the party for consumer durable companies as well, because it's your AC sales which actually was suffering. Now you're talking about an extended monsoon. So again, the suffering will continue in the coming quarter as well.
Yeah, that's one way to look at it, and that is the case. But I think if you were to search for a silver lining here in Mumbai, you have a reservoir that is completely full, and so you're not going to have any issues with electricity and with water down the line. So at least that is something to take heart from. But among everything else that is taking place, this is maybe just a footnote, Hiral, because the markets are cheering. Of course, we're off the high point of the day, and let's take a look at the benchmark Nifty 50. It is currently trading higher by about 1% or so at 24,888. Very briefly breached that 25,000 mark on the upside. But I just want to very, very quickly, Anuj, we're running out of time. Anuj is back with us, and I understand that his audio is okay. Anuj, you have a couple of minutes to take us through what is happening on the ground, and hopefully you're staying safe.
Well, yes, I'm safe. I'm here at the Hindumata Chowk here in Dadar West, and let me just show you what it looks like. As I said earlier, this is one of the most lower lying areas which is in a social shape, and there are many such places across Mumbai city, and the tale here at Hindumata Chowk is same year after year is what the residents tell us. What you can also see on your screen is that it's very difficult to make a distinction between which is the road, which is the footpath, because both of it seem to have become a river as of now. Also, you can see, some warnings being placed at regular intervals. The people who are there in the red and yellow raincoats, those are the BMC employees and the Mumbai police employees who are standing there to make sure that people do not go near the manholes which are open, and that is another issue. Well, on one hand, the BMC employees are trying their best to clean up the manholes which have not been maintained for the longest possible time, as a result of which they fail to drain the water as in when it started getting accumulated. On the other hand, they also have to make sure that there are still a lot of people who are outside, although BMC has made it very clear that people should only step outside their houses if it is very necessary. But because people either have their jobs or because schools were only told to be non-operational after the afternoon hours, that is why people have no other option but to step outside of their houses for their job or to collect their kids. And that is why the responsibility on the BMC employees has become double-fold. One is to clean the manholes, and secondly to make sure that students and people who are moving from one place to the other do it safely. The road that you see on your screen right now is one of the more important roads because this is a very common bus route, right? There are many buses which take this route to either go to Dadar station or Dadar TT station. But as you can see that this road has been completely shut down for transport. Only one and a half hours back, this road was completely operational for water, because back then the manholes were able to drain the water successfully. But given the continuous nature of the rainfall and the inability of the manholes and the drainage machines that have been put in place by BMC here, that is the reason why the level of water is increasing each passing hour. And the people have been told here to take very serious caution while moving outside their houses.
Absolutely, everyone will have to keep caution over here. Thank you so much, Anuj, for getting us the ground report. We will keep coming back to you at regular intervals to see what is the situation on ground as well, because a couple of our colleagues are in Bandra as well reporting on the same, with the kind of waterlogging, with the way the rains are panning out. But that's with an update in terms of Mumbai rains. But let's quickly head across to my colleague Mahima, who's taking us through all the stocks that you should have on your radar at this hour on the back of earnings. Mahima, over to you.
Right, so Hiral, I'll start with Vodafone Idea first. Overall, average revenue per user sequentially was higher, driven by one more day, additional day during this quarter. And the company reported loss for around 30 consecutive quarters now, and the cumulative losses over 2.1 lakh crore. The average revenue per user stood at 165 versus 164 earlier, and total subscriber base at 19.77 crore versus that of 19.82 crores. In terms of revenue, largely flat, EBITDA down by about 1% and margins at 41.8%. The next one is Tips. Strong numbers, highest ever revenue seen, reported profit for 4 consecutive quarters now, and strong operational performance as well. In terms of Signpost, again top line led growth largely here. Other expenses have come down by 17%, revenues up 37%, EBITDA up 35%, EBITDA margins at 23%, a slight downtick from 23.2%, and net profit up around 35.7%. Lastly, Zaggle. In focus, healthy growth across revenue streams, company unlocking new levels of scale and efficiency with AI plus mobileware delivered a stellar performance, and constantly company is scanning landscape for adjacencies to see the right fit in terms of M&A as well. In terms of numbers, net profit down 16%. Margins at 9.2% versus that of 8.7%, and EBITDA down around 15%. But overall guidance maintained, top line growth at in the range of 35 to 40 odd percent, and EBITDA margins protected between 10 to 11%. So these are the 4 key earnings to keep on your radar, most certainly.
Okay. All right. The stock is up and about, probably one of the big gainers today in a market where you have quite a few big gainers, and a lot of them on account of the GST update, but on earnings as well, and a couple of order wins pushing stocks higher. But let's talk about Zaggle in a little bit more detail while we're waiting for the management to log in. We're going to be speaking to them in just a minute or two. In fact, we do have Mr. Avinash Godkini, who is the Managing Director and Chief Executive Officer, joining in. Avinash, thanks so much for taking the time, and pleasure speaking with you. The street seems to have given a thumbs up to your earnings in the quarter gone by. Tell me what worked for you. 31% uptick in top line, and that's one of the positive aspects, but you've also seen an expansion in margins, uptick of 16% in PAT. What's worked?
Yeah, I think basically we were very clear about our strategy. Our thought process was that we had sustained growth levers kicking in for us. And in our business with seasonality, what is the right way to look at our business is a year-on-year numbers. So if you look at year-on-year, the growth has been very, very strong. 31-32% on the growth side, and PAT side it's much more healthier. So that is obviously something that the market should have taken notice. The other thing is that we take our guidance very seriously. We are building a very conscious strategy. We call it a string of pearls that we are stitching together both organically and inorganically, where we are acquiring a lot of very interesting adjacencies at very reasonable valuations. So if your entry point in these companies is attractive valuation compared to the private equity and venture capital valuations, the opportunity to create outside outcomes both for the shareholders as well as for all stakeholders is very high. And that's something that we are seeing now kick in with some of the performances that we are seeing in our investments in companies like 86400, which is the brand name, and the company is Mobileware.
Okay. Avinash, good afternoon. Hiral this side. So with the kind of performance that you've given out right now and the growth outlook, does everything stay on track? And if so, what is the strategy to achieve that revenue target of 2,800 crores by FY27 and a margin number of around 15 to 16%, because we're nearly talking of approximately doubling the margins?
See, with regards to margins, we've always been consistent, and we've said, hey, look, in the next 4 to 5 years, we'll go to about 15%, give or take, right? So, and this year, our guidance is about 10 to 11% in terms of EBITDA, adjusted EBITDA margins, and top line, we've given a guidance on organic growth of about 35 to 40%. We are absolutely on track for these numbers. And in fact, we've attempted to up the guidance a little on the growth, but we resisted. We'd like to see how numbers pan out for Q2. And then, either revise the guidance upwards or, hold it as is. So we are on track for our numbers, and it's basically a very well thought out strategy in our view. We've invested a lot of time in thinking of how we want to stitch the business together. And spend management has huge operating leverage. We have the market leadership, and those are, big benefits in tech businesses, AI-led businesses.
I'm not going to push you to give me a revised guidance on top line, but because you're considering it, I'm curious, and I want to ask you, if you were to say, or if somebody were to say that everything is going to go according to plan, what is the kind of range that you can expect? So from that perspective, you're saying that 1,900 crore in this year would be the bottom of the range, and you could move higher from that. What is the upside potential at this juncture?
too early for me to say. A good part of the year is still out there. And in our business, because as I mentioned, the Q3, Q4 are much stronger than Q1, Q2. About 55 to 60% of our revenues historically have come in from the last 2 quarters, the second half. So while I'm tempted to give you some number, I don't want to, make that mistake.
Okay. So Avinash, let's understand the recent acquisitions that you've done, from Rio Money to Dice Enterprises and many others. In terms of revenue contribution, costs and profitability in the coming quarters, how will all of this actually add up and how much will they contribute?
Great question, Hiral. See, in terms of costs, we gave a guidance that, as we integrate, straight off the bat, we can see about 25 crores of saving kicking in, right? And as we go deeper into synergies and, trying to build efficiencies, we hope that that's going to go up in the coming years. With regards to acquisitions like Rio Money, we are extremely bullish. That's a very strategic call that we've taken, because it's riding on a very secular trend of UPI credit. India is a credit-starved country, so credit on UPI, credit cards on UPI is a great play. We have a captive base of 3.4 million users, give or take. So we would be able to then, cross-sell this product to that base. So our CAC goes down. Our thesis has always been, how do we keep our CAC low? And in this sort of a business, if you're able to do that, the trends for spends are so strong that, you will definitely be able to ride on that wave. So those are the kind of plays that we have looked at. Similarly with Dice, tremendous capability on agentic AI. They've built a great, platform there, and we are very bullish about their capabilities that they've built on the AI side, and to be able to take global as well in other markets.
Avinash, I'm just wondering, correct me if I'm wrong, you ended FY25 with a cash balance of about 372 odd crore rupees. I'm just wondering, this top line target that you have and heading into FY27, will that primarily be with the businesses that you currently have, or do you intend to go out and acquire more?
And acquire more, we did a QIP of about 593 crores. So the money in the bank is much higher, to be honest, because we've hardly deployed any of that yet. So we are sitting with a much larger cash balance than what you mentioned. And we are looking at one or two large acquisitions, larger than the ones that we've announced so far. And then we will look to consolidate on these and, build on the momentum that we already have.
Smart moves, interesting moves that we will be watching out for, Abhishek. Thank you so much for speaking to us. We'll look forward to speak to you in the next quarter as well, because 10% up move was, a 10% up move, Avinash, that we're seeing in terms of as Zaggle goes. But interesting moves on these stocks. But apart from this, let's just mention a few of them. Anushi was supposed to do a link, but we're running out of time. Steel companies are in focus as well. And this is, Alex, on the back of the DGTR recommendation of a safeguard duty. Initially, it was 12%. They're saying that by year 3, it will come down to around 11%. So more than any of your steel players, it's your pipe makers which are actually buzzing in trade, from an Astral to a Supreme, Prince Pipes. All the Prince, I think,
is more PVC than
so
steel,
all your steel pipe makers are buzzing in trade. So that's an interesting move that you're seeing. So that's one, sector that you should be watching out for. KC International, we did speak to the management. I think you spoke to the management as well. 1,400 crore order win and a smart uptick, days highest levels on that counter as well.
They're guiding for 15% top line growth.
Top line, yeah. And a Fusion Finance, they've actually appointed a former HDFC executive as an independent director, on the back of which, if you see in terms of the stock spike, it did spike, cooled off right now. And apart from that, if you talk about the earnings as well, their net loss has actually widened. And their impairment has, actually gone down by around 48%. So interesting moves in today's session.
Yeah, absolutely. And we're holding out with gains of 1.2% at the benchmark.
For how long are we able to hold this?
Here's
Is
the
key, because 25,000 is the key right
Here's
now.
the question, which we'll talk about on the other side. By the way, on the other side, we've got an interesting conversation lined up for you. To stay tuned for that. And from Hiral and myself and the team that put this show together, thank you so much for watching. This is NDTV Profit.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
That's huge. That is a biggie. It's on
गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Bhavesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell.
Oh, wow.
Yeah.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company?
This promises to be India's answer to reducing dependence on imported lithium-ion cells. These are batteries that power electric vehicles. It's bold, it's ambitious, and it has its fair share of naysayers who question whether Ola can pull it off. In fact, We have the man himself, Bhavesh. Thank you so much for joining
Tamanna,
us.
thank you so much for coming here. It's not that far from Bangalore.
Only 4 hours.
Only-
But you know, this is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're
Yeah.
going to be on the factory floor.
Absolutely, yeah.
And of course, a lot of questions on what this plans to do.
हर नई चीज़ पे सवाल होने भी चाहिए. मार्केट के जो सवाल हैं, they are all the right questions. Is this the right use of capital? Is this the right thing for India? But I'm going to start with positioning this in the macro context in which we find ourselves, Tamanna. Tariffs, rare earths नहीं मिलेंगे हमें. यहाँ से oil मत खरीदो, वहाँ से मत खरीदो. We have to build ourselves. Our Prime Minister today has painted a technology vision for Viksit Bharat 2047. And at the heart of India's future is going to be the next energy technology. And what we are building here is the next energy platform of the future. It's not just for making the EV transition, it is for making the whole energy transition. These cells, इतनी बड़ी factory में छोटे से cell निकलते हैं. But you know, you can imagine then you need such a big process to really make those really high-tech cells. All the technology is built by us in-house, and we'll go through and I'll show you, we'll wear the suits, I'll show you how the process is so automated, so quality controlled, dust-proof rooms. And these cells go into EVs, they go into drones, they go into robots, they go into grid energy storage जो solar के साथ लगती हैं. So this is the energy platform of the future, and India needs to have its own, and we are here today standing at India's first gigafactory.
Fantastic. Let's go inside and take a look.
So you can see here, this is the full scale model of this whole site. And this vision that you see here is going to be 100 gigawatt hour. Just to contextualize that, today the world produces about 1500 gigawatt hour. Almost 80-90% of that is in China. So this site alone eventually will be 100 gigawatt hour.
What are we starting with right now?
So what we are starting with is this first block you see here.
No, in terms of 100 gigawatt,
5.
We're starting with 5.
What you see today is 5, and the same building will scale up to 20, and then the 20 will scale up to 100.
Okay.
Yeah.
Okay. So how long has it taken to build the entire facility?
The facility took about a year, and then we put all the machines in. So for the last 1 year or 1.5 years, we've actually been fine-tuning our process. And the process goes through a lot of steps, and it's highly complex each step. And छोटा cell बनाने के लिए इतने सारे step लगते हैं.
Yeah, of course. Of course. You know, the question is that why has India not been able to, when you started very
Yes.
well, because you talked about the importance of this
Yes.
in terms of tariffs, in terms of Atmanirbharta. The question is, why have we not been able to do it hence, thus far? What really is the problem?
See, for India to make a big leap into this, we made a big leap into renewable generation.
Yes.
With solar, with wind, etc.
Yes.
The next phase of renewable is equally, if not more important, which is storage. And storage is more technology intensive, R&D intensive. And in general in India, we've taken the leap on manufacturing, but we're still early in the leap on R&D.
Agreed.
So that's why what you see here, a lot of it is, and you can see here the lines are producing, the cells are coming out. Right, so these are the finished cells, and when I'll take you inside, so we'll see actually किस तरह से वो material से cell बनता है इस पूरे line में. So it's very R&D intensive. All the technology we had to create in-house. So it took us also 4 or 5 years.
You know, this is interesting you say that, because this is being seen as a good thing and as a bad thing. The negative in it, I'll talk about first, is the question that is coming, that since you're not doing this with any large partner that is established globally,
Yes.
will you be able to manage the efficiencies that others do have in this space?
Yes. Well, we've been at it for 5 years now. When Ola Electric started 5 years ago, we started with our cell R&D. So we've also improved our processes, improved our engineering to a level where our efficiencies are at the same level on global benchmarks. Our scale is lower than global benchmarks, but our technology and our process efficiencies are at the same level. So as our scale improves, our cost of manufacturing will also be equal to global benchmarks. And also for us, this is not a 1 year, 2 year vision. It's a long-term vision. As we keep increasing scale, India is going to be a large consumer of these cells.
Yeah.
We ourselves, as the leading EV company, but also across EV energy storage, बहुत cell लगने वाले हैं. So we will need the whole capacity, and that will provide us the impetus for scale.
here's where all the magic happens, and of course there are various segments of it. So the idea of a modern day factory is few people and a lot of machines. And I think one interesting thing over here is that it's led to a large part by women running the shop floor.
Almost 99% it's women. So I would say it's all women factory. Even our automotive factory is an all-women factory.
That was a conscious decision?
Yes, very conscious decision, because in India, one of the reasons our workforce has lagged behind is because women participation is low. And it's not because the women can't do it. It's because there's a little bit of mindset in the industrial communities that are women good enough for the industrial work? And our factory has been, automotive factory has been working so smoothly for 4 years now. So we've scaled that up into the Gigafactory, and the women are doing such good technical work. And if I can say this on camera, Tamanna, women are better than men at this work.
You can say it on camera, off camera. I think it's true.
They're more disciplined. They don't take random breaks, and they're more dexterous with their hands. The women are better hires than men. I hope I don't get into trouble for this.
No, I don't think you will. Okay, so now of course we have to wear protective gear, right? When we're getting in.
Because I'll tell you why we have to wear protective gear. This process of making the cell is extremely sensitive to moisture, to dust, and to any environmental impurities. So we have to cover our skins because our skins release moisture.
Okay.
So sweat, right? So we have to cover ourselves in these suits so that the ambient temperature inside remains at a very controlled level. Cell manufacturing is second only to semiconductor in terms of complexity. Semiconductor, you will see similar suits and similar clean rooms. So just like that for cell manufacturing.
Okay, let's go. Okay, so tell me what we are looking at right now, Bhavesh. What is this section that we are going to?
So the whole Gigafactory, the cell manufacturing process is extremely clean. Humidity control, dust control, other impurity controls, very high degree because the cell is at a micron level.
Which is why we've had to wear all of this gear.
Sar ke upar, pair ke upar, sab jagah we have to wear all this because we can't let moisture from our skin go into it. Now we are entering into the assembly process.
Okay.
Yeah, so we'll enter into this cleaning room.
Oh.
Yeah.
And we have to wait here?
We'll have to wait here. Wind will blow. So this is for whatever, if we have some impurities, they'll go onto the sticky carpet.
Wow. This is quite an experience. Okay,
so this is what we call this is where the magic happens. This is the assembly process.
Okay.
So there is another much more, a very more tightly controlled process behind this, which is called the electrode process, where we get the powder from outside, put it into a mixer, and out comes a roll, which roll we see over there. So let me show it to you.
Okay.
Yeah, so what this process gets as an input is these rolls. So this is the anode, and this is the cathode.
Okay.
Right, so
this is safe to touch?
Yeah, you can touch while you have the gloves on. Yeah.
Okay.
Yeah. So ये anode खराब हो जाएगा. We'll no, it's okay. Don't worry. Minor thing. But so these are heavy. So these are wound very tightly. This thing you see is the material.
Yeah.
Anode, cathode, which goes into these big machines over here, fully automated.
Right.
And you can see we put the anode roll, put the cathode roll, and then it winds. It's called a winder. It winds it into this jelly roll.
Okay.
So it's called a jelly because it's supposed to be soft like a jelly, but it's not because you have to wind it very tight.
Obviously.
But it looks like a jelly.
So this is this actually my thumbprint actually went in.
Yeah.
Because it is.
Yeah.
It's got that kind.
So what will happen downstream is all these things will get actually compressed, firmed up. So you'll press it like this to firm it up.
Okay.
Yeah.
So this is the entire Gigafactory. If you want to understand what comes out of it, it is this size.
It's this size, which is the cell. This is still not the cell. It'll go into a container which will then have electrolyte inside it.
Okay.
Yeah. So this is the output of this step.
Okay.
So you take this inside, two of these, and you output this.
Okay.
Yeah.
Got it. So Bhavesh, let's talk a bit about why this Gigafactory is such a big deal and why there is in terms of your financial goals, because your Q1 was blockbuster, right?
Yes.
Huge increase in gross margins.
Yes.
Your view and bills of materials came down, etc. The vertical integration is what the state seems to be very excited about.
Yes.
How does getting this Gigafactory up and about actually play into that, and when do we see the magic of your own batteries in your two-wheelers?
So the heart of a vehicle is the cell, EV especially is the cell. Just like in the ICE era, the heart of the vehicle was the engine.
Yeah.
And the biggest cost driver, the biggest performance driver, everything is the cell. So if I hold that and show you, so about 40 such cells this size go into our scooter.
Okay.
Yeah, so you can imagine the amount of material that goes in. So the biggest anchor of our vertical integration strategy is the cell. Already, like you said, our Q1 results had a lot of gross margin improvement with a lot other vertical integration. For example, the motor, the electronics, the software. And now the cell is the next phase of that vertical integration. When our cell comes in, that gross margin will further go up. So, and that cell coming in starts this quarter. So one of the reasons I wanted you to come here and for you to see is that the cell is ready. And the cell is going into our products. And I want you to see this. So you see, it's fairly complex process, fully automated. The girls are only monitoring the screens.
Yeah, this is amazing. This is amazing because practically it goes through.
So by the time it comes here, it already flattens the surface.
Yeah.
And that machine is separating the cells into different grades. Top grade, one level lower. So the one level lower will get redone. And if I show you what the girl does, so there's no manual intervention. The girl operates the computer.
Okay.
So it's a very high quality manufacturing job that gets created in a factory like this. So all these kind of, she's monitoring the system. If there is any alert, she will deal with it on the system itself.
Okay.
Yeah.
So coming back to this, the Gigafactory, this is of course, the exciting thing about it is this is part of the PLI scheme.
Yes.
And in second quarter, the PLI scheme incentives are also expected to kick in, and that also helps you, of course, in terms of EBITDA, etc. The one concern was that have you stuck to the timeline to be eligible for those PLI incentives?
Yeah. No, that's a fair question. We have also decided that we will not expand beyond 5 gigawatt hour right now.
Okay.
For the PLI, we had to grow till 20.
Okay.
So, but we're the only one in that scheme who has put up a factory and is producing commercial cells.
Yeah.
So we are engaging with the government and telling them that we might need a little bit extra time.
Okay.
And the government is fairly empathetic because of the complexity that goes with this kind of a manufacturing setup. The fact that it's the first in India. So let's see, but we are very hopeful that the government appreciates our point of view on this. Yeah.
Okay, so to be fair, the gross margin expansion has happened without the PLI incentive coming in.
Absolutely.
Without the possibility of the PLI incentive being delayed, do you still become EBITDA positive on your auto segment?
Q2, that's what I've told the street in Q1 results.
Yeah.
And we are on that path.
Yeah?
Yes.
Okay. What is demand looking like? I know we're selling a Gigafactory, but you sell bikes, so have this vantage point of seeing what demand is looking like.
Yes.
And there's an unclear story there. One side of the speech, some companies say consumption is picking up, others say they're not.
Yeah.
What is that looking like for you?
See, I think the EV story, penetration story, where it is still very early. So there's a lot of headroom to grow the EV penetration story.
Yeah.
We have a scooter portfolio where we have a very strong position. Like I was mentioning, we have sold almost 1 million scooters. The next player has only sold less than 6 lakh vehicles. So we have a very large scooter franchise in EVs.
Yeah.
Scooter penetration is now almost 20% in EVs. The next phase is motorbikes, and our motorbike story is picking up. We are being gradual. We started from South India, launched about 200 stores with our bikes. This month and next month, we will scale it up to all our stores. So the Roadster X and X Plus consumers have given us 2 thumbs up. So it's looking very exciting, and you will start seeing very good numbers as we ladder up into festive.
Okay. So, you know, the festive push, apart from the great numbers coming in, what do you think your market share is going to look like? Because your market, Mark, you were up here.
Yes.
You were the guys who dominated the market.
Yes.
So 50% plus.
Yes.
Then all the big boys woke up and, "Arey, EV to humko bhi bana hai."
So
Then they've come in and your market share now has improved back at
now it's rising again. 20% is where it is. Yeah, right now.
Where do you see it going?
See, you mentioned the trajectory well. We were about 35 to 40%, before our IPO 1 year ago.
Yeah.
And since then, other incumbents have come in with more scale and more products, and our market share has gone down to the high teens, and now it's inching back up. What I see is, what work we did over the last 2 years, other OEMs are doing now, which is build some products, scale up distribution, get some consumer mind share. But we've gone to the next game already. The next game is actually to make money with EVs. To make money, you need the vertical integration, you need the technology development, you need the product portfolio. So Ola Electric's core strategic pillars, which are 3: vertical integration in manufacturing, our own technology development across the stack, be it cell, software, electronics, and company controlled front-end distribution. These 3 are helping us grow both profitably and inch back market share. So now, as you see over the next few months, and especially as latter into festive, we aim to claw back market share, and we also aim to have a steady state market share of about 25 to 30% in the two-wheeler EV segment.
Do you think that the company has crossed that hump of concerns from customer service perspective? That was something which was a pain point a few months ago. Do you think that has receded? And especially, I think, with the newer models that seems to have receded.
Absolutely, Tamanna. Well, we had a challenge last year where our service network was not as big. Our sales network had grown, but our service network we hadn't scaled up fast. Yeah. So then we spent time investing into scaling up our service network. And now our service network is almost where we wanted. There's still another quarter or so of effort required. Customer service complaints and all are now fully taken care of. It's roughly where the industry average is. Now with our new products also, the Gen 3 products, the warranty claims, customer complaints are much lower because it's a much better product, more in-house manufacturing, the motor controller, everything manufactured in-house. So as a result, we have a much better product. And the customer adoption of the Gen 3 product is very strong. So we have both our Gen 2, Gen 3 products in the market. Gen 3 now contributes to almost 90+% of our sales.
The last time I spoke to you was before your IPO.
Yes.
And the Bhavesh pre-IPO and the Bhavesh after Q1 of FY20, it's a very different person.
Is it?
From my perspective, I speak to a lot of CEOs. So from my perspective, I can see that you have tried to figure out what the street wants, what investors are saying.
Yeah, no, that's...
Has it been a bit of a journey? Because you've been a passionate creator.
Yeah.
You started this journey as great. I have an idea and I want to create.
Yes.
Now you have to manage a lot of stakeholders.
No, you're very right, Tamanna. It's been a important learning journey in my journey as an entrepreneur. Specifically 2 things that we have learned as an organization and me personally. How we need to do smarter capital allocation and how we need to do operational risk management.
Yeah.
Especially as a public company, the yardstick is higher, and rightly so. There are more people who are invested in your journey. The way we have to manage operational risk also is broader and more deeper. So we're learning those skills, and we're learning them by adding people who have been through this journey before. We're learning them by ourselves, reflecting on some of the learnings. And I do believe today the company is in a much better trajectory of a balanced, profitable growth journey than where we were maybe 1.5 years ago.
What happens in terms of, does this realization and these new responsibilities as someone running a public business company now temper some of those ideas, the maverick part of you?
Not at all. Not at all. I think it adds a layer. It doesn't temper anything, but now it's a more holistic way of managing business, or my approach to entrepreneurship is more holistic. The ambition, सपना तो वही है, but सपने को पूरे करने के लिए जिस तरीके से आगे बढ़ना है वो थोड़ा सा nuance हो गया.
Let's see the battery. I want to see.
Yes, the battery is all the way down that side. So shall we walk back?
Yeah. Okay.
Yeah.
Let's walk back.
So this whole line, like I said, starts from that electrode roll. We make the jelly roll, and there are almost 25-30 processes that happen in this line, fully automated.
Okay.
And each step is manned by a girl. Actually, I shouldn't call it manned, woman by a girl.
Yeah.
Yeah, and that's another important story, Tamanna. The amount of change of life that a girl has when you give her employment in a place like this, a rural community.
Yeah.
Right? The whole family's life changes.
Correct.
And we've seen that goodwill be there for us as we've given all these girls a very respectable job.
No, and employment in manufacturing is huge. I want to come back to something that you said right when we started this interview, when you talked about the world we're living in.
Yes.
Tariffs. Someone says, don't buy oil from here, don't buy oil from there. A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what we're trying to do to solve that problem.
Yes.
And right now, of course, only for Ola, but does this become something that,
we can do broader.
Forward.
Yeah.
So tell us a bit about that.
Yeah. So I think the geostrategic landscape, Tamanna, is increasingly getting more complicated. And I think there's broad consensus that the geostrategic landscape is only going to get more and more complicated over the next few years. As countries now start looking out for themselves, globalization is going through a different phase now. So, and this is also coming at a place where in India's journey, we are looking towards a Viksit Bharat dream, like the Prime Minister has said, where we have to develop ourselves. Now, how do we choose to develop ourselves? It's a very conscious choice we have to make, that we have to invest in technologies of the future so that we can control the narratives of the future, the products of the future, supply chains of the future. Cell and this energy is one of them. Rare earths is another one, and we can see how our neighbors are really using it as leverage against us in a trade negotiation or whatever. The way forward for us is twofold, Tamanna. We have to partner with other countries. It's not as if only one country has the source. We have to partner with other countries, like-minded countries in Southeast Asia, elsewhere, western part of the world. And there are also, we have to leapfrog technologies. So now motors, electric motors today use rare earths. But the whole world has moved to rare earth-free motors now, increasingly.
Okay.
Global OEMs, Western OEMs are increasingly testing rare earth-free motors in their batteries. And Ola Electric is the first Indian company to do this. Our entire two-wheeler lineup will, by next quarter, be rare earth-free. So
does it work the same way? Sorry, very
absolutely the same way.
Because if there is an alternative, then why is everyone getting blackmailed by one country that has all this?
Because it needs some technology development. It's a next generation technology. It's like 3G था, फिर 4G आया, फिर 5G आया. उस sequence में चलती है ना गाड़ी. So rare earth है, then you can you get the same performance from a non-rare earth magnet, then from without a magnet itself, electromagnet के साथ. You know, we've all studied physics in school. Electromagnets are magnets with electricity, just a copper wire with electricity. So increasingly motors can be without any magnet, it can be electromagnets only. So that's a direction of technology. It needs some level of technology development. We have done that because we've invested in technology for the last few years. Indian companies, other companies are behind on that curve, but other global companies are doing that. Many global EVs are actually without rare earth motors now, increasingly. Right? So our products will start coming in without rare earth magnets next quarter. And we do hope the rest of the Indian industry catches up. So that's one way we can kind of de-risk ourselves from the supply chain issue.
Now, if what you're creating here clearly is important for the industry as a whole, not only for Ola. Of course, it has to be vertical integration, margins, etc. Is there a potential to have this available to the rest of the industry? Is there the ability to scale up to that extent required?
Yeah. So this is the output that comes here, Tamanna. You can see this is a cell.
Oh, wow.
Yeah. It's इतनी बड़ी factory में इतनी छोटी सी चीज़ निकलती है.
That's what it is.
As you can imagine, you know, the most complex factories in the world are for the smallest things.
Yeah.
Like the chip and the cell. You know, such a big process. ये suit wood पहन के बनाना पड़ता है. But in the end, it looks so simple. But a lot of complex technology goes in it. And you can see here, if I draw the attention of your crew, this line, you can see the cells are waiting there for this process. They're coming in over the line there. The machine picks them up, puts them in the process, and then.
What is the rate? How many batteries do you have per minute, or what is the sort of rate of production of these?
So this factory can produce 5 gigawatt hour of cells, and I don't know how many cells that means. I've never made that math. Yeah, but a vehicle takes 40 of these cells, so 10 of these cells make 1 kilowatt hour. So 1 gigawatt hour is a million kilowatt hours. That's 10 million, so 50 million a year.
Oh wow!
Yeah, so that's about a lakh or 2 lakhs a day.
Wow!
That's what this factory will totally produce.
Very impressive mental math.
I am a engineering student, so
correct.
I hope those numbers were right, by the way.
We'll check them. Okay, so now we're getting a great idea of scale of this.
Yeah.
Now, my question is, what do you need to scale this up?
Yes.
There is a PLI scheme, but clearly more push will be required to bring this to fruition and to the scale that India needs.
Absolutely. Our scale right now is 5 gigawatt hour. We do aim to scale to 20 gigawatt hour as the Indian market grows. Today, the Indian market cannot digest a 20 gigawatt hour scale yet, but the Indian market is growing. So in the next few years, as we end the decade, I think we will have the potential to invest into the 20 gigawatt hour. And then beyond that, the market potential is huge. So just for automotive and energy storage, I believe India will need about a few hundred gigawatt hour a year capacity in a decade or so. right? So it's a potential for many companies to enter and create a few large gigafactories across the country. Then beyond that, the world is also looking for de-risking its supply chains from China. And China is the largest supplier of these cells today, lithium cells. India can be a very good trusted supply chain source for the rest of the world, be it Southeast Asia, be it Australia, be it the West or Middle East, because you will not be able to build these factories in every country. They require a lot of depth, ecosystem technology. And I think that's where India can become an alternate, a peer to China in terms of scale and technology.
Yeah. So this is it, folks. This mega Zeta factory, you've seen the first look of it exclusively right here on NDTV, and this is what comes out of it at the end of it. It may feel small, but it's definitely mighty. It is something that is hopefully
Cheers to that.
power the future. Cheers to that. Thank you.
Thank you, Tamanna.
Thank you.
Wonderful speaking.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're
Yeah.
going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Bhavesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth-free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell.
Oh, wow.
Yeah.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
welcome to NDTV Profit. You're watching Small Cap Buzzers. I'm your host Anushi Vakharia, and with me as usual is Somit Sarkar. You know, in terms of what's happening with the benchmark indices, it's a day of strong gains and strong momentum. It's what we are looking at. Nifty 50 being up around 1.25% currently, and this is at the back of the GST rationalization in terms of the slab rates that we are looking at playing into effect over here. In fact, if we look at the mid cap and the small cap 250 also mirroring some of these moves that we are seeing in the benchmark indices as well. But what's specifically happening in the small cap space? And to just talk about that, we have Somit standing by to give us a detailed breakdown in stocks in focus in this particular site.
Well, yes, multiple stocks in the small cap space have been buzzing specifically on the back of the potential GST rate cut. To highlight few, firstly, if you look at its Electronic Marts India, Stovecraft and Virtuoso Optoelectronics, which have been gaining in trade on the back of an expected potential cut in the GST rate that could come in for AC, 32-inch, more than 32-inch TV and dishwashers. This rate can be cut from 28 to 18%. For FIEM Industries, Lumax Industries and Talbras Auto, these companies are expected to be one of the indirect beneficiaries of a rate cut that could come in on the auto segment. Now for auto segment, the rate cut is expected to be from around 28% to 18% for two-wheelers specifically, which are less than 250 cc's, and for four-wheelers which are less than 1.2 liter engine. Apart from that, there could be a tractor segment rate cut as well, GST rate cut from 12 to 5%. For other segments, if you look at its SP Apparel and Kitex Garment, which is also buzzing in trade, and largely this is on the back of a GST rate cut that could happen in the apparel space, which is more than 1,000 rupees worth. This rate cut could come down from 12 to 5%, and that's the reason SP Apparels and Kitex Garment is buzzing. When it comes to the cement sector, it's Sri Digvijay Cement, Andhra Cement and Saga Cement which have been buzzing on the back of a potential rate cut from 28 to 18%. Now this could reduce the cement prices anywhere from 30 to 40 rupees per bag, and generally this won't change the demand because demand is generally inelastic when it comes to the cement sector. But this GST price cut could give cement companies the headroom to increase or take price hikes at a later stage, and hence these companies have been buzzing. Apart from that, if you look at Kamath Hotels, that stock has been buzzing in trade because their average room rent is below 7,500, and that is a segment where Street is expecting a GST rate cut to happen from 12 to 5%. For room rents where the per night stay cost is less than 7,500. And lastly, if you look at Parag Milk, in fact the entire dairy space is buzzing, but in small cap it's Parag Milk, and this company could benefit if there's a GST rate cut from 12 to 5% on dairy products. So these are all these specific small cap stocks that have been buzzing in trade on the back of potential expected GST rate cuts.
Thank you for that, Somit. So that's a detailed list in terms of, some of these buzzers that we are looking at. But to talk to us about that, we are joined in by Sameer Dalal from Natwar Lal and Sons Stockbrokers. Sameer, welcome to the show, first of all. So Somit spoke about, variety of sectors in focus on the back of this GST rationalization that we are looking at. Any of these names that you found interesting, say, whether in the consumer durables, consumer electronics, or other sectors that he was talking about?
Yeah, hi. So let's talk about first the GST rate cut and then we'll come to the stock prices, right? So the first thing I want to say about the GST rate cut is that I wish it hadn't been announced before the actual GST cut happened, for the simple reason that what will happen in the short term is anyone who's looking to make certain purchases now may delay their purchases by a month and a half till the rate cut comes through and then make the purchase. So what happens is Q2 for some of these companies may become a washout to a large extent because the sales get pushed back, right? So that I think is one thing which the market is not penning in at the moment, is the fact that some of these consumer products will see a delay, whether it's ACs, fridges, whether it's automobiles, because if I'm getting a cost saving, I might as well wait for a month and take that cost saving, right? So that one slight negative is there. Now, the second point which I want to come to when it comes to GST, GST rate cut, which is there, I'm all for it. I think it's a great move from the government of India because actually what it does is, post-tax paid money, which people have left in their hand, they are paying a lesser amount of tax on it when they consume. So that definitely is a benefit for people, but that not necessarily leads to increased consumption. Let me just give you a point in example that we've had the tax slabs where 12 up to 12 lakhs, there is now no tax. And we were very, very hopeful at the initial stages that this will lead to a great amount of consumption activity picking up. But unfortunately, that hasn't seemed to happen. What seems to have happened is people have increased their savings, because if you see the SIP numbers have gone up, obviously it's not directly proportionate to what the tax cuts are, but obviously some amount of savings have increased and consumption hasn't increased. So a GST cut also need not mean that consumption increases. Today, if I'm going to buy one car, I'm still going to buy one car. I'm not going to buy a second car because the GST has come down. Similar with AC, similar with many other products, right? So it's not necessary. If I'm going to make one holiday, it's not necessary that I make a second holiday. So all of these things need not lead to a consumption growth. What it does definitely do is it allows companies to probably increase a little bit of pricing, and still have a price cut on the eventual product, allowing them to increase some margin. So that profitability will come, but that will only start factoring in from Q3 onwards. So the first negative which I mentioned is the short term looks a little dicey. Second, the long term we think is positive, but that is also given that all the states agree to the cuts, right? It's actually the state and the center that have to come in agreement and then pass the GST amendment. So we have to hope that all of this happens in September and it's just not a lot of talk and then eventually doesn't follow through. So positives are there. But I don't think, I mean, the reaction of the market probably is far more than what the actual benefits that are going to come through in the short term.
Very interesting view out
And
there.
coming to stocks that we discussed, coming to some stocks that you actually asked me, so I think some of these counters will do well going forward, because obviously affordability may increase and a little bit of a push may come through. But valuations across the board are quite high at the moment when it comes to even auto, when it comes to even your FMCG product, I'm not FMCG, your discretionary products, especially when it comes to electronics. So at the moment, I'm not going to be out in a rush to recommend. So one of the counters that your speaker mentioned was EMIL, which sells products across the board. If consumption increases, companies like that obviously stand to benefit, because SSSG comes through, electronic mart that is. And if that comes through and they increase their sales, the operating leverage is quite strong in that business. So that could do well. We continue to remain very positive on QSR, consumer discretionaries like shoes, like clothing, so Trent, all of these. So we are hopeful that SSSG picks up, but I think that might be now a quarter down the road. So we need to see exactly what comes out and how it plays out. And I think market's probably running too far ahead of what should actually happen.
Right, thanks for that, Samir. So that's in terms of, how we are looking at the overall basket of securities in this particular focus. But, another management that is in focus is Somani Ceramics, but this is on the back of the first quarter results that we are looking at. In fact, if you look at the revenue growth, that was up around 4.5%. Margin stood at 7.9% as compared to 8.5%, while if you look at the operational highlight, it saw about a 3% of a growth in terms of where its tile volumes are concerned. But to talk to us more about how the results have fared out and overall about the industry as well, Abhishek Somani, MD and CEO of Somani Ceramics, joins us. So firstly, welcome to the show, Mr. Somani. Let me start off by asking you about the first quarter results that we are looking at. If you look at the revenue picture, you do see a high single digit of a growth going forward. Along with this, you also expect 100 to 150 basis point of an improvement. Now, if you look at the first quarter in particular, we don't see this playing out. Of course, there are challenges in terms of where the industry is also concerned, but want to take your overall assessment of the quarter.
Yeah, so last year, first quarter versus this year, fourth quarter, there's a little bit of an aberration. Our Nepal sales were not counted because, there's a traded volume which we're doing in Nepal from Nepal manufacturing from local players there. So you add about 1.3% to our growth to do an apple-to-apple comparison. So our growth is 4.5 plus 1.3, so about around 5.5%. That is one. Other than that, I think the EBITDA is slightly down because we have lowered capacity utilization in this quarter, which should pick up in the next 3 quarters. And capacity utilization really makes a lot of difference on our EBITDA, backed by also value-added sales. So both of them coming across strongly over over Q2 and also H2, we should be on track for a high single digit. And if that happens, automatically EBITDA climbs by 1.5% at least.
Right.
So quite hopeful. Sanitary ware and bathware has done well though. Even that we are hoping that the capacity utilization. There was a plant shutdown in first quarter because of maintenance, a major maintenance which was taken place. That is up and running at 100% capacity now. So that's already happened on the sanitary ware space.
Right, sir. If you could give us some understanding on how has been the demand trends when it comes to the domestic and the export market currently.
We don't export very much, so wrong person to ask, but what I hear is exports kind of flat. It's just slightly down in the first quarter from the last year, same quarter. As far as domestic demand is concerned, it is flattish. It is not moved up. The good news is that it has not gone down further. There is a little bit of pressure from a lot of the manufacturers in the unorganized sector, which are not being able to export and have increased their tax evasion practices and therefore dumping into the market. So that is temporarily affecting volumes, but it's not affecting pricing.
Okay, just in terms of pricing also, I want to understand what's the kind of outlook that we are building in here, because if you look at overall pricing, that has remained flat. So just want to understand if you are planning to take price hikes going forward, or what's the outlook here?
We did take a slight price hike in July. That's been retained. So we're hoping that this plays out with this price hike. I don't see any reason to take another price hike. Of course, we are pushing more towards the value-added segment. So this small price hike has helped us.
Right, sir. The street seems to be quite worried when it comes to the increase in working capital and net debt. Any outlook on that front can you give? Is it just a one-quarter aberration and it would improve in the coming part of this financial year? Something on that front?
In fact, the net debt has improved. Our balance sheet is completely the same as what it was. In fact, our receivable cycle has gone down by a day if you compare to the last year, same quarter. We do not have any debt on the standalone basis. On the consolidated days basis, also our debt has come down by 40-50 crores. As far as working capital is concerned, we do not use any of our lines for working capital. So extremely healthy balance sheet. This particular debt which has gone up a little bit is on account of the extra 7-8 days of stock. Like I said, capacity utilization is low, sales have been low. So the 7-8 days of stock which has gone up, but otherwise absolutely clean balance sheet. There is nothing to worry about.
Right, sir. One more question on the gas cost, sir. I believe in the first quarter was largely flat. But what I'm hearing, at least in the Morbi region, we are seeing price cuts being taken of both propane and for the gas that is being supplied by Gujarat Gas. So can we see a potential margin uptick because of this lower gas cost in the second quarter and in the second half as well?
No. So in Morbi, we were running on propane. Most of our plants were already running on propane. And propane, there's been no further cut. What they've done is GSPC has leveled out their pricing with propane pricing, but it doesn't affect us because we were already on propane, which was a lower cost. And most of Morbi was for that matter. So to that extent, GSPC now with the same cost of gas as propane, again would have probably more takers for their natural gas.
Samani, just want to understand the overall impact in terms of, this incident which has occurred in one of your Haryana plants over here, the gas leakage plant, overall 25% of your tiles volumes comes from that plant. So in the upcoming quarters, do we see an impact in terms of loss of production? What's the kind of situation that you're reading into?
It only happened last day before yesterday. I think Bhavana is where this happened, where near the Bhavana gas plant, the Bhavana power plant. So the whole of the Sonipat, Panipat, Bahadurgarh, the entire region is affected. It has nothing to do with a leak at our Kasar plant. It's actually a leak with the Gales pipeline due to excessive flooding in the Bhavana region, which is a couple of 100 kilometers from us. They haven't gotten back, but as far as we're concerned, we have 7 lines. 2 lines have already been converted to LPG, so that's running on LPG. The rest of the lines, we have more than enough stock. We have 60 days of stock. Like I said earlier in the call, that our working capital has gone up a little bit. The debt has gone up a little bit purely because of the stocking levels. So we have more than enough stock for the next 1 month without any sales lost. GAIL is going to get back to us in a couple of days to see how they can resume the gas, as to when they can resume the gas. So I can't say much about it right now, but I do believe that there's going to be very, very little sales loss. Of course, there will be certain losses as far as manufacturing is concerned, but that's something which we generally put down the plants any which ways for maintenance. This is going to be one of the ones for the next 7 to 10 days. We'll probably put those plants on maintenance. So on sales loss, I don't see any effect as of today. And more information once we get from Gail, we'll put it on the street. So nothing overtly to worry right now.
Thanks for that.
And this is a board from the sky.
Sure. Now, coming to the utilization parts, you earlier said that the utilizations in this particular quarter were comparatively lower. So just for FY26, if we have to put a number in terms of your segments which are there, that's tile, sanitary ware, as well as bath fittings, what's the kind of utilization levels that we should be watching out for? And for sanitary ware also, you did mention that because one of the major kilns was shut, there was some loss in terms of the volume. So how do you expect to make up for this? Is it going to be in the second half that we'll see more of this recovery coming through?
No, the sanitary ware plants is up and running already in July. So we're running at 100% capacity, and that would continue to run at 100% capacity. Bath fitting also is running at 100% capacity. As far as our manufacturing is concerned, we hope to bring it to last year levels, which is about 80%, 81%. So therefore, capacity utilization from the mid 75s, we should be able to pick it up by 5-6%. We also did a lot of routine capex and a lot of line balancing where we were able to increase certain productions, and therefore you see the utilization further lower as far as number concerned. But having said that, we should be in the early 80s as far as capacity utilization is concerned, minus the Bahadurgarh plant for the next 10-12 days. But otherwise is what we hear. So otherwise we should be in the early 80s as far as capacity utilization is concerned. Demand is coming back slowly.
In terms of capex, what's the plan for this year?
There is no capex. It's going to be routine capex, which we do for plant and machinery. Otherwise, there is no capex. We have more than enough capacity to sell currently.
Okay, fair. Just my last question to you is about this durable JV also. Can you talk to us about this 150 intellectual property?
Yes, please. Very excited for that. It's a JV which we've done. We are in a position where the contract has been drawn that in the next 3 to 4 years we have a full exercise to take control of the entire Durable, which we will decide closer to date. But currently Durable has 150 different patents, IPs with them in the construction chemical business. Various kind of construction chemicals, from admixtures for cement, for roads, etc., and also for waterproofing. Currently, we are attacking the waterproofing segment. We are going to be doing the entire value chain for waterproofing. We will be go to market in Q3. We want to build this whole new line of business, which is construction chemicals. Most of these construction chemicals goes into all the commercial and real estate buildings. Therefore, it is synergistic for us. Lots of our dealers are excited to keep this new material, and also we will keep tapping new channels to keep our waterproofing and our admixture businesses. But currently it's going to be waterproofing. So very excited. It's a small business, but we've had in the past smaller businesses being taken over by certain pipe manufacturers, etc., and which has been built out to a fairly large business. And that's what we are hoping for. And very, very excited for this new vertical to kickstart in H2.
Okay, interesting outlook for the upcoming quarters. Thank you so much, Mr. Somani, for joining and sharing that perspective. But with that, Sameer, let me come to you on this particular stock. What's your opinion on this?
So unfortunately, I don't have coverage on Somani Ceramics, but what I heard the management speak is quite positive. The opportunity we still believe for them in their business verticals are still very strong. The operating leverage can play out once they use their capacity utilizations go up. The new product, unfortunately, what they talked about, I'm not as constructive on in the near term, because there's already two large players who are doing this, Pidilite and Asian Paints, very competitive space. Obviously, growth is an opportunity there, but how they're going to get their foot in the door, how they're going to create their market share, all needs to be seen. But apart from that, for their core businesses, which they are currently running, I think what I heard was quite positive. I don't have coverage on the company.
Yatra is another stock that remains in focus. The stock is up more than 60% in the last 1 week. What has led to this rally and what's the outlook? Let's get in Mahima with more details on the same.
Right, so as you rightly mentioned, the stock has seen a significant amount of run up in the past 1 week and highest level in the past 11 months as well. Plus, the technicals also looking very strong in terms of the overall revenue growth. That's at around 108% in Q1, and that's remained consistent. FY25 also at around 87% and 11% in March 24 versus 92% in March 23. In terms of what's leading to this revenue growth, where fourth consecutive quarter where earnings was a beat, plus last 5 quarters, Yatra has moved from the consumer business to the corporate business, and that is largely aiding the top line as well as the margins and bottom line. They've cut down the consumer business from 55% to 35%, and corporate business has been raised from 45% to 65%. In terms of operational metrics, that are also improving. Gross bookings growth has turned out to be positive after 4 quarters. Gross take rates at group level are stable between that 8.5 to 8.7% mark, and discounts and A&P spends as a percentage of gross bookings are also lowest in the past 6 odd quarters. In terms of paths to profitability, well, they were incurring loss in March 24 of around 1 crore, which has turned profitable 35 crores in March 25, and Q1 FY26 itself, they did a profit of around 23 odd crores. In terms of margins, they are also improving and coming back to the normative range of that 10 to 11% mark. In terms of what's improving margin, again the same thing. Consumer business was less margin accretive, but the corporate business is more margin accretive here. In terms of the long-term borrowing, even that is reduced from 24 odd crores in 2023 to around 2 crores in 2025. Cash flow from operations, however, still continues to be negative. In March 2025, it's around minus 89 crores. There's also declining ROC, which is kind of concerning, which is at around 5% in FY25, which was earlier 14% in FY23. FIs also are moving out of the stock. As of June 25, it's at around 2.8%, which was earlier at around 9.4 odd percent in September 2023. Lastly, in terms of FY26 outlook, they expect 20% revenue growth and 30% EBITDA growth is something that the management has guided for. In terms of valuations, all of these companies are highly valued. Yatra trading around 46 times 12 months trailing, and brokerages, well, a lot of them have maintained buy with a target price anywhere ranging between 130 to 175 for the counter. So this is the overall view as to what's happening with Yatra.
Right. Samir, coming to you on this counter, how are you looking at Yatra after this stellar rally? Would you advise your clients to sell this rally that we have seen in the stock in the last 1 week?
So I wouldn't advise them to sell, but I would definitely not advise them to buy. So I honestly believe that the opportunity that these platform companies have, especially when it comes to travel, is great. But you see also what's also happening, what the business model shift, which is going from more consumer to B2B. B2B not necessarily has the same profitability or margins. Plus, there are certain amounts of payment delays versus where it comes to B2C, which is, upfront, pay as you go kind of a business model. So we need to see how they manage the cash flows also. We also need to see how the growth continues, but B2C is the space that we think is a better opportunity for growth, because I still believe that tourism in India is at a very nascent stage, and the opportunity that, more and more people come on these platforms to book holidays, packages, is only going to keep increasing. So as long as you keep making more of these packages and doing things, which Yatra obviously is doing, but which is not the core focus at the moment. But as long as the B2B business grows, I think things will be okay. And, operating leverages are great in these businesses for the simple reason a lot of my cost is already into the system. Any additional bookings, the revenue of it kind of becomes largely profits. All of these platform companies across the board are the same. So I would not buy it, but neither would I sell it at this point. I think I'd wait and watch. Maybe on corrections, if it comes closer to maybe 120 or 115 odd levels, it might become an interesting buy for me.
So those are the levels that you should be watching out for Yatra, but stock currently on terrace, what we are seeing. But another stock which is in focus is Camden Fine Sciences. And if you look at the stock movement of this one in the last 1 month, it has seen about a 30% of a dip. In terms of the first quarter also, did see a couple of headwinds playing into the numbers as well. To talk to us more about this, we have joined in by Varsha. Varsha, over to you.
Thank you so much for that. Since you were just mentioning about the Q1 result, that is one of the reasons why we have seen pressure for the stock. So the revenue impact, so the numbers were weak, and the revenue impact was led by specialty ingredient segment not doing well because of the sluggish demand that the segment has seen. And there was an annual maintenance shutdown for their Dahej and Tarapur unit, which also led to impact in financials, and the EBITDA impact was led by low production, higher unabsorbed cost, and also one-time employee cost that the company has seen. Their vanillin business had a small dip in the revenue, and the other reason why the stock did not perform well is because of the tariff situation, because the Trump tariffs as a key concern for the company, and this was highlighted in their con call. Companies closely watching their impact, and these tariffs basically can affect their business, and the impact is especially noted when it comes to their vanillin segment, which is the next leg of growth, and where every investor is eyeing for that vanillin segment. And there, if you see, the tariff impact would be more, and companies also concentrating more when it comes to US market. So yes, as acknowledged by management, they're going to see a tariff impact when it comes to their vanillin business, and one of the reasons why the stock did not do well in the last 1 month. And of course, the Q1 numbers were also not encouraging as was expected by the investors.
Okay, thanks for that, Varsha. Sameer, your quick take on this company?
Sorry, no coverage on Camlin.
Okay, so no coverage on Camlin is what we are saying. But that was all the set of stocks that we discussed on this set of small cap buzzers. Do stay tuned to NDTV Profit India Market Close coming up next.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशिता ही ऐसे बॉय मिलते मुंबई में, चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Bhavesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth-free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell.
Oh, wow.
Yeah.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company. Power.
Hello and welcome. You're watching India Market Close here at NDTV Profit. I am Mahima Vachrajani. With me is Harsh Saita and Neeraj Shah. Let's take a quick look as to how the markets are doing. Well, off slightly from its day's highs for sure, but still trading over that 1% mark. The Nifty 50 trading around 1.08% higher. The Bank Nifty has come off quite a bit, trading around 0.6% higher now. Let's try to pull up the Nifty heat map and see what counters are exactly contributing to that 1% gain. There you go. Maruti leading the chart clearly, up 8.5%, followed by Nestle up 6%, Hero MotoCorp up 5.8%, Bajaj Finance up 5.4%, M&M 4.4%, Trend 4%, Bajaj Auto 4%, HUL also 4%. Now, all of these counters are buzzing on the back of the new GST reform. So, I think three things that the market for sure are cheering is first, the new GST reform. The second one being, of course, the S&P upgrade. And, of course, third one, likely being a positive that the punitive tariffs that were imposed on India are likely on a pause. So, three things that the market for sure is liking today are these three things. And on the back of that, there's auto and consumption names that are doing pretty well in trade today, and that's on the back of the GST reforms. You have some counters like Eternal, which is slightly under pressure, down by about 1.3%. L&T down by about 0.8%. Infosys down by about 0.8%. Some IT names seeing pressure specifically. Let's try to pull up the sectoral heat map. That will give us a right picture as to how sectors have fared throughout the day. Nifty Auto still leading the pack, up for 4.5%, followed by consumer durable, because that is also likely a very high beneficiary of the new GST reform. There's also Nifty Consumption, Nifty Rural, that's doing very well in trade today, up 2%. Nifty Realty also seeing gains of about 2.5%, followed by Nifty FMCG, up 1.7%. The only one in red is Nifty IT and Nifty Pharma, largely flat, 0.05% in negative. But Nifty IT throughout the day has seen some pain, down by about 0.5%. But there are also counters like Nifty Metals that's doing well, up 1.6%. There's also Nifty Private Banks, which is up almost 1%. Nifty Infra also doing well, and overall Nifty PSU banks also doing well in trade today. Let's also try to pull up the advanced decline ratio and see how broader markets are doing. There you go. There is around 1650 odd advances versus that of 600 odd declines, and that, Harsh, paints the right picture in terms of how broader markets are doing, largely again led by the new GST reforms.
Yes, it is, and there are some names, and before I come to the names, let's quickly analyze the broader markets just a bit. The Nifty mid-cap, of course, just off the day's highs, but 1.2% higher, so holding on to those gains very, very well. The Nifty small cap as well, very similar texture. After that initial slight bit of fall, we've seen a good recovery and a sustained recovery both in the Nifty mid-cap and small cap. A small bit of outperformance that we're seeing on both of those indices. Some names which are doing well, and IFB is up 20% in trade, so is a Lakshmi Organics. Excuse me. Prince Pipes is doing fairly well for itself, 13% higher. Relaxo is up 10. KEC International Order Wins up 10 as well. We are seeing some gains coming in on the EMS side of things. Blue Star, of course, not a pure EMS, but on the air conditioning side, up 8%. Amber Enterprises 7.5% higher as well. So some of those names shining in trade. Bikaji Foods within the FMCG space also doing well. So everything relating to consumption, all relating to manufacturing in India, selling in India is doing fairly well for itself. So that's largely where the texture is. What's not doing as well, and maybe just a couple of stocks very quickly, Godfrey Phillips down 5.5%. Again, tilted towards GST, right? Craftsman Automation is down 4%, Suzlon is down 3.5%, some bit of possible demand softness creeping into Suzlon. I wonder if this is an opportunity to buy, and we'll quiz some of our guests on that. A Glenmark Pharma, a tough set of numbers, as Varsha calls it, 3% lower on a Glenmark Pharma, and Anupam Rasayan also down 2%. So those are some big gainers, losers on the BSE 500. But let me bring in Osho Krishan, who's Chief Manager, Technical and Derivative Research, who's joining us. Osho, great having you. Let me first start off with the Nifty call. Give us a call on the index, both the Nifty as well as the Bank Nifty.
Very good afternoon. Firstly, thank you for inviting me at the show.
Good having you.
Looking at the overall, the sentiments have seen a very strong turnaround. So now we are very much bullish in the market, looking at the recent consolidation breakout with the runaway gap on the daily time frame chart. I'm expecting that from here onwards, Nifty can see a decent upsurge towards 25,200 will be the positional target for Nifty. While on the very short-term perspective, I expect that any dip towards the zone of 24,800 to 750 should be auguring well for the buyers. So one should look for buying opportunity in this market. On the higher end, another 300 points of rally can be seen from current market levels. Now, specifically, the Bank Nifty is looking very lucrative. There has been very strong consolidation around the zone of 55,200, but in today's session, with the kind of a runaway breakout, the overall turn, there has been a very strong turnaround in this counter also. So I am expecting that in the short-term perspective, there is a high potential for the counter to test the zone of 56,500, while on the lower end now 55,200, 55,500 should be giving a kind of a cushion to any kind of blips in the coming session. So overall, there has been a positive turnaround, and one can look for buying opportunities in both the counters. We are having a kind of a very strong bullish outlook for both the indices in the near period.
Osho, clearly bullish with regard to the Nifty, Bank Nifty. Osho, your picks in this market, therefore?
There are two positive counters. Firstly, I'm expecting a very strong movement in the cement space. So from the cement counter, Heidelberg Cement is looking very positive. There has been a consolidation and sloping trendline breakout. So I expect that there can be a continued momentum in Heidelberg Cements. Approximately, it is hovering around 218 kind of a zone. So one can look for buying opportunity at current levels. 212 should be act as a very strong support zone. So one should keep that as a stop loss. While on the higher end, 230 will be the first target that can be seen. Post that, we have even a higher approach of nearly 242 to 45 from a short to medium term perspective. The other counter is from FMCG space. Godrej Consumer is looking very lucrative at current levels. There has been a strong retracement at these counters. So I'm expecting that from FMCG space, Godrej CP, looking at the risk reward ratio, it is very favorable. So one should look for buying opportunities in Godrej CP at current levels, keeping a stop loss of 1190. The first target in the short term is nearly 1260, crossing which 1285 can be seen as the next potential target.
Okay, all right. So those are the picks that Osho has given. Osho, anything on datamatics on the chart specifically? Because on a cheery day of markets, the stock is down almost 10%, and as such, there is no fundamental trigger per se. Anything on the charts that you're seeing specifically?
See, overall, this counter was into a very strong overbought terrain, and looking at the recent development, there is a possibility of further profit booking in the counter, although the technical structure is still bullish, but there is a possibility of further correction towards the zone of 800 to 780. So one should not look for buying opportunity at current dips, but any consolidation around the zone of 780 can be seen as a buying opportunity from short to medium term time frame.
So what's the take on a Bajaj Finance doing ever so well today?
See, Bajaj Finance is looking very positive. There has been a very strong consolidation breakout in the counter. The counter was on the verge of giving a breakdown, but with kind of a today's development, one can see it as a reversal in this counter. So I expect that any dip towards the zone of 880 or 890 kind of a zone can provide very strong cushioning to the counter. While on the higher end, the first hurdle is placed around the zone of 930, which is the bearish gap. Once it breaches the zone of 930, then one can look for aggressively buying opportunity in this counter for targets of nearly 970 to 980. But for now, there is a conservative approach, 880 as a very strong support, 930 is the first target. So buy on dips, try to sell on any rallies towards the resistance zone.
All right, so that's with regards to where Bajaj Finance stands. With that, Osho, thank you so much for taking out the time and speaking with us at NDTV Profit.
Thank you so much.
All right, the next counter that we're focusing on is Borosil Limited. Now, the company came out with its earnings, of course, and overall, the revenue was up 5.2%, EBITDA was up around 11.7%, margins improved to 16%, and net profit was up almost 87.4%. And, you know, to discuss as to how the quarter has gone by and how things are shaping up for the company, we're joined by Shrivar Kheruka, who is the CEO and MD of Borosil Limited, joining us now. Mr. Kheruka, hi, very good afternoon to you, and always a pleasure speaking with you. In terms of how the Q1 has fared, you know, it's been a good quarter in terms of where margins stand. Net profit was also a good boost and largely led by other income as well. Just want to get a sense as to how has the entire quarter shaped up, because demand for sure in this quarter has been impacted. But in terms of volume versus value, where do you stand?
So yes, well, thanks for having me. As far as demand is concerned, it has been muted for a few quarters now, and we saw more of that in the first quarter. The volume growth has been actually quite good in double digits for our non-glassware as well as our glassware category. The opalware would be an exception where volume has been negative just because of, I think there are quite a few contributing factors to it. But what we see going forward is quite a positive outlook. Because Q2 looks to be better from both, the Diwali being a bit earlier, a good monsoon, which should help, demand across the country. So we're still sticking to our targets, which we have given for a 15 to 20% CAGR, over the medium term.
Mr. Kheruka, with regards to where your non-glassware stands, there are products that might benefit from this GST reforms. If yes, what is the kind of benefit that you're penciling in?
So it's early days. In general, whenever sentiment improves, I think there would be a positive impact on demand across, not just for those products which are, which would benefit, but also for the other products. But it's too early to kind of, quantify that. And I think it would be better to wait for a few days, understand exactly which products will benefit, which won't. But broadly speaking, I do believe it's a fantastic thing to have to revive demand because of the muted, outlook for the last few quarters.
Mr. Kheruka, this is Harsh also joining in. So you've guided FY26 capacity utilization 90 to 95%. How has that shaped up in Q1? Give us a lens into that. Does that change at all? And what's the capex pipeline like? You're still building out the business, of course, but it's a business which can generate 20% plus ROC sustainably, and that will largely depend on capacity utilization and your capital employed. So just trying to get a sense of both of those.
So look, it's a good question. I think capex utilization has been a bit lower than what we forecasted. So when I say, capacity utilization has been about 80% versus the 90-95 that we had thought about. We do hope to make up for it in the remaining part of the year. As I said, we are not reducing our growth forecast. We still believe we can catch up in the rest of the year. So overall, I would say that our journey towards a 20% ROC business is very much on track. Over the next 2 years, we do see our EBITDA margins, which are improving quarter on quarter, to further improve and contribute to that. Moreover, as far as capex itself, we are spending more capex this year. One is for more indigenization of our production, of our product offering. So we have announced capex on steel bottles production. These are flasks, insulated flasks that we'll be making in Rajasthan, as well as another capex which was recently announced in our last board of directors meeting, which is increasing our renewable energy percentage of our own consumption, and that capex is about 75 crores. So this year also, I think we'll be doing close to 120 crores of capex, and I believe that it's all moving in the right direction, so that in the next 2 to 3 years, that ROCE number of 20% plus, we could be well and truly be there.
And Mr. Kheruka, give us also a perspective with regard to your Hydra and what it is anticipated that you're going to have a tough year FY26 with regard to that part of your business. Give us a lens into what's happening and how quickly can you revive that, if I can call it that.
So yeah, I mean, certainly I think the regulatory changes have impacted the Hydra business even in Q1. and that has also been one of the reasons for a muted growth in this quarter. However, the capex which we had planned for that will be coming on stream as planned, and we should start production in Q4 of this year. We had some earlier inventory which we had built up to reduce the impact. It can't eliminate the impact, but it can reduce it. So this year will be, as indicated earlier, a little bit tough for Hydra, which happens to be a, insulated steel flasks business. That product is fantastic. It's been replacing plastic, for many years now, and you'll see that demand only go up. So that's a business we are quite bullish on, and we are also very happy that the government has made the effort to position or point the manufacturers to make in India, which we are doing. But these things do have some short-term impact, which we are dealing with this year.
Okay. Mr. Kheruka, in terms of your overall mix when it comes to glassware, non-glassware as well as your opalware, just want to get a sense, because non-glassware has seen a significant amount of growth momentum, and that has continued in the past few quarters as well. And I believe that going forward also this trend shall continue. How does the mix shape up? And then how do your margins improve going forward? Because from what my understanding is that non-glassware provides you a better margin.
Well, okay, so that's quite a few different things we'll get to. So as far as mix is concerned, frankly speaking, we don't have a preferred mix in mind. We want to be with the customer, and what the customer wants to buy on a daily use basis for their kitchen or table needs. We want to be there, be it glass or be it steel. We stay away from plastics because we believe plastics is not healthy for our customers, also not good for the environment. So we want to focus our product range in broadly glass and steel. So we don't really, let's say, curate the mix or have a target for what that mix should be between glassware, opalware, and non-glassware. As far as margins are concerned, actually our glassware and opalware margins on a EBITDA percentage are higher than what we have for non-glassware. However, when you look at return on capital employed, because non-glassware we don't manufacture yet, although that's going to change shortly, but we do see a lower EBITDA percentage on the non-glassware side. However, return on capital employed would be broadly similar because both glass and opal have large plants with high capex, and the ratio of capex to turnover is about 1 to 1.5:1. Each of these three businesses have its own intricacies. We want to be where the customer is, so we'd be happy, to keep evolving with the needs of the customer rather than, have a target in mind for the mix.
Okay, Mr. Kheruka, give us a clear guidance with regard to FY26. And of course, it may not be an absolute guidance, but where do you see it go as of the current juncture? What's the growth looking like in terms of the top line growth guidance? What's the margin number looking like? And also give us a medium term picture, maybe over the next 3 years. What's the growth CAGR like? What's the margin picture like?
So these are numbers. It's hard to give you any 1 year's numbers because there's so many variables which may change positively or negatively our anticipations. But I can clearly say to you that our CAGR, 15 to 20% growth CAGR, is something that we are not backing down from. We believe that we should at least achieve that, over the next 3 to 5 years. And that's something we stand by. We are also, from a margin perspective, have been improving our EBITDA margins. And you can see that broadly for the last 3 years. We're at about 16, 17% now. And I believe that number will tend towards the 20s again in the next 2 to 3 year period. And we are fully committed to that. It's very difficult to say what exactly this year will be like, but I would definitely look forward to seeing a double-digit percentage growth even in this year, and in spite of the muted first quarter demand.
Fair enough. Mr. Kheruka, in terms of competition, and why I'm saying competition is because both in terms of both glassware as well as non-glassware, the kind of assortment that is picking up in the quick commerce space is really quick and really large. And a lot of players from the unorganized space are also able to sell products that you're selling, at probably better prices, or are able to give better discounts as well. So just want to get a sense as to how is competition shaping up on the back back of this rise in quick commerce assortment, and how are you planning to maybe leverage that or battle that out?
So frankly speaking, every channel which gets product to the customer is a great channel for us to have. So we, whether it's general trade or it's large format stores or e-com or quick com, we believe that each of these channels have their own place and will continue having their own place in the future. Coming to competition, I don't think there's any difference. Competition in our business has been competitive for many years and will continue being competitive for many years in the future. So we have our product design, the kind of use cases, the value for money offering that we have. We believe that's unique, and that's the communication we try and make to our customers. And we do hope that the customers, after having used our product, actually prefer to buy us even at a premium compared to other players. And that's because of a lot of attention to detail in design and quality that we put. So competition will come and competition will go, but I believe we've been around for the last 65 years, and we will be around for many, many more decades to come. So we are doing what we have to, and I'm sure that as far as our growth aspirations are concerned, they won't be impacted too much by what our competitors are doing.
Okay, thank you so much, Mr. Kheruka, for joining us, giving us that perspective with regard to Q1 numbers. Of course, we'll continue to engage with you as the quarter goes by, as the quarters roll by, and wishing you all the very best for the rest of FY26 as well.
Thank you.
Anyway, it's time to switch conversation. If you're sitting out of Mumbai, it's clearly not the best weather that we're seeing at this point. Some of those visuals coming at you thick and fast on the right side of your screen. We have with us GP Sharma, AVM Meteorology and Climate Change at SkyMet, to give us a perspective on what to expect going forward with regard to the weather. So what is it that you're seeing? How long is the kind of rainfall that we're witnessing expected to last? And thereafter, probably give us a perspective on what to expect for the rest of the year as well in terms of the monsoon.
Yes, Harsh, this possibly, I think, one of the longest spell which we are having for Mumbai. Already, I think this is 3 days, the rains were on. The heaviest was on even Friday, Saturday, when 245 millimeter of rainfall. It's even now also non-stop rains since morning, heavier one in between, very little gap, hardly any gap rather. And it's going to continue. Okay, I will say today, tomorrow, day after, and maybe another day also. So total about 4 days, 18th, 19th, 20th, 21st. And the worst thing is possibly tomorrow and day after it may strengthen further, it may intensify further. And the intensity and both spread as well, possibly will be more than, it could worsen what we have now, tomorrow and day after. It will get another forceful rains, powerful rains, many spells, almost non-stop, incessant rains that Mumbai will have. Mumbai and suburbs across north and south, Thane, Palghar, and even southern parts of that, right up to Kolaba, all parts of Mumbai, Sion, Chembur, Juhu, all these parts, they are going to go through a heavy rains. Particularly, I will say it will intensify tomorrow and day after. The conditions are favorable. Entire Konkan region in that in this spell is going through this rough weather, and Mumbai in particular, which has already crossed its monthly normal rainfall with these 3 days rain as such. August, mind you, it's the second rainiest month for Mumbai, 585 millimeter of rainfall. It has surpassed that, including today's rainfall which we had. It has surpassed that figure. The thing is, with further worsening conditions, it's going to become difficult for common man also, for all type of travel, which you call it as a road, rail, air. I'm worried even about the air travel also. Okay, it becomes very, very dicey on many counts. It's a strong winds, a low visibility on account of rains, water logging on the runway. It all adds up to the degree of difficulty.
Correct.
And Already, I think air operation, many of the flights, they have already aborted also. It will happen further if we continue tomorrow, day after, these conditions will continue. Yes, Harsh.
Well, next 48 hours look difficult, Mr. Sharma. Thank you for highlighting that. But, sir, let's take a step back. Let's look at the larger picture, maybe the monsoon season as a whole. How are we placed in terms of the rainfall countrywide? And maybe if you can give us some color, even maybe state or region specific as to where the rainfall has been most pronounced, above average, below average, give us that perspective.
Okay, we are now 2/3 of the season is over.
Yes.
Okay, as of now. Total season has got normal of 868 millimeter. We have crossed 600. Okay, normal rainfall. As of today, it is just we are breaking even. Okay, just about 1% more than the normal. The other day, that's just about yesterday, day before, it was 0-0 for the last about 4-5 days. The thing is, in the month of August, the rainfall was subpar for the initial about 12 days. Every day the rainfall was less than the normal. So we know that June we had a surplus of 9%. July it was surplus by 6%. But all that surplus which we had, that was consumed in the month of August. And that's what I say about 12th, 13th or so. These deficit rainfall consumed the surplus and we broke even at 0-0. As of now, yes, the rains have picked up again. For the last about 3 days, it's more than the normal. And that is how we have added about 1% over and above the long period average. Now, the countrywide distribution, I think it is quite good. It's better. It was earlier giving some anxious movements in some pockets, be it Bihar, be it even Maharashtra, that Marathwada region was highly deficit. But it has made up now. Marginal shortfall is there. That's not worrying now. Anyone for that matter, even the agriculture sector, down south parts of Andhra Pradesh had a very, very deficit pocket. That has become surplus now.
Perfect.
Northeast India remains. Northeast India, yes, Arunachal, Assam. But I keep saying that region rains so much that even if there is a little bit of shortfall, it can absorb that shortfall.
Understood.
But overall situation is good. Where it matters most, in the core monsoon month over the core monsoon zone of Indian region, that is doing quite well.
Perfect. Thank you so much, Mr. Sharma, for joining us, giving us that perspective. Viewers, key takeaways. Next 48 hours going to be difficult is what Mr. Sharma says. But overall, monsoon well placed where the country is concerned. So that's a key positive. Let's slip into a very, very short break. On the other side, we'll get you heard on the street, of course, and along with it, we'll get you the stock sector of the day. We'll discuss auto, and we'll have guests here as well to discuss that with us. Stay with us.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Ramesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom.
To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth-free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
All right, back with India Market Close right here on NDTV Profit, and the markets are just about holding out, right? I mean, in the sense, it's still up 300 points for the Nifty, but we're off from the highs of the day as we've established. But you could argue at 24928, it's not dramatically lower. It's just off about 70, 80 points from the highs of the day. But it's that time of the show when we tell you what dealing rooms are recommending in the session today. All the chatter on the dealing room with Somit Sarkar. Somit, what are you gathering?
Well, multiple stocks remain in focus. Firstly, when it comes to Lodha and AB Capital, dealers are indicating that there are sell flows when it comes to the FI desk. For Innova CapTab, dealers are indicating that there are sell flows on large HNI desk at higher levels, and this is on anticipation of a potential GST rate cut that could happen for pharma products. Now, dealers believe that it will be negative for domestic-focused CDMO players who have added new capacities in Jammu. Now, recently, Innova has had commercialized its facility in Jammu, which is spread across 11 acres, so keep an eye out for that counter. For ITD cementation, dealers are indicating that there could be a potential announcement related to an order win very soon. And when it comes to InfoEdge, a large prominent foreign investor has been a seller in this counter of late, but dealers are indicating that the selling might get over soon for InfoEdge, so keep an eye out for that counter as well. And lastly, when it comes to Eternal and Swiggy, dealers are indicating that there are sell flows seen at higher levels on both the counters, as recent channel checks are indicating that Zepto has taken lead when it comes to the weekly average users, and it's way ahead of Zomato and Swiggy at current moment.
Okay, thank you so much for that, Somit, for bringing us that perspective. As always, heard on the street. We'll obviously keep our eyes glued on as to whether some of those or all of those have started to play out. Jay Bala joining us, Cash the Chaos. We also have Siddharth Khemka of Motilal Oswal joining us on the fundamental side. Jay, let me start off with you. You were, the last we spoke, or rather I recall we spoke, you were super bullish on the index. Does that change at all on the Nifty, the Bank Nifty? Give us your calls.
Yeah, hi Harsh, thanks for having me on the show. Yeah, I'm still bullish, and I pointed to the markets trying to find support at 24,400. The decline from the July highs, I consider it as a corrective decline. We spoke a fortnight ago, and I was bullish on the auto sector, and I said auto sector is likely to read. And today, autos are the star of the day. So continue to remain bullish, and the markets are taking off from the right level. So expect fresh record highs to come through in a matter of a few weeks. And from a long-term perspective, 6 to 12 months perspective, I still maintain 29,000 objective for the Nifty.
Okay, Jay, hi, very good afternoon to you. What are the top picks for the day?
Yeah, I have two for the day. One is MCX India. I think it's the price structure is incomplete at the recent highs. So the low of 7534 registered a few weeks back. That's the stop loss for the stock. I'm anticipating it to cross 9,400, maybe even 9,900, but we can keep it conservative and look for 9,400. And the next stock is Havels. Havels India is consolidating in a bullish fashion. So I'm anticipating it to hold 1450 and rise to somewhere close to 1750 in the near term. This is a short-term call. The medium term is slightly not clear, but I think it will resolve bullishly. But the short term is bullish for a 1750 objective.
So, sorry, Jay, I'm just rewinding. This is Neeraj here. You are constructive enough for you to tell your clients to go long on the Nifty at today's level, circa 24,900, 950 odd?
That's right, and we have already advised clients to go bullish when the markets hit 24,337 because the markets weren't expected to break 24,021. So my clients have already turned bullish.
Yeah.
Even at this level of 24,900, it still remains bullish. 24,600 is a very good stop, and anticipate the July highs to get taken out first, and then markets to proceed somewhere about beyond 26,000 by September, October.
By September, October. Okay, so in about a couple of months, you expect all-time highs to be taken out as well. That's what you're saying on the charts.
That's right.
So therefore, good to buy, make a fresh purchase at the current level too, right? Just getting that clarity. Okay.
That's right.
Okay, Jay, good to know that. Okay, Siddharth Khemka with us as well, and that's a new look, Siddharth Khemka. Siddharth, that looks really smart, Siddharth. Keep that up. But thank you for joining in. And before we get to anything else, Siddharth, just trying to understand, are clients today at the Motilal Oswal dealing rooms going out and buying through the day, or was it a pop in the morning and then it's cooled off? Any sense there?
Yeah, good afternoon, Neeraj. Thanks for the compliment. We'll definitely try and upkeep that. I think there was a mixed of, you can say, confluence of events that happened today in terms of dealing room. Definitely, some of these spaces we saw clients booking profits on the pop, but there were certain segments or sub-segments where there was a lot of buying throughout the day, being the FMCG space. I think the case for revival in the consumption or the core consumer space, that looks pretty strong now with the talks of the GST slabs going down. So that would be a big boost to consumption combined with the already low inflation and the strong monsoons that we are seeing. So I think that is something that we saw buying throughout the day. The other segment was the consumer durables. After the weak results from all the AC companies, the stocks have fallen, and that made for a cheap bargain buying in some of the names, the likes of Amber, Dixon, we saw buying throughout the day.
So there has been buying through the day, and now therefore the second point, in the three key suspects, Siddharth Khemka, EMS, consumer durables themselves, as well as autos, there has been a pop today. You reckon people can buy into some of these at the current levels fundamentally as well? Are valuations or growth prospects in favor?
So Neeraj, I think if you look at first segment is the that you said was about the EMS and consumer durables themselves. I think there the valuation comfort is still there. Some of the EMS companies on back of high growth, and some of the consumer durables on back of the recent fall. I think even at current levels, we see strong earnings recovery going ahead as we enter the second half, which would also have the festive season. So pretty clear view there. In terms of auto, the view is strong, but I think a lot of these stocks, the likes of Hyundai or M&M or TVS Motors, they are at the record highs, and I would wait for some correction or cool off or consolidation before entering. Within auto, I think you have two names which are still at comfortable valuation: A, Maruti, and B, Hero Moto. They have not participated in the rally so far, and I would believe that given the changes in GST, I think the entry-level segment, both of which cater to in their respective segments, be it the two-wheelers for Hero Moto or the four-wheeler entry-level segment for Maruti, that should do well. So a bit of, you can say, divided view in terms of auto. The third sector, I forgot which one you asked.
Yeah, I said EMS and consumer durables and autos. So you kind of address those. Yeah. So thank you for that. Siddharth, in fact, since we spoke about autos, let's make that segue and get in Puneet in, because this proposed GST overhaul could actually shift the gears for auto companies. And of course, there could be, a slip between the cup and the lip. But for now, let me get in Puneet to talk about autos as the sector of the day, really, Puneet, because almost everything has performed well.
Well, definitely, and I think we're seeing a big fillip on the small car segment, all those catering to that, including the entry-level motorcycle, the component guys, all seem to be getting that benefit today, and that's largely because, as you rightly said, a new GST rate structure essentially for automobiles. Now, the GST rate, it's coming under a new categorization on engine capacity rather than vehicle type, which essentially means that a lower engine capacity less than 1200 cc will attract potentially a lower GST rate of 18% compared to the current 28%, and hence we're seeing a strong move on stocks like Maruti Suzuki. It's hit 14,000, it crossed 13,000 today, sustained that move and has now crossed 14,000 levels as well on that particular stock. When you also look at bigger engine capacities, 1200 cc and above, likely the SUVs that could be impacted slightly, but we need some more clarification on that, because that will be the second highest tax bracket, that will be and become essentially the second category. The other biggest beneficiary, of course, we spoke about Maruti. The cost of small cars has steadily risen essentially from 2019 by almost 60%, and Maruti was hit because of that. Any kind of rate reduction from GST will be one of the biggest beneficiaries. They roughly operate 9 brands in this segment, the likes of Alto, Espresso, Baleno, amongst others, and that forms 51% of the company's sales in the domestic market, and hence any reduction, a big huge fillip for the company. Who else benefits though? Hyundai, as well as something like a Tata Motors, are the other beneficiaries. Hyundai does operate brands like the Grand, i10 Neos, as well as the i20, and that will again get a positive fillip. That forms roughly 1/3 of the company's FY25 sales. Someone like a Tata Motors has brands like Altroz, Tiago, as well as Tigor, and that will also get additional fillip. They have launched new versions of these brands recently in this year, starting January. We've still not seen that big push, and this could be it as well. When you look at tractors, that's the other benefit. The GST rate proposed could come down to 5% from the existing 12%, and we're seeing players like Mahindra and Mahindra, someone like an Escorts will be a big beneficiary here, as well as very interestingly, VST tillers could be the other big beneficiary. We've already seen a huge run up on the stock over the last 6 to 8 weeks, could be another big fillip for this one. Two-wheeler makers, Hero MotoCorp is the undisputed winner. We've seen another very strong up move on the stock today. From the lows of about 2,800, the stock has consistently rallied, and that's because 80% of the company's vehicle sales comes from under 100 cc segment. So this GST rate could be a very key one for them. Bajaj Auto, 9 to 12 consistent months of domestic sales have fallen for the company, and any kind of positive move is also going to help the stock as well going forward. And finally, in terms of the components who actually sell to these automakers, we're seeing a very interesting trend because players like Gabriel, FIAM as well as Endurance have all consistent business models over the last 2 to 3 decades, all servicing two-wheelers and four-wheelers, and we're getting the highest reward on all these stocks. The other ones are the likes of someone like an Endurance Tech, Lumax Auto Industries as well as Uno Minda are also biggest beneficiaries today. So might be very interesting to go into a showroom right now to buy a car, could get some discounts, but the GST rate cut could take some few weeks. But definitely one of the huge pillars for the industry for the first time in small cars over the last 6 to 7 years.
Point. I wonder if dealerships are going to start advertising discounts in advance already and start pushing it. For those who know that on the day of the budget usually and the time when there used to be a bump up on taxes on tobacco items, the panwala used to already add it into the cigarettes right after the speech, wouldn't even wait. I wonder if the reverse is true and you will see discounts coming in and then the question of whether people will postpone their purchases. Siddharth Khemka, that question to you really, will we see a bit of a period of people holding back purchases? Because this is now an announcement, but there are some steps to take till you have GST actually getting cut down.
So yeah, I think there could be, whenever we see these kind of changes or the big announcements being made, especially in the tax cut, I think this is a big change after almost 6-7 years, a big flip for the entry-level small car segment. There could be some deferment that can happen, but again, we need to see the details of exactly the changes that is going to be implemented. This is just the overall announcement. But I think overall, the sentiments are quite positive. Some of these names, as we said, the Marutis, Hyundais of the world, which are largely catering to the entry-level segment, that will get a big boost. So I think bearing the near-term weakness, the long-term view becomes strong, and that kind of limits the downside. So even if some of these purchases were to be postponed, I think that will add up to the full year's numbers.
Okay, in terms of, let's look at what is not working out today. And having said that, Nifty has managed to hold above the 24,900 mark off the highs of the day. Nevertheless, but not a big plunge or a huge sell-off coming there. Where there's the most pain, I would say, are in the IT stocks. Nifty IT was anyway a laggard through the day, not really participating and continues to do that today as well. Is there anything in the Nifty IT, Jay Bala, this question to you, that you would pick up basis charts, where on a rotational play you might see some interest coming in IT stocks as well?
I've been saying since April, even though I've turned bullish on the overall market, I've been saying we should be avoiding IT stocks from the plan, and that view still remains the same. I have viewed the IT's bounce of the April, post-April, as a corrective bounce, and there is a short-term positive coming in the form of TCS. TCS next low is likely to find a temporary reprieve. So if it were to drop below 2,900. And that will help the IT index recover a part of the move. It can, transform into something bigger. But I want the market to prove me wrong, and and I should have turned bullish on Nifty IT. So at the moment, I'm still seeing any bounce that comes through for the Nifty IT index as a corrective bounce. But 34,200 is a very important support, and I'm anticipating some bounce to come through. I'll wait and watch and wait for the market to tell me what kind of bounce that is. If it's going to be a continuation of the previous trend as a corrective bounce or as a new fresh uptrend. But at the moment, I'm treating every bounce in the Nifty IT frontline names as a corrective bounce.
A corrective bounce there. What about autos, Jay? Autos is something that you have been bullish, but now after the run-up that we've seen, I mean, Maruti is astonishing today. All of them, Maruti, M&M, and the lot, but I think Maruti has really stood out for the kind of strength it's seen, 8.5% up, and has been steady with those gains through the day.
Yeah, today's price action reiterates what I've been holding. Auto sector is very likely to take out the 2024 high. My objective is about 28,500 to 3,600 on the Nifty Auto Index. So Bajaj Auto, which I pointed out last time, and a fortnight ago, and Hero, which I pointed out last time, they are likely to do well. And Hero is an outperformer today. And I'm anticipating Bazaar to play catch up. Once it crosses 8,800, it will have a lot of power-packed move to come through. And yeah, I think, and in July, I turned positive on Mahindra and Mahindra. I think, and so the overall sector structure is looking very positive. Still a lot of gas, a lot of steam left in the sector.
Okay. Well, auto is clearly in the thick of things. The question only is, can this lead on? You know, even Hyundai, for that matter, actually was doing almost as well as Maruti was for a part of the day, and probably still is about 7.5% is no mean feat. So I think that whole small car bucket is doing very, very well. And I'm firmly of the opinion, unlike a few others in the newsroom, that showrooms will give discounts in this festive season to make sure that the customer who is walking in does not go away saying that, oh, I'll buy post the GST cut. All things put together, accessories, extended warranties and discounts milake, they'll make up for that thing because volumes are important.
I agree with you. If there is a sentiment shift, what this has done is a sentiment shift, a mood changer, which is what consumers desperately needed and the street desperately needed. So now I don't think there is a situation where you will come back. The only big factor actually to talk about is two things which are going to happen in the next several hours, next 12 hours. One is around 4 o'clock when you're going to have the Chinese foreign minister meet with his Indian counterpart. I think that is very important and we should actually get a report on that, on what is on the agenda as India strengthens its BRICS presence as a counter to what is happening in the US. And then is the Trump-Zelensky meet. That is also very important because so many permutations and combinations. One of those theories is that Trump saying if Zelensky gives up on NATO membership and gives up on the hope of Crimea, then maybe there can be a peace deal right now. So after a long time, we're coming down to brass tacks and the lane-then and the negotiation. If something comes out of it, if there's something positive which will happen in the next 24 hours, then tomorrow you could see this rally continuing.
But so sticking to the auto piece, I'm very curious to know at least Siddharth's view, whether four-wheeler, two-wheeler, where's the value proposition currently in terms of stock price and valuations itself versus what the potential is. Siddharth, where would you bet? Do you feel two-wheelers the better place? Would you feel farm equipment, escorts and the like? Would you feel four-wheeler, passenger vehicles?
So Harsh, I think every segment has a value player. In the two-wheeler space, Hero MotoCorp has been a laggard and is still trading at about 20 times on a 1 year forward PE compared to some of the other peers which are trading at almost 25 times. So clearly, if the entry level...
Okay. So that we're just cutting across to the Vodafone Idea press conference. The new CEO has been speaking. Let's listen in if he's still speaking over there. Abhijit Kishore.
The cash EBITDA of rupees 21.8 billion improved by 3.7% on a year-on-year basis. The reported EBITDA for the quarter was rupees 46.1 billion as compared to 42 billion in Q1 FY25. Depreciation and amortization expenses and net finance costs for the quarter were rupees 54.7 billion and rupees 57.5 billion respectively. Excluding the impact of Ind AS 116, the depreciation and amortization expense and net finance costs for the quarter were rupees 39.3 billion and rupees 46.9 billion respectively. During the previous quarter, pursuant to the conversion of spectrum dues into equity by the Government of India, the company had de-recognized an amount of rupees 369.5 billion from its deferred payment obligation. The finance cost for the quarter versus the previous quarter has mainly reduced due to the above. The capex expense for the quarter were rupees 24.4 billion. The company continues to invest in network and will accelerate the broader capex plans that we have been mentioning previously of rupees 500 to 550 billion over 3 years since FY25 once we tie up the bank debt. In this regard, we remain engaged with the lenders to secure debt financing. The debt from banks has further reduced to rupees 19.3 billion as of June 30, 2025. With this, I hand over the call back to Renju and open the floor to questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants.
Okay, so Vodafone idea, and this is something we spoke about in the morning, you'll recall as well, Neeraj was on my list. Numbers are bad, I think 30 quarters and the losses continue, but their subscriber base is falling at a lower rate. Their ARPUs have gone up because of one extra day last quarter, and we did talk about how the stock might be up because all things considered, not looking that bad. I'm just wondering if the new CEO and the fact that they're still waiting for some AGR relief is going to keep pushing up Vodafone.
Well, the problem with this one, or for that matter SpiceJet or any of these things, are that the biggest names bet on them in the hope that they will do very well, and while these guys don't do well, the leaders continue to outshine. Interglobe at highs, Airtel at highs, Vodafone, SpiceJet, and any of those players. Right? That 10 years ago the call was that, oh, which is the next HDFC Bank or which is the next Bajaj Finance? Somehow HDFC Bank was the next HDFC Bank, Bajaj Finance next Bajaj Finance, Bharti Airtel the next Airtel, and Indigo the next Indigo. Somehow the other guys are not able to do it.
Yeah, it's not easy to challenge that position.
Especially when you're saddled with so much debt, right? It just kind of drags your
The only
financials.
story working for Vodafone is government unwillingness to let this be a two-horse race.
Yeah.
And that is not going to change anytime soon.
Yes.
So then that is a different story altogether. That changes the dynamics. But let's look at the bull versus bear case today. We're talking about Nestle. The stock has seen some smart up moves post the announcement of the new GST reforms. What does the road look like going ahead? Mahima joining us with both the bull case and the bear case.
Right. So, as you rightly mentioned, Tamanna, the stock is seeing a significant amount of gains today on the back of the new GST reforms and the possible consumption boost that will give to the entire consumption sector. And that's the kind of up move that we've seen in the stock today. But overall, if we see, Nestle was the only counter in the entire Nifty FMCG that was that kind of missed earnings estimates and was not up to the mark as to how the other peers in the entire staple spaces have performed. The earnings were a miss in terms of all four metrics: revenue, EBITDA, margin, as well as net profit. In terms of where the concern was, of course, profit dropped to around 659 crores, down 11.7% versus that of other peers in the same category, seeing some upticks or better upticks in the profits. But overall, export sales was something that gave relief to the entire earnings because that grew faster than the overall domestic sales for Nestle. In terms of the boost in consumption that could come in because of this GST cut, could possibly be better in terms of second half, where Nestle could benefit from this particular update. And there are also other factors playing its part in terms of your income tax cut, in terms of your rate cuts as well. So all these things combined together will play out well in the second half. But currently, in terms of margins, they have remained under pressure, and the management's commentary also remains a little cautiously optimistic when it comes to their margins, because inflation still has not come down as to how the management is expecting it to be. So margins still to remain under pressure overall. In terms of the segmental performance, what did well this quarter was Maggi and KitKat, both bringing double-digit growth in the Nestle portfolio. But something that did not work this quarter was the milk and nutrition portfolio, and that still remains an overhang and a concerning segment as to where brokerages are also penciling in. Lastly, in terms of where ANR stands, where there are 8 buy calls now, 20 hold calls and 12 sell calls for Nestle, as per where Bloomberg estimates are concerned. So that also paints a picture as to how brokerages are also viewing Nestle right now as.
Okay, thank you so much for that deep dive and yet bull versus bear case with regard to where Nestle is concerned. Jayabala, your take?
On the FMCG space or the...
On Nestle, please.
Nestle, I see. Overall, I'm seeing in a consumption, Nestle is part of the Nifty India consumption space, and the consumption index is having a breakout today. So, but within that FMCG, I'm not so bullish from a investment perspective. I would see Nestle's move as a short-term bump up rather than a reversal of downtrend for the FMCG space. But there are select pockets which are okay, and Nestle isn't one of them. But any bounce here, I will treat them as a trading rally rather than an investment opportunity.
Okay. So, Nestle in focus. I mean, Lakshmi Organic is at its highest levels ever. Pfizer is completely roaring. KEC International, as because of new orders, doing really well. Amber, PG Electroplast, Apollo, some of them. Bikaji Foods also because of the kind of results that they have come in. I'm just wondering, in terms of some of the pharma stocks, Jay, you're seeing a mixed kind of a case over there. Pfizer, of course, on one end of the spectrum, but some of the others not doing as well. Would you look at anything constructively in pharma space right now?
Yeah, I'm bullish on the pharma space, but it comes with a very heavy caveat. It's subject to the whims of Donald Trump. So the sector has had a breakout, but it's not been able to push out and consolidate the gains and the breakout that is seen. I'm anticipating fresh record highs to come through for the Nifty Pharma Index. As I said earlier, there's a considerable amount of risk, but if you can stomach that risk, I'm bullish on the pharma space. Names like Dr. Reddy's, Cipla, Torrent Pharma. Glenmark has had a fantastic pullback. Glenmark is probably the best in the space. So the recent drop from a sharp bump up might it'll help a second level entry opportunity in Glenmark. Possibly limited downsides there, somewhere about 1900. So I would say Glenmark presents a very interesting opportunity.
Interesting is what has not happened with ITC and has happened with Godfrey Phillips. We should pull up both those stocks. Maybe ITC, balancing out the consumption boost with the tobacco part of the portfolio, but Godfrey Phillips taking a hit on the chin. Now, what is the unknown over there is 40% and then plus what?
Yeah.
We don't know that as of now.
Yeah, but safe to take that risk out of the portfolio, right? If you have it, might as well get it out because there will be something which might be bad versus there is so much which is on which the good might happen.
I suppose BST tillers will also be, maybe seeing some pain. You will see some pain in a lot of other segments as well. But Godfrey Phillips.
Why VST?
VST
Industries.
VST Industries will be seeing. Sorry.
Tillers started a smoking division.
VST,
yeah, the names can be confusing.
VST Industries will be seeing some kind of pain as well. But I don't know to what extent that you will have a further tax coming in, because at the end of the day, the messaging is that you will have not too much impact on the final taxation. If you could put only 5-7 items in sin goods, then how high are you going to tax them to make up for it?
No, it will also have to do something with that concession says that in the morning somebody is talking about, and the story that you spoke about that, because that's going away and that balances out some bit of this loss, right?
Yeah.
So let's see how it goes. Okay, I think we have to thank Siddharth Khemka. So let's do that. Siddharth, thank you so much for joining in today and giving us your thoughts. Really appreciate your time. And we need to slip into a very quick break. On the other side, we get to the top BTST ideas, of course, amongst many other things. Stay tuned.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Bhavesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom.
To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell. Yeah.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real
Right, back with India Market Close right here on NDTV Profit. And for all those who are watching the show right now, thank you so much for doing it, because you are watching the #1 channel. As of the last derived numbers, NDTV Profit is the new #1, and we proudly say this, that we are at 47.7%. And the reason why we proudly say this is because it is you, the viewer, who makes our effort come out in terms of those rankings and numbers. We don't run behind the numbers, but it's always good to have the vote of confidence from the viewer who tunes in and sees and gives a thumbs up to our work. So guys, I'm mighty proud.
Yeah, no, we're all proud and very thankful to our viewers for their support, because we're trying to do something different here at NDTV Profit. Yes. We're trying to be the business channel for the new stock market viewer. We don't want to talk down to you. We don't want to pontificate from a high horse. We want to talk for you. We want to talk to stakeholders who will help improve your experience. So that is our plan. So just hope for your continued support as we go through it.
Yes, and of course, I believe Tamanna and Neeraj both have covered all of that, but this is a bit of a vindication of all the hard work we've also put in. So
much more to go. Much more to go.
Yes.
So the hard work continues. But yeah, thank you to all of our viewers. All right, back to business. And markets have, stayed on and stayed upright. I think that's something to take heart from. The question at the start of the day was that, would you see a big slide? Yeah, we've come below 24,900 mark, no doubt. But 250 points up, still holding on, about 1% up. Some selling pressure perhaps coming in. We should look at the Nifty contributors just to see from where that selling pressure is increasing as we move ahead, and we'll get a view coming in from Amrish Balika as well. It is clearly the tech pack, Eternal. I'm surprised to see Eternal on that list. You would think a consumption boost would come in. Infosys, ITC as well, maybe more concerns weighing in on what's going to happen with tobacco prices. L&T, I wonder if there's a concern about capex and government spends getting tightened as they take a hit on the fisc with the GST bonanza that has been given. So those are some of the themes to look at. Amrish Balika joining in now on the conversation. Amrish, thank you so much for coming in, and always a pleasure to have you on the show. How are you looking at the kind of bounce that markets have seen, and do you see this as sustainable?
First of all, Tamanna and Neeraj, congratulations on becoming #1 so soon. I think it's been about a year, year and a half.
A year and a half, yeah.
Yeah, so that's what. So it's really good, and nice connected with NDTV Profit. Now coming to this question, see the government had to do something to cushion the GDP cut which is, I mean, even if it's 30 bips or 40 bips because of the US tariffs. And the only way that could be done is by increasing consumption because, end of the day, India is a domestic consumption story. So I think from that point of view, we are seeing this announcement of GST reforms. And clearly, that's going to boost the consumption sector because that's where the rates are going to come down from 12% to 5%. And I'll not be surprised if, some of the things which are there in the 18% also could flow to 5%, especially the daily use items. And the other big beneficiary would be the cement pack, because they would come down from 28 to 18. Although there's still a fear that the higher end SUVs could still be taxed much higher. Yes, they could be taxed higher, but still it would be lower than where we are right now, because currently most of them are taxed anywhere between 48% to 50%. So I think that would come down to come down by about 10% or so. So overall, the consumption basket, which includes all these, would surely benefit. And I think that's what is playing out in the market today. And along with that, we are seeing the short covering because a lot of FIs were short in the market. So I think there's some amount of short covering also happening. And finally, I think that still that hope is there that the penal 25% for Russian oil, I think that could be reversed. So that's again a big question mark, but still the hope is there.
Jayawala, just wondering this, I know you are constructive medium to long term, this pullback that has come into IT, which is leading to the Nifty also coming off and currently arguably trading at the low, at probably the lowest point that it's traded today. Is it of concern to you at all?
Well, it definitely is a concern for me. But I think the other sectors will outbalance this. I expect to be proven wrong on Nifty IT, or rather I would say it's a hope. Hope is a very poor strategy. But I think something will come out of the blue for the Nifty IT index. So basically, IT names. Barring TCS, most of the frontline IT names are doing reasonably okay. So if TCS were to bottom, that will be good for the Nifty IT index. And if Nifty IT index were to bottom, it may not be the bottom, it might be some sort of a bottom. That in itself will boost the overall trend for the Indian markets. So a short answer, it is a concern, but I think it will not be an overweighing concern at the moment. Probably it can become a concern that hangs like a bigger problem after several months. At the moment, it's a small problem.
Okay. Also curious, Ambrish, with how you look at consumption. There are some stocks, of course, we've already spoken about, which is largely in the auto pack. Do you prefer that pack, and what within that pack? And if not, there's also a bunch of stocks which are buzzing in the hospitality pack, a Lemon Tree, and IHCL also doing okay, not exactly the same league as a Lemon Tree, but a Chalet, for example, doing fairly well in trade, and ITC Hotels also doing decently well. Would you prefer that part or that segment of the consumption basket?
I think it should be across. Because when you're talking about consumption overall, first of all, the tax benefit which was given in the last budget, I think that should be playing out. And after that, you have the monsoon, because of which you'll have the rural consumption improving. And then you have the 8th pay commission, going forward, which will again push the consumption up. And along with all this, now over the next few months, we have the festive period, where we normally see the consumption going up. And with this push from the government, as far as GST is concerned, I think we should see consumption growing much faster than what most of the managements have been talking about in the near past. So I think all the FMCG companies, then you have the consumer durables, and the other part which you talked about is tourism and hotels. I think that's the the other space where I think the government will start focusing on, because whatever said and done, that will never get affected because of tariffs. So we are looking at more of inbound traffic and spends by foreigners. So I think there will be something on that front coming decently soon. So I think, and at the same time, if you look at the last 2.5 years, most of the ARRs, the average room rents, have stayed up, because like in the past, we have seen spike ups and then they correct. But if you see the last 2 to 3 years, I mean, they have stayed up and the demand is still increasing. You have the occupancies much better than what we have, historically seen. So overall, I think the hospitality pact, the hotels, I think should continue doing well. And in that, my choice would be Indian Hotels, Sami. I think that's doing decently well, and Lemon Tree.
Would you look at any of the auto anchors as well, Amrish? I mean,
Yes, surely I'm looking at some of the auto ancillaries which have been affected because of the Trump tariffs. And especially the ones where, they have some operations in US or Europe, because they are the ones which will not get as affected as the ones which are purely India-based and exporting to US. I think they'll be the worst affected, so I won't touch any of those. But the ones which have operations in the sense they have facilities in US, Mexico, or Europe, I think those are the ones to be looked at.
Okay. So automotive axles among the other things, but there are a lot of stocks that have been buzzing this afternoon, and in fact, Varsha joining us with a list of those buzzers.
3 stocks which are buzzing on the back of earnings. Let me start with Glenmark Pharmaceutical. Now this stock is seeing a pressure. Now this is because a weak set of earnings that the company has posted. Glenmark Pharma missed its estimates when it comes to overall metrics. The net profit impact that you're seeing is led by exceptional items, which relates to lawsuit settlement, and there was a lower growth when it comes to India, which was led by underperformance in their diabetes segment, and the US business was also down 0.4% year on year. Well, next on the list is Jaicorp. If you see EBITDA margin impact that you're seeing is led by increase in other expenses. Net profit growth is led by other income, and lower taxes also aided profit. Just to speak about the 4 numbers, revenue was up 8%, EBITDA was down 43%, margins were at 6% versus 11% last year, net profit was at 104 crore versus 13 crore last year. Last on the list is Zaggle Prepaid Ocean Services, wherein revenue was up 31%, EBITDA was up 16%, margins came out to be 9.3% versus 8.9%. Onto the segmental revenue, the software fees, if you see, revenue was at 10 crore versus 8 crore last year. Program fees revenue were 145 crore versus 126 crore last year, and the Propel platform revenue was at 175 crore versus 116 crore last year. Onto the FY26 growth outlook when it comes to this company, it is expected that 50% growth should be at rupees 1900 crore. FY27 revenue is expected at rupees 2800 crore, while margins are expected to rise at 15 to 16% by FY28 and 29, and they're assuming a margin of 12% in FY27. So these are the 3 stocks, which are buzzing on the back of earnings as of today. Considering Glenmark, which is down on the basis of weak set of results that the company has given.
Yeah, all right. So Glenmark has not really worked today. That is seeing a bit of pain, but look at a Zaggle doing very, very well. Jay, is this something that you're tracking?
Yeah, exactly. Yeah, it's got a very interesting short-term setup. From the April lows, it's saying it's possibly making higher highs that will probably retest the 2025 high of about 580 odds, but the stop loss comes at about 357. And even Glenmark, I think the short-term might look negative for it, but I'm sure it's coming to close the gap it had for the recent breakout. And once that the gap is filled about 1920, 1923, around that level is the gap gets filled. And from a slightly higher time frame, fresh record highs are due for Glenmark.
Amrish, now, firstly, thank you for your compliments, of course, Amrish. But I wanted to come to you on Interglobe Aviation. I was reading a note from Morgan Stanley today, Amrish, which said that Indigo has receipts on 21 aircrafts in calendar year 25 till July. Their channel checks suggest it could receive another 20-25 in the next 5 months. So 45 new deliveries in calendar year 25, well ahead of peers, while Air India's capacity is curtailed. So market shares for Indigo may actually go up. Do you think the markets will reward that?
markets should reward that because none of the other aviation companies are doing anywhere close to what Interglobe is doing. I mean, we were expecting a revival in Air India, but I think the unfortunate accident, I think that has finished it off, at least for the time being. It'll take much longer for it to revive. And I mean, if you're talking of the other airlines in India, it's better not to even talk about them because it doesn't really matter. And with the new airports coming up and with more parking spaces, I don't think that's an issue as far as the new deliveries are concerned. And they will be gaining market share from the existing ones. And at the same time, we are seeing that, like the air travel clearly is increasing year on year. And look at most of the flights. I mean, you'll find most of the flights are at least about 80 to 85% full. So I don't think that's an issue at all. And they have been, I mean, one of the very few airline companies globally which have been showing this sort of profits. So I think it can still move up further from here because of the better discounting we shall get.
Okay, let's quickly, Jay, get your BTST ideas.
Yeah, mine is on the steel sector, on the metal sector, JSW Steel with a stop loss of 1,070. It's breaking out to fresh 52-week highs. I'm anticipating 1,100 to come through by tomorrow. Also keep an eye on Avenue Supermart. It's also from the consumption space. It was a candidate for me. So I chose this JSW Steel because of its smaller price, and I know it gives an opportunity for your viewers to participate in it. But Avenue Supermart is also an interesting stock for tomorrow.
Is there a Nifty call that you would take?
I would. There's not a clear setup, but I would definitely buy the dips. That's the strategy for Nifty. I don't think the Nifty is going to drop below 24,600. So with that can be an affordable stock. BTST on Nifty too.
I think you're looking very far from 24,600 right now. You are below 24,900 though, nevertheless. All right, we have an exciting lineup for you all through the day today on NDTV Profit. And I just wanted to play out a glimpse of this interview that I did. I had an opportunity to see the new Ola Gigafactory. It's about 4 hours from Bangalore, technically in Tamil Nadu. And the CEO, Bhavesh Agarwal, actually walked us through India's first Gigafactory where they will be producing lithium-ion cells. Take a look at a part of that conversation.
The world we're living in.
Yes.
Tariffs. Someone says, don't buy oil from here, don't buy oil from there. A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Yes.
And right now, of course, only for Ola, but does this become something that,
we can do broader.
Forward.
Yeah.
So tell us a bit about that.
Yeah. So I think the geo-strategic landscape, Tamanna, is increasingly getting more complicated. And I think there's broad consensus that the geostrategic landscape is only going to get more and more complicated over the next few years. As countries now start looking out for themselves, globalization is going through a different phase now. So, and this is also coming at a place where in India's journey, we are looking towards a Viksit Bharat dream, like the Prime Minister has said, where we have to develop ourselves. Now, how do we choose to develop ourselves? It's a very conscious choice we have to make, that we have to invest in technologies of the future so that we can control the narratives of the future, the products of the future, supply chains of the future. Cell and this energy is one of them. Rare earths is another one, and we can see how our neighbors are really using it as leverage against us in a trade negotiation or whatever. The way forward for us is twofold, Tamanna. We have to partner with other countries. It's not as if only one country has the source. We have to partner with other countries, like-minded countries in Southeast Asia, elsewhere, western part of the world. And there are also, we have to leapfrog technologies. So now motors, electric motors today use rare earths. But the whole world has moved to rare earth-free motors now, increasingly.
Okay.
Global OEMs, Western OEMs are increasingly testing rare earth-free motors in their batteries. And Ola Electric is the first Indian company to do this. Our entire two-wheeler lineup will, by next quarter, be rare earth-free. So
does it work the same way? Sorry,
absolutely the same way.
Because if there is an alternative, then why is everyone getting blackmailed by one country that has all this?
Because it needs some technology development. It's a next generation technology. It's like 3G था, फिर 4G आया, फिर 5G आया. उस sequence में चलती है ना गाड़ी. So rare earth है. Then you can you get the same performance from a non-rare earth magnet? Then from without a magnet itself, electromagnet के साथ. We've all studied physics in school. Electromagnets are magnets with electricity, just a copper wire with electricity. So increasingly motors can be without any magnet, it can be electromagnets only. So that's a direction of technology. It needs some level of technology development. We have done that because we've invested in technology for the last few years. Indian companies, other companies are behind on that curve, but other global companies are doing that. Many global EVs are actually without rare earth motors now, increasingly. Right? So our products will start coming in without rare earth magnets next quarter. And we do hope the rest of the Indian industry catches up. So that's one way we can kind of de-risk ourselves from the supply chain issue.
So a lot more in that interview. You can watch the full play out at 6 p.m. And yes, I do ask him about all the service issues that Ola Electric has faced in the past and what are they doing about it. So watch out for that entire conversation. Jay, I wanted to ask you about Vodafone before we close out. Debt is continuing to pile up. All of those concerns are there. Stock is up today. Do you see further gains, at least on the charts, technically for Vodafone?
Not a great chart in the short term. It's probably got one more sequence of lower low to come through. I would, look at it what it does around 5.77. So the short term isn't good. Probably there is some potential in the medium term, but not even there, not a great chart. So avoid for the moment.
Okay. The other thing is, Amrish, Ola Electric, and just wondering, there is some smart money buying that has happened there. It could be on account of this gigafactory, something else. Are you enthused enough to invest fresh capital into Ola? Why or why not?
Neeraj, I mean, I am a contra buyer. I've been a contra buyer for a very long time. And Ola has had more than enough share of the adverse publicity till date. I mean, they have a great sector going for them. More or less, they had the first mover advantage. They were number one for a long time. And they lost out all this due to the complaints and the compliance issues which are there. Additionally, they lost a number of senior members. Now, I believe the new launches which they have made are much better with low complaints. So I think they just need to get their house in order, which I think clearly Bhavesh is taking care of that. And I think they need to take care of the senior employees who are there. Then I suppose they will again be back in the reckoning and again be possibly back to number one or number two. So from that point of view, yes, I think at these levels, I'll take the risk and buy Ola.
The only other thing I want to add from the interview as a insight, which I thought was interesting, the street is betting on the PLI incentives getting paid out by Q2. Now, technically, you have certain milestones that Ola has to meet or anyone has to meet. In terms of quantum, they haven't quite met those milestones. Having said that, Bhavesh's response to that question, and I don't know, will you play it out in the full show or whenever you see it, his response to that question was the others who had applied for the PLI scheme have not even started production. At least we have started this. So we are going to appeal to the government to take that into consideration. That is, I think, one watch out for this kind of space as far as Ola is concerned.
But which may mean that others will also not get it, but doesn't mean that he will get it.
No,
or there could be an extension.
No, it doesn't mean that he will get it. They are going to go and pitch saying कि हमने शुरू तो किया है. So you don't look at us in that point of view. So that is up in the air because the audit for this is now very tight for incentive schemes. The government has really cracked down on it. I think the other thing to watch out is that his claim that he's saying we're going to regain market share by the second quarter. Does that happen or does that not is something we'll have to see as well.
Did he talk about an extension to the PLI? Possibility
no, there's going to be a request. There's going to be a request that they will make. Now, what the government will do is a different story altogether. Yeah. All right. So those are some of the counters that we're looking. But let's look at how we're closing up below 1% or just about 1% or so on the Nifty is where we're closing. It's still about 240 points up. So nothing to complain. Yes, you've not stayed up at 25,000. Yes, you've dipped below 24,900 as well. But from the highs, even if you look at the fall from the high, about 145 points actually is what you've fallen from the high. On an average day, it's not that massive. I think the fundamental strength has carried on. I suppose the only question now, Harsh, is what looks poised to pull through with this momentum tomorrow as well?
Well, yes, and we'll sum up the entire market in the next minute and a half. But let me take one moment to thank both of our guests. Thank you so much, gentlemen, for joining us, giving us those views. Amrish as well as Jay for coming in. Let's quickly look at the Nifty intraday, and that'll give us the full picture. Of course, we've fallen nearly 150 points from the day's high, so we touched 25k, fell off nearly 120 odd points from there. But nonetheless, it's it's a day and a week that started on a very, very positive note. 1% higher on the Nifty. Let's pull up the heat map, and that will give us a perspective both from the breadth, which has been extremely strong today, and the broad range of stocks which have done very well. And we've seen a lot of stocks do that. In fact, nearly 27 odd stocks trading 1% plus higher in trade today. So that's the one positive. Then you've got around 18 odd stocks trending 2% plus higher. Which are the stocks leading? Well, it's evident and clear, and this has been from the get-go, from the start of the day. We've seen some of the auto stocks doing extremely well. Nestle has built on those gains from the start of the day. Bajaj Finance also was one of the leaders at the start of the day, continues to do so in terms of returns on the Nifty. What's not done well is an Eternal, 1.3% lower, and ITC, not surprisingly, down 1.4 odd percent. And then you have the IT pack, Infi, Wipro, TCS, Tech Mahindra, HCL Tech, all of those trending in the red. Flattish where the PSU banking names are concerned. HDFC also has cooled off from the highs. Some of the heavyweights did very well at the start of the day, but have cooled off from those highs, and that's what we've seen on the index as well. Let's look at sectors, and within that sector pack, we'll see broadly the same themes play out. The Nifty Auto up nearly 4+%. The consumer durable index, not surprisingly, ACs, refrigerators, and your home appliances have done very well in trade today, 3% higher, and along with it there's that bunch of EMS stocks which have also done well. So that entire sector space of trade has done well. The realty pack was up 2%, so within broader markets that's what saw some good strength. Nifty Metal was up 1.9. IT was one space which was absolutely or rather absolutely in the red, 0.5% odd lower. The pharma index muted, so was the healthcare index. Nothing much on that front in any case, and therefore you've seen those reactions. The Nifty banking index underperformed the Nifty 50 as well as the Sensex, so that's something to keep in mind as well. In terms of the breadth overall, and that will give us texture on how broader markets have done as well. Fair bit of strength where the breadth is concerned. The advanced decline, that's how it's stacked up, but of course we've closed at the low point of the day where the breadth is concerned on the exchange. The Nifty Mid Cap Index just up about 1.2 odd percent. The Nifty Small Cap Index also showing some strength, more strength rather than the Mid Cap, 1.3% higher on the Nifty Small Cap. Some bit of outperformance seen here. Let's talk about the BSE 500 top gainers, top losers, and everything was trending more towards the GST and what the possible impact of that could be, and some of those names are on your screen. And Amber did fairly well. KC International on the back of order wins, of course. Supreme Petro up 10%. There was plenty happening on the pipes segment as well on the PVC side, and therefore you saw those stocks buzzing. So that's how the trends played out. Maruti closing 9% higher in trade. So very solid day for a Maruti Suzuki investor. Godfrey Phillips down 5. Again, no surprise. Just quickly on to what to watch out for tomorrow, and nothing much, just a few corporate actions which will play out. Those are some stock adjustments on the back of dividends that are going to get recorded, so you just want to keep your eye out on that. But outside of that, really nothing nothing of repute except the global geopolitical side of things, where of course we'll have our eyes on everything that's going to happen with regard to Russia, US, as well as what the possible impact on India could be. But completely out of time on this edition of India Market Close. From Tamanna, Neeraj, myself, everyone who puts the show together, thanks so much for watching. Stay with us on NDTV Profit. Market Express will take the action forward. The next half hour will give you all that you need to know on the market today.
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Ganesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth-free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell.
Oh, wow. Yeah.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So viewers, Indian market started off the day, on a weak high note, but Nifty has reclaimed its 25,000 mark towards the end. The index, however, pared its gains to end around 24,800 levels. The 30-pack Sensex also ended trading nearly 1% higher, closing above the 81,000 mark. S&P Global rating upgrades on India and the proposed GST reforms appear to have prompted the Monday uptick. Big auto players like Maruti and M&M pulled up the benchmarks alongside Bajaj Finance and HDFC and HUL. On the other hand, ITC, Infosys and L&T added pressure. So the broader markets reflected a strong day of trade, ending over 1% higher too. Most sectors ended in the green, with Nifty Auto, Rural and Realty leading the sectoral upswing. Nifty Auto in fact posted its best intraday gain of 2025. The auto index ended with gains of over 4%. Now this was largely boosted by the positive impact of the proposed GST reforms. Somani Ceramics reported modest Q1 of FY26 growth, with consolidated revenue up 4.4% year-on-year to around 604 crore rupees. Now, this was driven by a 3% increase in the tile volumes. So, however, EBITDA has slipped 1.6% to 48.2 crore rupees and margins have contracted to 7.9% from 8.5%. Net profit has fallen 15.6% to 10.4 crore rupees due to margin pressure and softer realizations, especially from the joint ventures. So the company has maintained high utilization in the bath fittings, but sanitary ware has lagged at 56%. So temporary disruption at the Haryana plant, responsible for over 25% of the output, now impacted by the operations. Management also has reaffirmed guidance for high single-digit revenue growth and 100 to 150 basis points of margin expansion for FY26. Vodafone Idea reports narrowing losses in the first quarter. Now, key factors include a higher average revenue per user helped by one additional day in the quarter. Net debt also rises to 1.94 lakh crore rupees from 1.87 lakh crore rupees. Now, the company continues its streak with reported losses for nearly 30 consecutive quarters, accumulating over 2.1 lakh crore rupees in the total losses. So quarter-on-quarter revenue remains flat while EBITDA dips 1% to 4,612 crore rupees with margins slightly down to 42%. Net loss also narrows to 6,608 crore rupees from 7,166 crore rupees. ARPU has inched up to 165 rupees and the subscriber base stands at 19.77 crore rupees, which is marginally down from 19.82 crore rupees. Tips Films delivered a stellar Q1 of FY26, posting a record revenue of 95.36 crore rupees, which is up dramatically from 12.38 crore last year to swinging net profit of 4.74 crore rupees after 4 quarters of losses. Now, the strong operational performance and a 7.4% margin has fueled this turnaround, showcasing robust growth in the entertainment sector as well. Signpost India delivered a strong Q1 of FY26 with revenue soaring 37% to 137 crore rupees and net profit also rising 35.7% to 15.2 crore rupees. Now, this is fueled by robust top-line growth. A 17% cut in the other expenses has boosted the efficiency, though EBITDA margins held steady at 23%, reflecting solid performance in the advertising sector. KC International has secured new orders worth 1,402 crore rupees across various businesses, including transmission and distribution, civil and cables and conductors. Now, this brings their year-to-date order intake to 8,400 crore rupees. The company's order book position stands at 34,409 crore rupees as of June 2025, with tenders under evaluation and in the pipeline worth over 1.8 lakh crore rupees. Fusion Finance has appointed Rajiv Sardana, a former HDFC executive, as an independent director. Now, the company's AUM growth and disbursements have been sluggish. However, collection efficiency has improved and delinquencies have decreased, leading to better credit cost. Fusion Finance reported a net loss of 92.3 crore rupees in Q1 compared to a loss of 35.6 crore rupees in the same quarter last year. So the company's calculated net interest income stood at 273 crore rupees with a 31.4% of decline. Zaggle's Q1 results turned out strong. Revenue has jumped 31% year-on-year to 332 crore rupees, with EBITDA increasing by 15.6% to 30 crore rupees. The company's margin has also improved, reaching a 9.3% compared to 8.9% last year. So, breaking down the segmental revenue, software fees saw a modest increase to 10 crore rupees from 8 crore rupees. Now, program fees also rose to 145 crore rupees from 126 crore rupees, while Propel platform revenue has surged to 175 crore rupees from 116 crore rupees. Now, the net profit has also seen a significant boost, rising 16% to 25.1 crore rupees. Glenmark Pharma's Q1 numbers fell short of expectations, mainly due to exceptional items related to a lawsuit settlement. Revenue also grew marginally by 0.6% to 3,264 crore rupees, while EBITDA declined 1.3% to 581 crore rupees. The company's India business saw slower growth due to underperformance in the diabetes segment. The US business contracted by 0.4% year-on-year. Net profit also took a significant hit, plummeting 86.2% to 46.8 crore rupees. The margin also compressed to 17.8% from 18.1% in the same quarter last year. Borosil reported a strong Q1 of FY26 with net profit soaring 87.4% to 17.4 crore rupees. This was actually fueled by a tripling of other income and a 62% drop in the finance cost. So revenue rose 5.2%
to 233 crore rupees, and EBITDA grew 11.7% to 37.3 crore rupees, lifting the margins to 16% despite a 31% tax increase. Morgan Stanley has downgraded Bajaj Auto to a tactical sell with a target price of 9,117 rupees. Now, the brokerage firm believes that Bajaj Auto will benefit the least from the potential GST rate cuts. Now, this is because 40% of Bajaj Auto sale come from the exports, and electric vehicles account for only 6% of its sales. So as a result, the company's weighted average GST rate may not drop significantly. And also, Bajaj Auto's business has low operating leverage, meaning that even if domestic volumes increase, it may not have a substantial impact on the margins. Jefferies has initiated a coverage on HTV Financial Services with a buy rating and a 900 rupees target price, citing its robust lending franchise and strong growth outlook. So the firm expects improved AUM growth from H2, a 30 basis point expansion in the net interest margins, and moderating credit costs to drive earnings and boost return on the equity through FY28. Jacob's Q1 of FY26 saw net profit skyrocket to 104.28 crore rupees from 13.73 crore rupees. Now, this is boosted by a surge in the other income and lower taxes, despite revenue growing 8.3% to 131 crore rupees. However, EBITDA has fallen 43.7% to 7.81 crore rupees, with margins dropping to 5.96% from 11.45%. Now, this is due to higher operating expenses. UBS has also initiated coverage on Angel One with a neutral rating and a target price of 2,935 rupees, citing market cyclicity and regulatory challenges impacting the brokerage income, expected to normalize by late FY26 despite a projected dip in the EBITDA margins. In FY26, UBS sees Angel One's client acquisition and diversification beyond broking as key to future growth. AGI Infra posted a strong Q1 of FY26 with revenue up 26.1% to 91.6 crore rupees and net profit soaring 38.9%, which is nearly 39% to 20 crore rupees, driven by robust project execution. So EBITDA has risen 41% to 30.3 crore rupees, lifting the margins to 33% from 29.6%. So the board also approved a 1:5 stock split following a 1:2 split in December 2024, pending shareholder approval. Morgan Stanley maintains an overweight rating on Tata Chemicals with a target price of 1,127 rupees. The firm highlights that outside of China, the company operates in a balanced market. Although demand trends are weakening in North America and Europe, Tata Chemicals see signs that pricing has bottomed out. So this suggests potential stability and upside for the stock despite the current global challenges. The Indian government has introduced the Jan Vishwas Amendment Bill in the Lok Sabha. Now, this aims to boost ease of doing business and living. Now, the bill has been referred to a select parliamentary panel for review. The legislation seeks to amend several enactments, decriminalize and rationalize the minor offences. Over 300 minor offences are expected to be decriminalized under Jan Vishwas 2.0. Now, as per the bill, first-time offenders will receive only an improvement notice with no penalty, and penalties will be imposed from the second offence onwards, similar to the provisions in the Jan Vishwas 1.0. Now, this amendment builds upon the Jan Vishwas Act 1.0, introduced in 2023, which amended 183 provisions across the 42 acts. An Australian court has slapped Qantas with a record $90 million fine and about $59 million for illegally laying off 1,800 ground staff during the COVID-19 pandemic, marking the largest penalty under Australia's workplace laws. So the Transport Workers Union, which sued Qantas, will receive $50 million, while the airline's aggressive legal tactics drew sharp criticism from the judge. Google has agreed to a $36 million fine in Australia for anti-competitive deals with Telstra and Optus, paying them to pre-install its search app on Android phones from 2019 to 2021, sidelining the rival search engines. So the Australian regulator says that this settlement actually boosts future search choice, with Google halting such deals as the federal court reviews the penalty. OpenAI's current and former employees are planning to sell approximately $6 billion in shares, targeting a $500 billion evaluation, which is a significant jump from $300 billion valuation in a recent $6.6 billion funding round led by Thrive Capital, SoftBank and others, including Microsoft and Nvidia. So the tender offer reported on August 15 of 2025 aims to provide liquidity for staff, with SoftBank and Thrive as key potential buyers. OpenAI's weekly active users have also surged to 700 million, and its annual revenue run rate doubled to $20 billion from $12 billion. Now the deal reflects the booming AI market but raises concerns about valuation sustainability amid unproven profitability. Camlin Fine stock falls 30% over the past month amid a challenging first quarter. The company's revenue also takes a hit, mainly due to weak demand in its specialty ingredients and straight segment. Annual maintenance shutdowns at the Dahej and Tarapur units also affect the production. So now the vanillin business faces a small revenue dip, adding to the pressure. EBITDA is impacted by low production levels, higher unabsorbed costs, and a one-time employee expense. So additionally, the company faces risk from Trump-era tariffs, which notably affect the vanillin segment. Camlin Fine is now focusing more on the US market to navigate these challenges. Mumbai is experiencing heavy rainfall today, prompting the IMD to issue a red alert. Considering the safety of students, the BMC has declared a holiday for all the schools and colleges in Mumbai starting from 12 noon today. The heavy downpour has caused waterlogging in low-lying areas, disrupting the traffic flow. The BMC administration has in fact urged citizens to venture out only when necessary and has also set up a helpline number 1916 for assistance and official information. Heavy rainfall in Mumbai has caused a retaining wall to collapse in Chembur, damaging 7 homes. The incident occurred amidst intense showers that have been lashing the city. A video of the wall collapse has gone viral, showcasing the moment when the structure gave away, sending debris crashing onto the homes below. So, local MLA Sana Malik visited the spot to assess the damage and meet with affected residents. A devastating cloudburst hit Jammu and Kashmir's Kathua district, claiming the lives of 7 people, including 5 children. The tragedy occurred in the early hours of Sunday when torrential rains triggered flash floods in the region. The cloudburst caused widespread destruction, with floodwater submerging roads, lanes and bylanes. Several houses were flooded, causing damage to buildings, belongings and vehicles. Rescue operations were launched by the Army and Jammu and Kashmir Police, with teams working to evacuate the stranded families and provide aid. The Supreme Court, while hearing a case on Kerala's NH 544 toll suspension, slammed Delhi's monsoon chaos, noting the city halts after just 2 hours of rain. Criticizing a 12-hour traffic jam in Kerala, the court questioned toll charges and urged the NHAI to fix poor road conditions causing delays. The Lok Sabha today celebrated Group Captain Shubhanshu Shukla's landmark mission to the International Space Station, discussing its role in India's space ambitions for Viksit Bharat by 2047. So amid this opposition protest over Bihar's voter rolls, Shukla, who returned to Delhi, will meet PM Modi today, as 2 key bills were also introduced. US President Donald Trump, ahead of a White House meeting with Ukraine's Volodymyr Zelensky and leaders from the UK, France, Germany, Italy, Finland and NATO's Mark Rutte, declared Ukraine cannot join NATO or reclaim Crimea. So, annexed by Russia in 2014 as part of a peace deal to end the Russia-Ukraine war, Trump urged Zelensky to end the conflict immediately, aligning with Putin's push for a permanent deal over a ceasefire. Zelensky, backed by European allies, expressed confidence in securing NATO-style defense guarantees, as confirmed by Trump's envoy Steve Witkoff post-Putin summit in Alaska. Russian forces continue advancing in Donbass with overnight strikes killing 5. Spain is grappling with 20 major wildfires amid a scorching heat wave, with temperatures hitting 45 degrees Celsius, prompting the deployment of 1,900 troops to assist firefighters. In Galicia, a massive blaze has shut down highways and rails, while desperate villagers fight the flames with buckets as fires devastate over 1,15,000 hectares this week. Myanmar will hold the initial phase of its general election on December 28, state television said on Monday, outlining a roadmap for the first polls in the war-torn country in nearly 5 years that have already been derided by critics as a sham. So the dates for subsequent phases of the elections, which authorities plan to hold over December and January for security reasons, will be announced later. Myanmar's Union Election Commission said that according to an announcement on MRTV. India will back Surya Kumar Yadav as T20I captain for the Asia Cup 2025 in the UAE starting September 9. Despite Shubman Gill's 754 runs in England's Test series, he and Shreyas Iyer may miss the 15-man squad with Sanju Samson, Abhishek Sharma and Tilak Varma favoured for batting roles. Jasprit Bumrah, cleared after a knee injury, will lead the attack, while Mohammad Siraj is likely rested. India's campaign begins against UAE, followed by Pakistan on September 14, with a potential final on September 28. Rajnikant's Coolie has stormed past 300 crore rupees worldwide in just 3 days, outpacing Bollywood hits like Sitare Zameen Par and Houseful 5 with a domestic net of 158 crore rupees and over $15 million overseas. Directed by Lokesh Kanagaraj, the film is now the fastest Tamil movie to hit this milestone and is gunning for a 600 crore rupee global run. With that, viewers, it's a wrap on this edition of Market Express, but stay tuned to NDTV Profit and don't go anywhere.
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Bhavesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom.
To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth-free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell.
Oh, wow. Yeah.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to invest in
CDSL
that?
for the long term?
Buy.
The market ends higher for the third consecutive day on the Prime Minister's GST cheer. Auto index finishes as the top gainer with most sectors closing in the green. Mid and small cap indices outperformed the benchmarks. Big relief could be on the cards for car buyers across segments as cars in all categories are set to attract less GST under the proposed two-slab regime. Meanwhile, sources say the tax incidence on sin and demerit goods are likely to remain the same. The government's flagship employment scheme goes live today, offers one-time incentive equivalent to average 1 month wage of up to 15,000 rupees to first-time employees. Companies will get around 3,000 rupees per month for each additional employee for a sustained period of at least 6 months. The Chinese Foreign Minister Wang Yi will begin his 2-day visit to India and meet External Affairs Minister S. Jaishankar and NSA Ajit Doval ahead of the SCO summit. Talks are likely to be on trade, border stability and regional issues. The whole world has moved to rare earth-free motors and India should do, says Ola Electric founder Bhavish Agarwal in an exclusive conversation with NDTV Profit. The IMD sounds a red alert in Mumbai and Thane, predicting heavy rainfall for the next 48 hours. The downpour halts the traffic and leads to waterlogging in several areas, affecting the Eastern Freeway and the Western Express Highway. The BMC has also declared a holiday for schools and colleges. Trump and Ukrainian President Volodymyr Zelensky are set to meet in Washington later this evening for key bilateral talks, including a peace deal with Russia. Ahead of the talks, Trump says Zelensky can choose to end the war with Russia almost immediately if he wants to. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Over the next half an hour, I'm going to bring you the latest in markets as well as national and international news. So let's take a look at how the markets fared today. The Prime Minister's GST bonanza brought some much needed cheer to the market, with the Nifty settling 24,900 and the Sensex closing at 600 points higher, but underperformed in the mid and small cap indices that gained over 1% each. Most sectors ended higher, with auto as the top performing index owing to the proposed changes in GST slabs. For more on this, let me go to my colleague Harsh for a wrap of all the market action.
Well, the GST announcement dominated markets today. We closed 1% higher on the Nifty, 250 points gain. We were around 150 points lower from, in fact, the top of the day when it comes to how the Nifty moved. So from the high of the day, we were down around 150 points, but nonetheless 1% higher on the Nifty. So that's the one key positive. The breadth is what aided the Nifty as well. In fact, we had nearly 40 stocks in the green versus just about 10 to 11 stocks in the red at close today, which was again a positive. The tilt of stocks within the red, in fact, was more on the IT side of things. A little bit of pharma, a little bit of healthcare was where some bit of possible negativity was, but outside of that we saw a solid coat of green across the board. But what we also saw with regard to some of the gainers was it was dominated in auto and consumer durables. Also Nestle was one of the other ones, so FMCG was also one space which did fairly well in trade. But talking about consumer durables, and let's switch over to sectors, that will give us a perspective. 4% higher on the Nifty auto, 9% 2% higher on something like a Maruti, which sits on the Nifty 50. What a move for a stock which hit its life high on a day like this. But more importantly, it's also the consumer durable space which was in focus, and within consumer durables, it's all of those washing machines, refrigerators, television sets, even the manufacturers of the something like an Amber, Dixon, all of those came into the spotlight and did very, very well in trade. Some of them moving 5% plus in trade. So some real big moves seen on some of those counters. Also consumption, anything relating to consumption, footwear stocks, something like a Relaxo, a Campus were all buzzing. You also had hospitality stocks, a Lemon Tree, Chalet and the like were doing fairly well for themselves. So all of that consumption basket did very well in trade. And within the sectors, you'll see the Nifty IT down around 0.5%, led by the heavyweights. You'll also see pharma and healthcare largely flat on a day when there was plenty of zing on counters. Rural, the Nifty Rural Index also did fairly well for itself. Real estate did well, 2% higher. Metals were the other space where we saw some zing, 1.9% higher, led by JSW Steel. So all of that was what really led to the outcome that we saw today. When you're looking at the advanced decline as well, 2:1, largely it tapered off gradually as we inched towards the close. And what we saw on the Nifty mid cap and small cap, they held up much better than the Nifty large, or rather the Nifty 50. And we saw 1.2% higher on the Nifty mid cap, 1.3% higher on the Nifty small cap. So those held up fairly well for themselves, and that's how it played out. Even when you're looking at some of the BSE 500 top gainers, top losers dominated by this theme, but along with it also some stocks affected by the PVC possible additional duty, and some of those names also creeping in. Something like a Supreme was also part of that list of gainers in trade.
And let's quickly take you into a live address coming in from Gautam Adani at IIT Kharagpur.
Kharagpur. It is a true honor to join you for this Platinum Jubilee session.
Students, please settle down. All of you will be allowed inside. All of you will be allowed inside. Just occupy the space. We know that a living legend has come, so you are all please be inside and occupy your seat.
Can I stand?
Okay, please get settled. Please get settled.
We'll take you back to the 75th foundation of IIT Kharagpur in just a moment. But before that, I'd like to give you an important word coming in from market veteran Dinshaw Irani. We spoke with him earlier today about Nifty's move today, and here's what he had to say.
I believe that this up move, I saw you guys arguing with the 25,000 because I don't have any doubts. Not today, maybe along the course of the week. But the fact is that this move, the government's move on giving out this GST 2.0, I think it's a conscious effort to not only right the balances, but I think towards consumption. I think they are also worried. It started off with obviously the new RBI governor coming and infusing so much liquidity in the system. Then came the budget where they upped the exemption limits for IT from 7 to 12 lakhs. And I think this is, and again, the kind of infusion that the RBI has been going on doing in terms of not only liquidity, but also in terms of cutting off interest rates. And I think this is the final move that the government could have done.
Meanwhile, we're seeing big relief that may be on the way for car buyers across categories, as under the proposed two-slab GST structure, taxes on small cars that are currently at 28% plus cess could now be cut to just 18%. So even mid-sized and larger vehicles, which now attract as much as 50% tax, may move to a uniform 40% rate. So the centre is working on a comprehensive GST rate revamp that could reshape auto affordability in a big way. And my colleague Shrimi has all of those exclusive details. Shrimi, over to you.
Well, absolutely, under the proposed regime, cars and tractors could see lower tax rate as part of the government comprehensive GST rate restructuring blueprint aiming at simplifying taxation and boosting demand across all sectors. So as part of GST regime revamp, the government actually proposed two broad classification of cars based on the engine capacity. Now, cars with engine below 1200 cc will be
And we'll come back to Shrimi in just a moment, but let's quickly cut across and go back to IIT Kharagpur, where Gautam Adani is addressing the students.
Ask you to be part of such a milestone, the only answer is an immediate and wholehearted yes. My dear friends, this is my first visit to Kharagpur, and I was deeply moved to learn that this very ground was witness to our nation's struggle for freedom. It is indeed humbling to stand here where many of India's courageous freedom fighters were once imprisoned, some even younger than the student before me today. One story of an inmate that somehow lingers in my mind is that of Tridip Kumar Chaudhary, who in 1931, at just 19 years of age, was already a fearless freedom fighter. Imagine, just 19, standing here, I can almost hear his fearless voice still sounding through the walls of the Hijli jail. ना थमे, ना झुके, रहे मातृभूमि अमर, गगन गगन गूंजे सदा, वंदे मातरम का स्वर. That cry of Vande Mataram was more than slogan. It was a promise a promise sealed in blood and sacrifice, a promise of India's unbreakable resolve, and a promise that freedom would live on beyond those who gave their lives for us. And it is about this meaning of freedom that I wanted to talk to you today. My dear friends, in 1947, we broke the chains of our land. Yet in the 21st century, our nation can be independent and still be bound by dependence. Just 3 days ago, we marked our 79th Independence Day, and it is clear we stand at a major inflection point. The world is moving from a conventional war to technology-driven wars of power, and our ability to prepare will decide our future. Because the wars that we have to fight today are often invisible. They are fought in our server farms and not in trenches. The weapons are algorithms, not guns. The empires are not built on land, they are built in data centers. The armies are botnets and not battalions. And here is the uncomfortable truth. In terms of technology dependence, 90% of our semiconductors are imported. One disruption or sanction can freeze our digital economy. In the case of energy vulnerability, we import 85% of our oil. A single geopolitical incident can restrict our growth. When our data crosses India's borders, every bit of this data becomes raw material for foreign algorithms, creates foreign wealth, and strengthens foreign dominance. And in the case of military dependence, many of our critical systems are imported, bringing our national security to the political will and supply chains of other nations. This is the freedom we must now fight for, the freedom of self-reliance, the freedom of Atmanirbharta, if we are to be truly free. 80 years ago, here in the Ijli jail, young men and women fought for the right to govern our land. That same fight continues, only the weapons have changed. And this is what I want every student here to take back. You are the next generation of freedom fighters. Your innovations, your software code, and your ideas are today's weapons. You will decide whether India takes command of its need or surrenders it to others. क्योंकि स्वतंत्रता केवल एक घटना नहीं, यह एक निरंतर लड़ाई है और इस लड़ाई की अंतिम विजय तभी होगी जब हम हर क्षेत्र में आत्मनिर्भर बनकर अपने भविष्य खुद तय करें. My dear friends, I have been an entrepreneur since the age of 16. I have navigated multiple cycles of our disruptions, many moments of our transformations, and built businesses through both crisis and opportunity. But I can tell you with absolute convictions that the age of transformations now unfolding before us is unlike anything I have seen. And the battlefield is not just about protecting our nation's border, it is about securing our technology leadership and ensuring we are able to stay at the forefront of our global innovations. It is about redesigning every business, reimaging every industry, and rewriting every rule of the game. So we lead and not just participate at a low-cost players in the global race. Because as we all know, in a world of robotics and AI, cost advantages will vanish overnight, and we can quickly lose our ability to compete. This is not a transformation at 1x speed. It is 10x. It is 100x. And it is accelerating toward 1000x. As AI start to build AI, LLM start to write LLM, robots start to build robots, code start to write code, machines start to teach machines, and discoveries start to fuel more discoveries. And this is why I call it our second freedom struggle. The world has never seen an industrial and intelligence revolutions of this scale. Here is What I can tell you, tomorrow's trillion-dollar value disruptors will bend others to their will. And some of them will go on to dominate the world like no company has ever done before. Companies will become more powerful than any nations, many nations. And over the next decade, several companies that today seem unbeatable will vanish. They will disappear, not because they lacked resources, but because they could simply not compete at the pace and scale needed. And I will say that same stands true for our educational institutions. Because the educational institutions too must transform. They must move at the speed of change, drive cutting-edge research, and yet to be accountable the real-world impact. This is no longer about producing brilliant graduates. It is about producing brilliant patriots. That graduate armed with ideas, discipline, and the will to make India unshakable. The brutal truth is when knowledge is a commodity, when skills can be downloaded, and when AI can crack engineering problems in seconds, we must ask, what is the future value of an engineering or technical degree? How should we prepare? Because the lifespan of a technical knowledge has collapsed from years to months, maybe even weeks. This means the gap between academic theory and industry reality is widening faster than ever before. And the new currency is the abundance. Abundance of bold ideas. Abundance of lightning speed adaptations. Abundance of our relentless reinventions. In this new round of battle, it is the most brilliant minds that India will need. And you, my dear professors, are the custodians of these minds. Minds trained on these very grounds, trained to think beyond the textbook, trained for rapid inventions, and trained to carry the courage of discovery as a national duty. While this is not a call to give up the heritage of our top institutions, it is indeed a call for designing a different future before it is too late. Let me now talk about the Indian corporates. And it begins with the honest admission that we in industry must share equal responsibility for the innovation deficit India faces. After all, we hire from these colleges, and the best among them are government funded. We stand on the shoulders of public institutions like ISRO, BARC, DRDO, ICMR, NCL, and many more. These have given us the inventions, breakthrough, and discoveries that form our launch pads. From ISRO's Chandrayaan to Aadhaar, from UPI to vaccine research, from freight corridors to our renewable grids, it is worth reflecting that it is the government that has built the foundation of our modern economy. And this model will not adequately sustain in the race we are entering. If India is to lead in the age of transformative technologies like advanced materials, biotechnology, deep tech, and many others, we must carry our share of the nation's innovations burden. Translated not into marketing slogans, but into the budget allocations, world-class laboratories, and risk capital. We must provide platforms where young minds can explore and even fail without fear. If we corporates do not step up, we will remain users of our foreign breakthroughs and never be the originators. This is a future that we cannot accept. So what is a possible path forward? If speed and scale are the defining challenges of our academic institutions, then the answer lies in blurring the lines between where education ends and where enterprise begins. In the industrial era, institutions and corporates operated in parallel lanes. Academia produced graduates. Industry consumed them. In the world we have now entered, victory will most often belong to the owners of IP, and nations will weaponize this IP. The governments controlling the IP distributions. Therefore, we must master partnerships that unite diverse stakeholders, enable seamless talent flow between labs and industry, and embed IP sharing and funding models that reward both groundbreaking research and rapid commercializations. And there are many examples to learn from. In Silicon Valley, Stanford's deep ties with a venture capital and industry have seeded tech companies from Google to Tesla with the startups and academia feeding each other's growth. In the case of a biotech synergy, the Boston-Cambridge cluster saw Moderna and its vaccines emerge directly from MIT and Harvard labs, which was then accelerated by corporate funding. Therefore, universities must push the boundaries of research and corporates must push the boundaries of executions. University must focus on breakthroughs and corporate must focus on scaling the breakthroughs. And together, we must create impact, not just in the markets, but in the very fabric of our Indian society. And so, let me propose some ideas. Together, we will create living laboratories here at IIT Kharagpur across high impact sectors that reflect the very challenges India must lead in. First is a renewable energy. By 2030, India aims to lead the world in our renewables. At Adani, we are building the world's largest renewable energy park in Khavda in the Kutch districts of Gujarat. $30 gigawatt of capacity across 500 square kilometers. Imagine IIT KGP students co-developing AI-driven grid balancing solutions, real-time predictive maintenance, and sector-wide optimization tools. Second is ports and logistics. Adani Ports moves over 400 million tons of cargo annually. As the world's most integrated logistics player, even a single day delay can ripple through supply chains. IIT KGP talent can design machine learning-led berth scheduling, autonomous container handling, and a real-time logistics optimization systems. Third is the airport and a smart mobility. Adani Airports handles 100 million passengers a year across 7 of India's busiest hubs. This complex ecosystems spans transport, security, energy, and a passenger's experience. IIT KGP engineers could pioneer real-time crowd predictions, intelligent baggage handling, and IoT-enabled operations to set a new benchmarks. Building on these initiatives, we are launching the annual Adani IIT Platinum Jubilee Changemakers Fellowships coordinated by IIT Kharagpur and covering every IIT. Its mission is to channel the nation's top talent into high-impact projects that advance national priorities. This framework creates a playbook for any major corporates to partner effectively with our top institutions. And together, we can accelerate India's sheer scale of talent into a force that in a decade can be a parallel to Silicon Valley. Now let me address the student in this audience, many of whom may be wondering, am I not too young to really make a difference? And the best way I can answer is tell you my own story, and hopefully you will have a few takeaways. My dear young friends, it was 1978, and as I walk onto the Ahmedabad railway platforms, awaiting the Gujarat mail to take me to Mumbai, I held 2 tickets in my hands. In one hand was a second-class tickets bought after 30 minutes in a crowded station queue. In the other hand was my ticket to freedom. At 16 years of age, like many of you, I too stood at a crossing. One track lead to the predictable safety of school, the other to the vast unknown of the city of Mumbai. But in my heart, there was a single unshakable belief that the train I was about to board was not just taking me to freedom in Mumbai, it was giving me the freedom to make my own choices, the freedom to build my life with my own hands. In Mumbai, my first job was sorting diamonds, and before long, I was trading in diamonds. That is where my real education began. Trading teaches you the loss is not the enemy. Hesitations is. And I realized something deeper. Only those who are truly free-minded make a good traders, because you learn to embrace risk, to make a fast decisions, and to be comfortable with the incomplete informations or losses you incur. The speed of decision making was to become my first operating philosophy for life. By the age of 19, I found myself back in Ahmedabad, running my brother's polymers factory. I realized how integrated manufacturing and supply chains were not just background operations, but the core engines that decided who would dominate. It taught me the value of understanding and owning end-to-end integrated processes. This learning became the second operating philosophy that would guide every venture I would thereafter build. Then came the crisis of 1991. I was 29 when India was forced to open its doors to liberalizations. It was the start of a massive policy change. For me, with my willingness to take risk, it was a once-in-a-generation opportunity. I moved swiftly and stepped into polymer trading. Fast forward, and just 3 years later, we had overtaken everybody and built India's largest trading house. We then took it public. That was the birth of Adani Enterprises. I had turned 32. But success has its own way of revealing that you lack, and I realized that while I was a very good trader, I did not have an anchor. Without real assets in the real economy, I had no real foundations. One market crash and I could be swept away. That is when the third operating philosophy became clear to me. You cannot build your empire on a ground you do not own. And this took me to Mundra. That was to become my karma bhumi. When I first announced my intentions to build a port in Mundra, most people thought I had lost my mind. Not just because I had never laid a single brick in my life, but because I choose to build the port within one of India's largest marshlands. I still recall that when I presented the idea, some of the bankers laughed and asked, Mr. Adani, how do you expect us to finance land that is under the water? And they were not wrong. Mundra had no access, no industries, no precedent. And a fast forward, and in less than 3 decades, Mundra became a continental scale logistics engine, moving an astonishing 250 billion metric tons of cargo every year. And today, we run one of the world's largest integrated logistics networks, made up of 21 national and international ports, rail networks, inland container depots, warehouses, and fulfillment centers. Thereafter, from ports, we moved into energy, and starting in 2007, we built the world's largest single location coal-based private power plant of 4,200 megawatt. And along with it, we also built India's first 1,000 kilometers high voltage DC transmission systems. Then we took over Mumbai's distribution network and followed it by building the world's largest solar plant of that time, 770 megawatt, all in just 9 months. And we continued expanding. Today, in less than 2 decades, our energy portfolios spans generation, transmission, distribution, LNG, LPG, city gas distributions, solar panel and wind turbines manufacturing, EV charging, batteries, hydrogen, and we are building at Khavda the world's largest hybrid renewable energy park over an area 5 times the size of Paris. Thereafter, from the gateways to the oceans and gateways to the deserts, we turn to the gateways of the skies of India. And 6 years ago, we stepped into airport business. Today, we own the largest fleet of airports, controlled by any single entity anywhere in the world. We move 100 million passengers annually, managing 28% of India's air passengers, and we also manage 40% of our India's air cargo. We are commissioning the Navi Mumbai airport later this year, which when complete will handle another 90 million passengers. And around each airport, we are creating urban ecosystems where air travel will merge seamlessly with a commerce, industries, retail, hospitality, and a residential living. No company has ever conceptualized such an integrated ecosystem at this scale. My young friends, I talk about Mundra, Khavda, our airports, because they were born not just from my spirit of entrepreneurship, but also from my optimisms that the India growth story is unstoppable. I have learned that any visionary private sector group can achieve scale only when it moves in steps with the policies of a visionary government. And over the past decade, this mutual belief, the government's belief in India's potential, and my belief in the government policies gave us the runway to build at a pace that has made us India's largest infrastructure company. My dear students, the same is even more true for you. If you align your ambitions with India's rise, the peak of your careers will unfold alongside the peak of India's power.
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Banesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth-free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell.
Oh, wow.
Yeah.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to invest in
CDSL
that?
for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. It's been an eventful long weekend for everybody here in India because there's so much that's happening across the world that relates to us here in India. Of course, on the global front, you have the meeting between Donald Trump and the Russian President Putin, and that has a bearing on trade between the US and India. There's also the announcement, and this is what is most important, the announcement of a proposal for GST rationalization. And this essentially means that there will be quite a few categories of products and services that will get cheaper if this gets passed by the GST Council. This is being looked at as a booster shot for the Indian equity markets and the economy as a whole. And there's also the bonus of the upgrade of India's credit rating that took place at the end of last week. But let's talk about how fund managers are viewing this. And incidentally, my guest today, Shreyash Devarkar, who's the head of equity at Axis AMC. Shreyash, thank you so much for taking the time. I asked you to join me before knowing everything that would happen. So it's a happy coincidence that has taken place. So first, everything that has happened over the weekend, particularly what is domestic focused, how do you read that? Is this the shot in the arm that the Indian economy and equity markets were looking for?
So definitely, when you look at it holistically, from whatever governments have done over a period of time, including this one. So it is about tax rate, it is about certain policies in state specific which were undertaken, and now this, and even you know that moving ahead in a year or so there will be 8-pay commission talk. So holistically combined together, yes, definitely this is a good development on the consumption front.
Okay, let's delve a little deeper into this because this is one of several measures that have been taken over the course of the last 12 to 18 months that was expected to bolster consumption. The first, of course, was that cut in income tax rate and the slabs rationalization that took place, and we were anticipating that over the course of this financial year you would see a bolstering of domestic consumption. I guess we're yet to see evidence of that. Would you agree, Shreyash? And there's also monetary policy activity, the fact that interest rates have been cut. All of those factors coming together, we're yet to see some movement on the ground. Would you agree?
Yes, as far as when we observe company results, then definitely one need to look into it, and we have not observed any change in commentary from companies per se. However, one should look at how much is the amount, right? So in the current GST cut, and various experts based on the analogies they have used, the amount of stimulus is expected to be somewhere around 1 to 1.5 lakh. Again, this is just a conjecture as of today, without knowing any details. And if you add earlier one of tax rate cut, which is broadly similar in that sense. So that's why I started with that it's a cumulative impact one need to see. If you try to see only individual impact of individual steps, then it may not have a impactful evidence. While if you then have a cumulative impact, which will come over a period of time, then definitely it may have a good development. If you go even historically, there has been rate cuts, etc., especially on the GST side. So you don't get direct evidence of, yes, this rate cut has led to so much demand increase. This is always a cumulative impact of monsoon, overall earning, tax, etc., etc. So let's not look at it in an individual development and its impact.
Yeah, that's a good point that you raised. So therefore, let me ask you about the construction of the portfolios that you manage. And of course, you're very closely involved in the overarching equity strategy of Axis Mutual Fund as well. So you're obviously looking further down the line. What are your own expectations that you've built in as you've set your portfolio strategy as things stand right now?
So as far as portfolios are concerned, broadly, the way we are looking at market is there are segments of market where there is established growth and the growth is getting delivered. Those established segments are across the board. They are in B2C segment. So if you take travel tourism, you take airline industry, there is a hotel. In B2C space, even retail industry is doing well, a part of it. In that space, high-end SUVs or high-end car, that segment is doing well. Till some time back, even the real estate was doing exceptionally well. Today, the numbers are not that great, but yes, that continues to chug along as of now. So there are good sizable pockets in B2C space which are doing well. At the same time, obviously, there are pockets like FMCG, they are not doing well. Now, here what market has done is the spaces which are doing very well, they have got re-rated a lot. They have got re-rated to the extent of almost 30-40% to 200-300%. While the spaces which are not growing, now if you take on the B2C side itself, now credit growth, which generally is driven by retail credit growth, that has slowed down. You have FMCG industries growth that is lower. So if you look at, then there is a consumer durable also in some pockets, especially highly penetrated product pockets, there is no relatively less growth. Now this pack is reasonably priced. When I use the word reasonably priced versus re-rated, I'm comparing the valuation compared to the pre-COVID, because after that there has been aberration in data points. So if you compare the valuation compared to the pre-COVID level, then the spaces where the growth is low, which I highlighted later, those segments are reasonably priced compared to the pre-COVID, while the segments where there is a high growth, they are actually re-rated a lot. On the B2B side also, you will observe the same thing. On the B2B space side, the high growth segment are electronic manufacturing services, power capex, power sector capex, defense. So you see, these are the pockets where B2B, on the B2B side, companies have done exceptionally well. And in that context, there also you have seen the multiple re-rating a lot over a period of time. While on the other hand, you take oil and gas, then there is not much re-rating because the growth has not been very high as such. Metal mining, these are the typical areas where the growth has not been high. So the way we are looking at a portfolio is bifurcated in two parts. One is you cannot just say that I don't want to take a valuation risk, and though there is a growth. So the portfolio comprises of growth sectors which are having high valuation risk, as well as the sectors which are not growing so well, but the valuations are reasonable. There we are choosing the segments where we think that there may be turnaround in near term because of the macros what we are highlighting. So among all the factors which we highlighted earlier, there is, in addition to that, tax rate cut plus GST. Then in addition to that, there is a monetary policy loosening that also is going to have impact. So the cumulative impact of all these things and the plays around that, whichever are available in the market and reasonably priced. So that is one part of portfolio. So portfolio, as I said, comprises of both these, I would sort of say, extremes per se.
Understood. I do want to talk about when you maybe tweaked things, because if I look at a 3-year period or even a 5-year period, Shreyash, before COVID, in the run-up to COVID, a couple of your schemes were doing incredibly well. Post-COVID-19, it went through a bit of a lull, and then back over the course of the last 6 months to a year, they're once again ranking higher. So I'm wondering what has gone into the tweaking of strategy that has helped you do this, if you can take us through that.
At Axis, actually, broadly, when it comes to philosophical investment, our philosophy of quality and growth, that has not changed. It continues. The only change what you would have observed in our portfolio, and that is more to do with the economic development rather than anything change at our end, which is more number of stocks, more number of sectors, which never used to be earlier. So earlier the portfolios used to be very compact, maybe some portfolios in 20, 30, 40 stocks kind of portfolios. While at that time the economy was narrow, when it comes to the listed space especially. Now, if you look at, as I highlighted, the pockets of growth, they are both on the B2C and B2B side. And then there are segments where there is a possibility of turnaround because of the overall macroeconomic development. So the net outcome of that and the net outcome of economic structure the way today it is, the portfolios are more diversified as such. That is one, if you want to highlight what is a change, then this is a change, and this change is more because of economic developments rather than anything we are thinking differently out here. Secondly, again, there is an improvement, as you are highlighted over the last year or so, is again the market. On the other hand, if you notice that market has started consolidating in a manner. If you look at the success rate has drastically reduced. So in that sense, whenever such thing happen, generally the companies which are having better ROEs, better free cash flow, and are having superior growth, they tend to outperform the broader market because here the valuation re-rating is done now in this market. So you cannot expect valuation re-rating. Even when I said there are segments which are reasonably priced, they are reasonably priced. They are not cheap at all. And in this context, valuation re-rating is very difficult. So when you stick to quality and growth, then that also has started playing out in the market over the last 1 year.
You have these themes that move out of favor and then move back into favor. As you've pointed out, quality seems to be moving back. Now, help me understand one of the questions that I often try to ask fund managers, and I know that you're head of equity, but of course you would weigh in the hybrid strategies also to a certain extent. And the way that you're positioning yourself in your hybrid strategy, particularly the dynamic asset allocation fund or the balanced advantage fund, would indicate to your investor how you're viewing the current scenario. So how is that currently equity versus fixed income, and where is it likely to move in the medium term?
So in this space, if you just see even historically over the last 1.5 years, let's not take back into long-term history, we have moved a lot, right from 70% odd to 50%, then 55%. And definitely we are now lower than those 70%. So we are actually in that 50, 55, 60. So that thing moves based on the developments in the market. Our view in this space has been that the way I highlighted in our other funds as well, that there are spaces which are very expensive, but they are growing. And there are spaces where there is a lack of reasonable growth, but they are reasonably priced. And in this context, as you are observing that already, as it is reflected in 1 year returns of large cap, mid cap, small cap, the returns are suboptimal in all the categories. And the net outcome is because of this. I'm not saying that there is no growth, but where there is a growth, the valuations are not really in your favor. In some cases, you are observing that despite if a company, instead of growing at 20%, they grow at 15% and the stock falls. Now, because the expectations are very high when the stocks are trading at 70, 80p, and 15% is not a bad growth at all. And considering this, we have adjusted our hybrid portfolios to the lower exposure to equity over last 1 year or so. It's not very low. As I said, the bottom of stock picking will play a major role here, and in my opinion, more so in case of hybrid funds, rather than taking a call on whether the exposure is say 60% or 55%, that would not make much difference. In that 55%, what you are owning and what you are not owning, that is going to play a major role, and our focus is especially on that.
Yeah, you said it, and margin of safety, I think, is what people look for, right, Shreyash? So therefore, in the broader market funds, and I know that the mid-cap fund is something that you've been looking at for so many years now, would you say that relatively speaking, the broader market funds, there's less margin of safety given everything that we've seen? For Nifty 50 earnings, I think a lot of people will agree they're more or less in line or even better than some had expected. But are you seeing that in the broader end as well?
And that's where one more observation starts, because you highlighted they are in line with expectations. What is happening is over last 1 year, actually the expectations have already come down. Market have cut a lot the expectation for FY26. Probably some of the strategic expectation is running in high single digit. And on those lower expectation, you are not seeing further disappointment. That is a good part for FY26 as such.
We're running out of time, but very quick last comment, Shreyash. Usually ask fund managers to send out a message to their investors. What is your message when you talk about return expectations and how to benchmark them?
That is the easier one. Actually, always the answer to this question has been that expectation from equity market should be closer to nominal GDP growth. So historically, it's based on historical evidence. Historically, whenever nominal GDP growth, whatever it has been, the equity market large cap would have given 1-2% plus minus return, and mid cap additional 1-2% plus minus returns. So this has been the range over a longer period of time, and one should go with that kind of expectation, especially when the market is already discovered and most of the growth segments are highly priced.
Fantastic. Shreyash, always a pleasure speaking with you. Thanks so much for taking the time.
Thank you very much.
All right, now mutual fund managers in the equity space in particular tend to have good times and bad times like anybody else does. But this is because they have an overarching framework that determines the construction of their portfolio. So, for example, there could be one fund manager that is orientated towards value style. Take a Parag Parikh, for example, or somebody that goes or gravitates towards a growth or a quality style, or somebody who prefers a growth at a reasonable price style. Usually, you will find that these themes tend to move in cycles. There will be periods where value comes to the fore, and at other times, growth and quality takes the front seat. We're going to talk about schemes and asset management companies that went through a bit of a rough period and that have come back to the fore, and those that were riding high in the previous year that are not necessarily doing particularly well right now, and what it means for your strategy. Joining me is Santosh Joseph, the founder of Germinate Investor Services. Thank you so much, Santosh, for taking the time. Let me ask you first about what you make of this change of guard, so to speak. How often in your experience does it happen?
Alex, I'm glad you brought that up, because we do not like to believe that winners rotate. We do not like to believe that even someone that's not performing today, depending on what you choose, could also be good performers. In fact, the change of guard is essentially maybe the portfolio stance that the portfolio manager believed in, or the fund house largely believed in, actually coming into play. Now, if you just notice the trend, you will always notice that some, either the mutual fund companies or the schemes will be doing very well, roaring compared to the market, and then they suddenly go into a kind of a hibernation mode. And those that were hibernating come back. So there is a clear case to portray that winners rotate, and even the losers also rotate to come back as winners, choosing fundamentally good schemes which have a track record and which also have the propensity to bounce back becomes extremely critical and important while you're selecting, especially navigating these kind of up and down market circumstances.
Let's talk first about the schemes and the fund managers that were riding high in 2024 that seem to be taking a bit of a backseat in 2025. And of course, it's important to establish that equity market returns are not linear in any form or fashion, and these fund managers can justify that or are testament to that. So talk about some of these schemes, Santosh.
Well, let's begin with, if I was sitting exactly a year ago from now in let's say mid 2024, the funds that were hitting all the charts were the quant fund for all the right reasons of top performance. Maybe GM was doing well, and you had Mahindra, FlexiCap, and the mid cap and small cap, all of them doing well. Now, when somebody wanted to allocate new money and they were going to look at the past performance, it was very compelling to see that these funds were hitting the charts, and then you wanted to put your money in. But today, exactly a year down the line, when you look at them, you do not feel so convinced to park your money over there, and then you look for the new winners in the same shape. Now, similarly, you have some of the guys who did well last year not holding up well this year. So there is this dilemma that an investor goes through. Should I really chase the guys who are showing me immediate good last 1 year performance?
Let's talk about why they're not doing well. And JM, I remember exactly what you were saying. JM FlexiCap, for example, is a scheme that we were talking about quite regularly in 2024 because it was topping the charts. What changed?
So I'll give you an interesting breakup. When we did JM in May and June last year, I remember covering it for various media houses and why JM had such a phenomenal run. And then I'd even spoken to the fund management team, and they explained how they positioned the portfolio to capture the changing dynamics in the Indian market, number one. Number two, they also had a slightly elevated level of small and mid cap in their FlexiCap fund. Well within the parameters of how a FlexiCap fund could be managed, should be managed. But they had really exercised their discretion in terms of their exposure to mid and small cap. And we all know in the last 12 months in particular, mid and small caps have been struggling to keep up the pace that they were running up with the previous 2 to 3 years. So suddenly you notice that a fund that was doing very well because of a certain positioning of exposure to a certain segment of the market, especially mid and small cap, slowing down a bit and cooling off, that it just normalized in terms of performance.
You know, there are also, on the flip side, and we've just spoken about schemes that did well, but on the flip side, there are schemes that underperformed for a large number of months and years, and they've come back to the fore a little bit in 2025. Axis, incidentally, today I spoke with Shreyas Devarkar, who is the head of equity at Axis, and what he was saying is what he tweaked, or what they tweaked in their formula, is not the overarching framework, but the fact that they now have more stocks in their portfolio. This is something that they decided was necessary because they felt that they were not necessarily capturing the upside in the stocks that they initially had in their portfolio, so they widened the ambit, and that has given them some success. So Axis is one that has done well. Is there any other that stands out to you, and why have these started to do well 2025?
So even talking about Axis, Alex, we all know that Axis had a great run a few years ago and then went through 2-3 years of slump, and now they're back and the returns are visible. They were in a situation where they saw the market was polarized with just a few number of stocks, and that was enough to buy into the portfolio to make the returns. But in the last 2.5 years in particular, the breadth and the character of the market has changed, and therefore if you were not flexible enough to increase the number of stocks, to be a little more diversified in sectors that you otherwise thought were not performing but turned around, and if you didn't participate in them, you started having a dip in performance. So I think Axis has done well to broaden their base in terms of number one sectors, and number two, the stocks. You're right, they increased the stock holding, the stock universe list that they had from maybe 300, 350 odd to close to 500 today, and that has given them the edge. Likewise, I think many other companies that are open to the idea of being open to sectors that they initially thought didn't need to be in their portfolios, to segments of the market didn't want to look at, are the ones that have turned around. Another good example to look at this is your Invesco mutual fund company. Most of their schemes, whether it be mid-cap or flexi-cap, are now back with a bang. They had good performance in the past. They went through a period of lull, and they're right now back right on the top of the game, simply because they got their whole investment thesis right, and it's working very well for them right now.
And you've mentioned a couple more in the notes that you sent me. Mirai Asset FlexiCap and White Oak FlexiCap have also done well. What's worked for them?
So when you look at both Mirai and White Oak, these are strategies that was not appreciated in the last year or two, where you have a broad-based, diversified bunch of sectors and a diversified bunch of stocks. You will also notice another very unique thing in some of these funds is the number of stocks. There is a theory that some fund managers do not go beyond 30, 40, maybe at best 50, 60 stocks. It's particularly in White Oak, you look at, they really have a long list of stocks, which is they're participating across the market, across segments, and across even market caps to ensure the portfolio performance is on the top of the game. So in a flexi cap, you do have that luxury to go across sectors, to go across market caps, and to even have a long list of stocks. And that helps a portfolio manager, especially in a year like in the last 12 months where index itself has been very sluggish. Even many sectors have been sluggish, but the broader market is actually inching forward.
Let's talk about one last category of schemes, which is, I mean, I'm tempted to say evergreen, because these are schemes that do particularly well irrespective of where the market is, right? And you have names like Parag Parikh Flexi Cap Fund, you have the Motilal Oswal Flexi Cap Fund, HDFC Flexi Cap Fund. Two of these at least are household names. Why do they work so consistently? And Parag Parikh, for example, one thing is very clear, they don't fall as much. In fact, they fall much less than the market, even if they don't gain when the market is going up. Is that what is working?
So Parag Parikh, in essence, has been an exceptional performer and consistent performer. To begin with, I think they've said it many times in the past that the valuations matter most. Therefore, every time they let a stock enter the portfolio, they're mindful of the valuation that they're entering. And therefore, if you're mindful of the valuation they're entering, you're avoiding mistakes at the time you enter to the portfolio, you're straight away setting up for success. Second thing, they're not shy to use cash as a strategic tool into the portfolio. You've seen it in the last 12 months, you've seen it in the past history. They've raised cash whenever they're uncomfortable with the valuations. They're not shy of holding cash, and they believe in taking cash calls, where most portfolio managers says, cash call is not ours, it is by the investor or the advisor advising the client. But here at Parag Parikh, because they take the cash call and because they're mindful of valuation, they tend to be falling lesser in the market. They tend to be a lot more consistent. Likewise, when you look at even a HDFC Flexi Cap or a Motilal Flexi Cap, they're also very, very opportunistic in terms of spotting opportunities in terms of valuation, and even sometimes raising cash or raising the large liquid names that they hold into the portfolio to protect the downside and also to be consistent over the long term.
Important points. And also, just to round up this conversation, viewers, do not buy into a scheme just because it is ranked in the top lists in that particular year. That's the worst way that you can select schemes. We'll talk about this in more detail in the shows to come, but that brings us to the end of this edition of Your Money Matters. Santosh, thanks so much for taking the time. And viewers, do stay tuned. This is NDTV Profit.
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Bhavesh.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell.
Yeah.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Sandeep Tandon, founder and CIO of Quant Capital, now joining in to help us make sense of everything that we've seen. Sandeep, today is a day for the believers, isn't it? Those who over the last few months, which have been quite patchy, dug in and thought that yes, India will respond in a way that bolsters the domestic economy. What would you do if you were sitting on the sidelines today? And how do you look at all of the events of the last 72 hours or so?
See, obviously the background was perfect. You know, we have been talking about the FI short position is significantly large. Sentiments, if you really look at because of that Trump-related tariff or noise which is there in the markets, obviously people were slightly anxious, so the overall exposure was low. So I think it was more of a confidence crisis which we have seen in last 1 month. That's the reason India underperformed both from emerging market perspective and developed market perspective. And obviously now this boost has come, or bazooka sort of thing, which announcement has come. So obviously it is very domestic centric. I think government has taken right step. Industry has been talking about rationalization of GST for a while, but nobody expected it will come with this manner. And that's the reason market have obviously rallied. So people will be forced to cover the short position and some confidence will come back, which was slightly missing. So I think that it was the background which was there. That's the reason we are seeing this reaction. The challenge is what we have to see, how quick will be implemented, what happened in next 2 months time, 1.5 months time, whether people will defer their decision of particularly four-wheelers or two-wheelers or heavy item, you know, where household item and the food item, you can't make any deferment plan. But can you defer it? So whether buying will come with a gap or some sort of lag. That's what we have to see, but as of now, obviously, it's a great sentiment booster, and we hope that consumption will pick up.
Sandeep, of course, Sandeep Tandon from Quant Mutual Fund with us. And Sandeep, the question would be, would you preempt no big negatives on the global front and position your portfolio towards consumption and be largely invested, even if you had some cash, let's say, ahead of this event? Now, would you change that course?
See, if you analyze, Miraj, our portfolio, we have been largely domestic centric. We have been avoiding this global exposure, except pharma, because pharma we strongly believe in organs. America also does not have any choice but to buy from us. So if you exclude that thing, largely domestic centric thing, and obviously consumption which was slightly affected, and if this can be a booster. So I think it's a more of a confidence boosting exercise rather than saying that number will be visible on immediate basis. I think there was much needed support because capex was getting deferred. People were not willing to take any action or any steps on this. So I think some clarity will emerge, but I think it's too early and too premature to really celebrate. Let's see, look at the fine print doesn't come, but directionally is definitely very powerful.
Sandeep, in agreement with the kind of direction that the market has seen as the biggest beneficiaries, your EMS players, your consumer durables, your autos at the forefront of this?
So obviously, auto is definitely consumer durable also, but in consumer durable and in select auto also, we have to look at the concern which we have in the market for last. If you look at the last numbers, and most of the companies have talked about inventory, So you have very large, meaningful inventory in the system. So that also has to be cleansed first. Then, so that could be a very challenging phase, whether those inventory at the dealer level, whether inventory at the company level. So because the GST angle comes into picture. So I think that also has to be cleansed. So that is a very important thing. And as I was saying in the beginning, whether people will defer the decision. See, in food, you can't, okay? But in heavy items, whether it's auto or consumer durable, also to certain extent, people can defer. So we have to be very careful. I think my personal assessment is that since government has already made this announcement, logically, they also understand the situation. So logically, they should be making this announcement much before the Diwali itself, maybe much earlier. Maybe one can quantify and define it. This is the Diwali Dhamaka which we have, or the gift which is coming. Now we have to also understand what balancing acts come into picture, because very large amount of 28%, is there, so whether that get compensated in some form or other, those maths we have to really look at. But I think the intent is right direction, because volume can pick up. So I think keeping in mind whatever is happening in the industry, I think is a very, very constructive step which government has taken. And let's wait for more clarity. But prima facie, last week also I said neither I'm too bullish now, not too bearish. Okay, something similar stand I'm saying, slightly constructive background was there. So one should optimize this opportunity and increase domestic sector exposure if somebody is sitting on cash.
Even on that domestic exposure, would there be a tilt now towards consumption? I heard you say in your opening answer that consumption seems to be the... So if you had an X percentage of capex-oriented place and X percentage of consumption, would you change that tilt a bit more now?
See, market has already showcased that the price action is already clearly visibly.
Exactly.
The gaps are very high. So which means that smart shifting has already begun, and I think it can only gather momentum. Okay, so it's a very simple thing. See, Neeraj, one important thing which we want to highlight, if you really look at last 6-8 months move in India, all the new age companies have done better, because it's not they were cheap, they were very expensive and still expensive, but they have a trigger for growth. Now other consumption, we didn't now get a visibility of growth coming back, and valuations are anyway attractive, whether it's a consumption name for two-wheeler names or any durable name. I think money will shift from these high-end new age companies towards some of these value theses where growth is more visible now as compared to which was missing earlier.
I'm wondering if this is the time to look at the broader markets and small cap players more closely, Sandeep. Of course, your financials, your IT already in focus with their CISOs, auto right now. But is this the opportunity to look at maybe smaller companies which could really scale up quickly with this kind of GST boost? Just your thoughts on that.
So logically, yes, because given the low liquidity, the impact cost is much higher. So obviously the price appreciation in these names will be far higher than the large cap name. But one has to be very selective and has to be very choosy. One should not get carried away because something has changed. As I said, very important to assess how the current quarter, basically the September quarter would be, whether the cleansing part of the inventory will be sorted out, or whether you want to talk about how the numbers will bottom out by September. So that's a call one has to take, whether the market has already factored in or something still pending. So I will not be very aggressive, but it has become a very stock specific opportunity where one has to be very calibrated in terms of looking on all these data points and then taking a decisive call rather than just getting carried away. yeah, this has come down, let me buy a basket.
Sandeep, the other one argument on valuations is that we still are about whatever 22 times FY26 and therefore not necessarily cheap. But we were looking at some data in the morning, and MSCI India has underperformed MSCI EM quite significantly. I think 17% over the last 1 year. Valuation premium also that our analysts calculated is the lowest since April 2021. FIs are short. The overall holding is sub 16%. Do you think that changes if the global piece doesn't worsen from here? And could that give further tailwinds, if at all?
See, Neeraj, we have to understand that if we go back in our history, right from 1991, 92, when we have seen a crisis, okay, I think Indian entrepreneurs always come back with the bang sort of thing. So I think this crisis also is very important, how we navigate this thing. I think government has showcased a willpower, not surrendering to the US thing, protecting our local interests. And I think the world is watching us, It's not like it might upset the market participant from a very near-term perspective, but if I look at from a government stand, from a longer-term perspective, we are giving a very clear edge that China was not willing to bend. Russia was beyond their control. And if India also have taken a very strong stand, I think it's a clear message that US relevance in the global markets are declining, and Trump will act as a catalyst in doing that. NATO countries' confidence is also low. So a lot of people surrender and beg, to work out because a lot of things are dependent on the US market. Unfortunately, with India, it's very limited. The impact will not be very meaningful. And in fact, recollect this is what government has done. The real impact will be 0.3, 0.5% of GDP. If they can address through GST route, which they have talked about, I think things will be sorted out. So maybe there could be some industry-specific pressure. But largely industry will look for a newer opportunity, newer segment, newer region or geographies to export. And I think things will work out. I think that we have to adapt to new environment rather than be dependent on somebody's mood and, the swings which we are not. You can't plan your capex based on the swing of or mindset of an individual. So I think from a larger perspective, great news for India because every crisis I have seen, India has emerged, entrepreneur has re-emerged, and that's the way I define this opportunity, maybe short-term pain. That's the reason India has underperformed market in last 1 year perspective, last 1 quarter, even last 1 month perspective. But it's a call we have to take. India has been outperforming in last 4 or 5 years. So 1 year of correction and consolidation also we go through it. And if it's something constructive from a longer term perspective, then I will go with this thesis that from a longer term perspective, it is making sense. And it's a game of P multiple or the perception, how the perception. And I think India is demonstrating that is a new emerging leader, new thought leader. They want to create their own legacy. They want to create their own benchmark. I think grounds are perfectly set from a longer term perspective. So one should not get capitulate or give up in the recent turmoil which is there. So I think if somebody has a longer term perspective, which we as an institution we have, I think it's a great opportunity to participate in the main market.
All right. Before we let you go, Sandeep, just a thought on whether you would look at IT more constructively now. I mean, that's the next sort of moonshot, isn't it? Once things clear up here, or do you think fundamentally this is something you'd want to stay away from? Just your thought on IT.
So, yeah, but if you really look at it from a very near-term perspective, from all this GST, there's no impact. But I think they are closer to the neglected territory, which we generally try to look at. So we also have started adding some of these large cap names in our portfolio. But again, I'm going to wait and watch, as I said, maybe by September, October, September quarter. So by mid-October, I think what should be factored in this could be the last quarter and earnings cycle should pick up. So if somebody wants to be slightly more adventurous, one can nimble now. But if somebody wants to wait for more clarity, one can wait for it. So we have started adding in our portfolio, but our stand is still not very aggressively to go all out and build exposure. I think time has come to rebuild some exposure depending on the opportunity from company to company.
That's very interesting to hear, Sandeep. If you're adding IT and rebuilding exposure, at what end? Are you looking at mid-cap? Are you looking at AI focus as a filter? How are you looking at these picks right now?
Predominantly large cap, because over ownership is there in the mid cap. People have made a lot of money in the mid cap space in the last 1.5 years. I think that's the area which is grossly overowned, and they're equally expensive also. So we'll prefer large caps name where ownership has gone down significantly and they're more attractive and they're more liquid also.
Sandeep, just one final question from mine, because you mentioned that you focused on domestics, but you also mentioned that some of those domestics, particularly staples, are and continue to be expensive, and they continue to, I mean, the regional players continue to chip away at those market shares, right? I mean, I've bought a lot of stuff on my phone from very homegrown brands which appear on Instagram, etc., etc. So a lot of products which I would have traditionally bought from staple companies are now being bought by local brands. Do you buy into staples because they haven't performed as yet and there is a consumption boost, or are there other consumer plays which are better?
So I think within consumption staple, my focus is also on the food company. Two specific reasons. One, obviously, even from, let's say, many items from 18 will not be removed, but if it belongs to food category and mass consumption category, will be moving to 5%. That's the way we understand. And second thing is very important to understand is that when it comes to, see, you can experiment with some amount of other product, but when it comes to food item, I think the quality, the brands of some of these established companies, not necessarily MNC companies, even Indian-centric companies also, people prefer to go with quality names when you consume anything. So that's the reason I'm saying food companies, specifically food companies in the staple space, is our focus area, not in general.
Okay. Thank you so much, Sandeep, for speaking with us today.
Well, we are at the Mahindra launch, and it's an interesting one to say the least. And now being joined by Mr. Rajesh Jadurikar, the Executive Director at the company. Thanks so much for joining in. Giving us time here at NDTV Profit. 4 concept cars are standing across the Vision S right now. Talk to us a little bit on that, because back in 2022 when you launched some of the other concepts, you have followed through on that very, very well. With these and so starting question on the 4 the 4 new concepts that you've shown, how early can we expect that to come to the market, and what's the expectation that you have for Super?
Yeah. Puneet, firstly, thanks for being with us. I think this is your first 15th August event with us, and this is something that has become a bit of a Mahindra habit, which we started with the launch of the Thar 3-door in 2020. And then, every year we've done something, and we kind of try and synergize all our efforts to get out a story. Today's story is around our vision for 2027, 2030, and our global vision. One of the reasons we wanted to call this out as a global vision for 2027 is we often get asked questions by analysts such as you on what is next for us, and are there still white spaces which are open, and or are we have we saturated all the opportunities that we have. And we kind of said we should use today to call out what those white spaces are, and hence what's our business strategy, right? So this is not just about a design strategy or a design presentation of concepts or engineering presentation of the platform, but a business strategy presentation. So just some quick numbers, if I may. We have what we call the core SUVs, right? So we've excluded car crossovers, we've excluded MPVs, and we say, okay, what's really the size of the core SUV market in India? And in spite of all the growths we've seen over the last 3 to 5 years, core SUVs as a percentage of passenger vehicles is still only 30%, right? Which means that there is a penetration and a headroom to grow very rapidly. Also in the global market, and today in our presentation you would have seen we've compared ourselves with a couple of luxury SUVs. And our platform is very comparable to luxury SUVs in multiple ways. So there is a global opportunity as well, because luxury SUVs or premium SUVs are just 5% of the total global market, right? So if we are able to bring luxury SUV kind of offerings to the mass market, that could create a disruption as well. So really what we are trying to say is, as we get 2027 onward, there are a lot of white spaces, And you've been an analyst in your past life, which analysts and media often ask us this question, where are the white spaces? Today is a demonstration of how we can occupy those white spaces. So the creation of this platform, which we call New IQ, is because it's new, innovative, and intelligent. And we've really created 4 products which represent the opportunity. So that's really what today is about. So
yeah, Mahindra has been very distinct with design. Yeah, and that's been one of the hallmarks of your customers as well. That wherever you ask, of course, performance is there, but the design aspect is something that's visible on such cars as well. Yeah. Specifically, what are the white spaces being addressed? How quickly do you expect that you will be able to address a new customer which might not be at Mahindra right now, but with 4 different aspects? You also have a sub 4 meter with Visi Next, another couple of launches which are above 4 meters. How quickly you expect to tap into that, and will we see the Vision S first to come out and launch in 2027 as you mentioned?
Yeah, so 2027 is the year we start. We're not saying which of these will come out first, but all of them are at various stages of evolution and development. The subcompact is a large segment, and we do have a presence there with 3 products at the moment. But we believe that it's not just size, it's the presence on the road which matters. Often we get caught into what's the wheelbase and what sense is it 4 meter or less. But to your original point, when you see a Mahindra on the road, the word we use for it is should have unmissable presence. So when you're seeing the vehicle, it has to be something very distinctive, head turning, and with the presence. And that's what we've tried to demonstrate through these 4 concepts, that you can have vehicles of that kind even as you go into 4 to 4.3 meters. So we are very excited about how these can disrupt and hence really create new white spaces or occupy the white spaces that are there.
And in terms of capacity, how are you going to fulfill this? Because you have roughly about 56,000 for your current ICE portfolio. You have around 4,000 to 5,000 for EVs. So specifically, what's the roadmap of capacity creation? I think we previously highlighted to go around 72,000 by the next year. So does that already include this EV pipeline?
Yeah, so the plan right now is the phase 1 of this platform will get made in Chakan, which is our mainstream plant at the moment. We are creating space for 240,000 production of the platform in Chakan by moving some of our current commercial vehicles out to another of our existing locations. So we will be able to do the first phase of 240,000 vehicles per annum in that plant. As we go beyond that, and we've spoken about earlier, beyond 2028, 29, we will look at a greenfield facility to enable further expansion.
And specifically, you already have 2 fantastic EVs on the road right now. With these concepts, will there be a very rational, explanation of which model comes up first, especially within ICE or EV, with that specific to how the model is and which market is it addressing it?
All of these are, flat floor, and we can do ICE and EV on it. So it's a fully fungible platform. The priority right now will be to get the ICE versions out first, and then follow up on EV, because we have an EV portfolio already on the INGLO platform. So we'll first leverage that. You get ICE out on this first, and then follow that up with EVs.
And you already have the XC90, the BE6 on the road. Yeah. I think you are having 2 more on the same platform, which will be launching in 2026. So should expect an India launch first of those, and then all those 4 will be available in the export market as well.
Yeah, all or some of them.
Some of them. And with this concept, you mentioned about global, and that was the competition as well. What could be the strategy for you? Because you already have with the 3XO being very successful in South Africa, in Australia as well, something that was spoken about. How would you address these 4 products in that market, and especially with what are the other new markets that you're looking to target?
Yeah, so our approach really is going to be around this, Puneet. Firstly, markets where we have a brand presence, a good network, service capabilities, what we'll want to leverage first, right? And that's what we're doing with our current product. South Africa, Australia, New Zealand, and some other countries fall in that category. We would want to take our INGLO-based Born Electrics to markets like UK, which is a right-hand drive market, and then Australia and New Zealand. and then over time maybe to New Zealand as well. We are also working on a lifestyle pickup, and that will be left-hand drive, right-hand drive, and for go-to markets like Asia. Our approach will be to build network and brand together in a country and then get pipeline of products in. So it's not like we're looking at opening multiple markets in the world at the same time. We first leverage, build our strength, and then move slowly market by market. So it's a kind of longer term vision on how to go global.
In terms of with these 4 products, I think the launch pipeline for the next 2 years seems to be very set in terms of addressing those white spaces they have. With the customer piece that you spoke about, that you have addressed those customer bases as well. Your briefing plant also coming in will add some capacity, Philip, to yourself as well. My question largely is, within the consumers, recently some kind of slowdown in this year. Do you expect that next year with the market should come back, or because you have been able to have growth in the mid-teens while the industry growth is 1 to 2%. So you have been taking share from the others. How do you expect all these concepts to come together firstly with the market expansion as well? Do you expect that we should, with the product that you're surpassing, you should be able to still compete with that, or do you expect the market to come back in the next? I know it's very early.
Yeah, firstly, market growth is always very hard to predict, but we are very optimistic on the auto growth story in India. And one of the reasons for that is the fact that there's a huge road network expansion that's going on. We believe the road network expansion is what has made many global markets very big for automotive. People who don't think of traveling from a place A to a place B by car, suddenly by vehicle start driving. And that's what our brand is about, which is the spirit of exploration. So we believe we will be the best place to ride that wave. And we, in the medium to long term, are very optimistic on the growth market. The urban market is stressed at the moment. The rural market is better. But overall, we are hoping festival onward things will start looking up.
Thanks so much for joining. It's a pleasure to be with you. Across a bunch of topics, we wish you the best and many congratulations. Thank you so much. Hi, love you. Joining us. Bye.
Tamanna, thank you so much for coming here. So not that far from Bangalore.
Only 4 hours. This is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely.
Wow. I'm tired of doing interviews in the boardroom, Babish.
So good to have you in the manufacturing suit inside a clean room, not a boardroom. To make money, you need the vertical integration, you need the technology development, you need the product portfolio.
A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what you are trying to do to solve that problem.
Global OEMs, Western OEMs are increasingly testing rare earth-free motors in their batteries. And Ola Electric is the first Indian company to do this. This is the output that comes here, Tamanna. You can see this is a cell.
Oh, wow. Yeah.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
This promises to be India's answer to reducing dependence on imported lithium-ion cells. These are batteries that power electric vehicles. It's bold, it's ambitious, and it has its fair share of naysayers who question whether Ola can pull it off. In fact, we have the man himself. Bhavesh, thank you so much for joining
Tamanna,
us.
thank you so much for coming here. It's not that far from Bangalore.
Only 4 hours. But you know, this is exciting.
Yes.
It's exciting because we're also the only channel to get a look inside the factory. We're going to be on the factory floor.
Absolutely, yeah.
And of course, a lot of questions on what this plans to do.
हर नई चीज़ पे सवाल होने भी चाहिए. मार्केट के जो सवाल हैं, they are all the right questions. Is this the right use of capital? Is this the right thing for India? But I'm going to start with positioning this in the macro context in which we find ourselves, Tamanna. Tariffs, rare earths नहीं मिलेंगे हमें. यहाँ से oil मत खरीदो, वहाँ से मत खरीदो. We have to build ourselves. Our Prime Minister today has painted a technology vision for Viksit Bharat 2047. And at the heart of India's future is going to be the next energy technology. And what we are building here is the next energy platform of the future. It's not just for making the EV transition, it is for making the whole energy transition. These cells, इतनी बड़ी factory में छोटे से cell निकलते हैं. But you know, you can imagine then you need such a big process to really make those really high-tech cells. All the technology is built by us in-house, and we'll go through and I'll show you, we'll wear the suits, I'll show you how the process is so automated, so quality controlled, dust-proof rooms. And these cells go into EVs, they go into drones, they go into robots, they go into grid energy storage, जो solar के साथ लगती हैं. So this is the energy platform of the future, and India needs to have its own. And we are here today standing at India's first gigafactory.
Fantastic. Let's go inside and take a look.
So you can see here, this is the full-scale model of this whole site. And this vision that you see here is going to be 100 gigawatt hour. Just to contextualize that, today the world produces about 1500 gigawatt hour. Almost 80-90% of that is in China. So this site alone eventually will be 100 gigawatt hour.
What are we starting with right now?
So what we are starting with is this first block you see here. So
no, in terms of 100 gigawatt hour, we're starting with 5.
What you see today is 5, and the same building will scale up to 20, and then the 20 will scale up to 100.
Okay.
Yeah.
Okay. So how long has it taken to build the entire facility?
The facility took about a year, and then we put all the machines in. So for the last 1 year or 1.5 years, we've actually been fine-tuning our process. And the process goes through a lot of steps, and it's highly complex each step. And छोटा cell बनाने के लिए इतने सारे step लगते हैं.
Yeah, of course. Of course. You know, the question is that why has India not been able to, when you started very well, because you talked about the importance of this in terms of tariffs, in terms of Atmanirbharta. The question is, why have we not been able to do it hence, thus far? What really is the problem?
See, for India to make a big leap into this, we made a big leap into renewable generation.
Yes.
With solar, with wind, etc.
Yes.
The next phase of renewable is equally, if not more important, which is storage. And storage is more technology intensive, R&D intensive. And in general in India, we've taken the leap on manufacturing, but we're still early in the leap on R&D.
Agreed.
So that's why what you see here, a lot of it is, and you can see here the lines are producing, the cells are coming out. Right, so these are the finished cells, and when I'll take you inside, so we'll see actually किस तरह से वो material से cell बनता है इस पूरे line में. So it's very R&D intensive. All the technology we had to create in-house. So it took us also 4 or 5 years.
You know, this is interesting you say that, because this is being seen as a good thing and as a bad thing. The negative in it, I'll talk about first, is the question that is coming, that since you're not doing this with any large partner that is established globally, will you be able to manage the efficiencies that others do have in this space?
Well, we've been at it for 5 years now. When Ola Electric started 5 years ago, we started with our cell R&D. So we've also improved our processes, improved our engineering to a level where our efficiencies are at the same level on global benchmarks. Our scale is lower than global benchmarks, but our technology and our process efficiencies are at the same level. So as our scale improves, our cost of manufacturing will also be equal to global benchmarks. And also for us, this is not a 1 year, 2 year vision. It's a long-term vision. As we keep increasing scale, India is going to be a large consumer of these cells. We ourselves, as the leading EV company, but also across EV energy storage, बहुत cell लगने वाले हैं. So we will need the whole capacity, and that will provide us the impetus for scale.
Here's where all the magic happens, and of course there are various segments of it. So, you know, the idea of a modern day factory is few people and a lot of machines. And I think one interesting thing over here is that it's led to a large part by women running the shop floor.
Almost 99% it's women. So I would say it's all women factory. Even our automotive factory is an all-women factory.
That was a conscious decision?
Yes, very conscious decision, because in India, one of the reasons our workforce has lagged behind is because women participation is low. And it's not because the women can't do it. It's because there's a little bit of mindset in the industrial communities that are women good enough for the industrial work. And our factory has been, automotive factory has been working so smoothly for 4 years now. So we've scaled that up into the gigafactory, and you know, the women are doing such good technical work. And if I can say this on camera, Tamanna, women are better than men at this work.
You can say it on camera, off camera. I think it's true.
They're more disciplined. They don't take random breaks, and they're more dexterous with their hands. The women are better hires than men. I hope I don't get into trouble for this.
No, I don't think you will. Okay, so now of course we have to wear protective gear, right? When we're getting in.
You know, because I'll tell you why we have to wear protective gear. This process of making the cell is extremely sensitive to moisture, to dust, and to any environmental impurities. So we have to cover our skins because our skins release moisture.
Okay.
So sweat, right? So we have to cover ourselves in these suits so that the ambient temperature inside remains at a very controlled level. Cell manufacturing is second only to semiconductor in terms of complexity. Semiconductor, you will see similar suits and similar clean rooms. So just like that for cell manufacturing.
Okay, let's go. Okay, so tell me what we are looking at right now, Bhavesh. What is this section that we are going to?
So the whole gigafactory, the cell manufacturing process is extremely clean. Humidity control, dust control, other impurity controls, very high degree, because the cell is at a micron level.
Which is why we've had to wear all of this gear.
Sar ke upar, pair ke upar, sab jagah, we have to wear all this because we can't let moisture from our skin go into it. Now we are entering into the assembly process.
Okay.
Yeah, so we'll enter into this cleaning room.
Oh.
Yeah.
And we have to wait here?
We'll have to wait here. Wind will blow. So this is for whatever, if we have some impurities, they'll go onto the sticky carpet.
Wow. This is quite an experience. Okay,
So
here's
this is
the
what we
magic
call
happens.
this is where the magic happens. This is the assembly process.
Okay.
So there is another much more, a very more tightly controlled process behind this, which is called the electrode process, where we get the powder from outside, put it into a mixer, and out comes a roll, which roll we see over there. So let me show it to you.
Okay.
Yeah, so what this process gets as an input is these rolls. So this is the anode, and this is the cathode.
Okay.
Right, so
This is safe to touch?
yeah, you can touch where you have the gloves on. Yeah.
Okay.
Yeah. So ये anode खराब हो जाएगा. We'll no, it's okay. Don't worry. Minor thing. But so these are heavy. Huh? So these are wound very tightly. This thing you see is the material.
Yeah.
Anode, cathode, which goes into these big machines over here, fully automated.
Right.
And you can see we put the anode roll, put the cathode roll, and then it winds it. It's called a winder. It winds it into this jelly roll.
Okay.
So it's called a jelly because it's supposed to be soft like a jelly, but it's not, because you have to wind it very tight.
Obviously.
But it looks like a jelly.
So this
Yeah.
is this actually, my thumbprint actually went in.
Yeah.
Because it is.
Yeah.
It's got that kind
So
of.
what will happen downstream is all these things will get actually
Firmed up.
compressed, firmed up. So you'll press it like this to firm it up.
Okay.
Yeah.
So this is the entire gigafactory. If you
Yes.
want to understand what comes out of it, it is this size.
It's this size, which is the cell. This is still not the cell. It'll go into a container which will then have electrolyte inside it.
Okay.
Yeah, so this is the output of this step.
Okay.
So you
got
take
it.
this inside, two of these, and you output this.
Okay.
Yeah.
Got it. So Bhavesh, let's talk a bit about why this gigafactory is such a big deal, and
Yes.
why there is in terms of your financial goals, because your Q1 was blockbuster, right?
Yes.
Huge increase in gross margins.
Yes.
Your view and bills of materials came down, etc. The vertical integration is what the street seems to be very excited about.
Yes.
How does getting this gigafactory up and about actually play into that, and when do we see the magic of your own batteries in your thrillers?
So the heart of a vehicle is the cell, EV especially is the cell. Just like in the ICE era, the heart of the vehicle was the engine.
Yeah.
And the biggest cost driver, the biggest performance driver, everything is the cell. So if I hold that and show you, so about 40 such cells this size go into our scooter.
Okay.
Yeah, so you can imagine the amount of material that goes in. So the biggest anchor of our vertical integration strategy is the cell. Already, like you said, our Q1 results had a lot of gross margin improvement with a lot other vertical integration. For example, the motor, the electronics, the software. And now the cell is the next phase of that vertical integration. When our cell comes in, that gross margin will further go up. So, and that cell coming in starts this quarter. So one of the reasons I wanted you to come here and for you to see is that the cell is ready. And the cell is going into our products. And I want you to see this. So you see, it's fairly complex process, fully automated. The girls are only monitoring the screens.
Yeah, this is amazing. Because practically it goes through.
So by the time it comes here, it already flattens the surface.
Yeah.
And that machine is separating the cells into different grades. Top grade, one level lower. So the one level lower will get redone. And if I show you what the girl does, so there's no manual intervention. The girl operates the computer.
Okay.
So it's a very high quality manufacturing job that gets created in a factory like this. So all these kind of, she's monitoring the system. If there is any alert, she will deal with it on the system itself.
Okay.
Yeah.
So coming back to this, the gigafactory, this is of course, the exciting thing about it is this is part of the PLI scheme.
Yes.
And in second quarter, the PLI scheme incentives are also expected to kick in, and that also helps you, of course, in terms of EBITDA, etc. The one concern was that have you stuck to the timeline to be eligible for those PLI incentives?
Yeah. No, that's a fair question. We have also decided that we will not expand beyond 5 gigawatt hour right now.
Okay.
For the PLI, we had to grow till 20.
Okay.
So, but we're the only one in that scheme who has put up a factory and is producing commercial cells.
Yeah.
So we are engaging with the government and telling them that we might need a little bit extra time.
Okay.
And the government is fairly empathetic because of the complexity that goes with this kind of a manufacturing setup. The fact that it's the first in India. So let's see, but we are very hopeful that the government appreciates our point of view on this. Yeah.
Okay, so to be fair, the gross margin expansion has happened without the PLI incentive
Yes,
coming
absolutely.
in. Without the possibility of the PLI incentive being delayed, do you still become EBITDA positive on your auto segment?
Q2, that's what I've told the street in Q1 results.
Yeah.
And we are on that path.
Yeah?
Yes.
Okay. What is demand looking like? I know it's in a gigafactory, but
Yeah.
you sell bikes who have this vantage point of seeing what demand is looking like.
Yes.
And there's an unclear story there. One side of the speech, some companies say consumption is picking up, others
Yeah.
they're not.
Yeah.
What is that looking like for you?
See, I think the EV story, penetration story, where it is still very early. So there's a lot of headroom to grow the EV penetration story.
Yeah.
We have a scooter portfolio where we have a very strong position. Like I was mentioning, we have sold almost 1 million scooters. The next player has only sold less than 6 lakh vehicles. So we have a very large scooter franchise in EVs.
Yeah.
Scooter penetration is now almost 20% in EVs. The next phase is motorbikes, and our motorbike story is picking up. We are being gradual. We started from South India, launched about 200 stores with our bikes. This month and next month, we will scale it up to all our stores. So the Roadster X and X Plus consumers have given us 2 thumbs up. So it's looking very exciting, and you will start seeing very good numbers as we ladder up into festive.
Okay. So, you know, the festive push, apart from the great numbers coming in, what do you think your market share is going to look like? Because your market, Mark, you were up here.
Yes.
You were the guys who dominated the market.
Yes.
So 50% plus.
Yes.
Then all the big boys woke up and,
Yeah.
Arey, EV to humko bhi bana hai."
So
Then they've come in and your market share now has improved back. I think
now it's rising again. 20% is where it is, yeah, right now.
Where do you see it going?
See, you mentioned the trajectory well. We were about 35 to 40%, before our IPO 1 year ago.
Yeah.
And since then, other incumbents have come in with more scale and more products, and our market share has gone down to the high teens, and now it's inching back up. What I see is, what work we did over the last 2 years, other OEMs are doing now, which is build some products, scale up distribution, get some consumer mind share. But we've gone to the next game already. The next game is actually to make money with EVs. To make money, you need the vertical integration, you need the technology development, you need the product portfolio. So Ola Electric's core strategic pillars, which are 3, vertical integration in manufacturing, our own technology development across the stack, be it cell, software, electronics, and company-controlled front-end distribution. These 3 are helping us grow both profitably and inch back market share. So now, as you see over the next few months, and especially as we ladder into festive, we aim to claw back market share, and we also aim to have a steady state market share of about 25 to 30% in the two-wheeler EV segment.
Do you think that the company has crossed that hump, those concerns from customer service perspective? That was something which was a pain point a few months ago. Do you think that has receded? And especially, I think, with the newer models that seems to have receded.
Absolutely, Tamanna. Well, we had a challenge last year where our service network was not as big. Our sales network had grown, but our service network, we hadn't scaled up fast. Yeah. So then we spent time investing into scaling up our service network. And now our service network is almost where we wanted. There's still another quarter or so of effort required. Customer service complaints and all are now fully taken care of. It's roughly where the industry average is. Now with our new products also, the Gen 3 products, the warranty claims, customer complaints are much lower because it's a much better product, more in-house manufacturing, the motor controller, everything manufactured in-house. So as a result, we have a much better product. And the customer adoption of the Gen 3 product is very strong. So we have both our Gen 2, Gen 3 products in the market. Gen 3 now contributes to almost 90+% of our sales.
The last time I spoke to you was before your IPO.
Yes.
And the Bhavesh pre-IPO and the Bhavesh after Q1 of FY20, it's a very different person.
Is it?
From my perspective, I speak to a lot of CEOs. So from my perspective, I can see that you have tried to figure out what the street wants, what investors are saying.
Yeah, no, that's...
Has it been a bit of a journey? Because you've been a passionate creator.
Yeah.
You started this journey as great. I have an idea and I want to create.
Yes.
Now you have to manage a lot of stakeholders.
No, you're very right, Tamanna. It's been an important learning journey in my journey as an entrepreneur. Specifically 2 things that we have learned as an organization and me personally. how we need to do smarter capital allocation and how we need to do operational risk management.
Yeah.
Especially as a public company, the yardstick is higher, and rightly so. There are more people who are invested in your journey. The way we have to manage operational risk also is broader and more deeper. So we're learning those skills, and we're learning them by adding people who have been through this journey before. We're learning them by ourselves, reflecting on some of the learnings. And I do believe today the company is in a much better trajectory of a balanced, profitable growth journey than where we were maybe 1.5 years ago.
What happens in terms of, does this realization and these new responsibilities as someone running a public business company now temper some of those ideas, the maverick part of you?
Not at all. Not at all. I think it adds a layer. It doesn't temper anything, but now it's a more holistic way of managing business, or my approach to entrepreneurship is more holistic. The ambition, सपना तो वही है, but सपने को पूरे करने के लिए जिस तरीके से आगे बढ़ना है वो थोड़ा सा nuance हो गया.
Let's see the battery. I want to see.
Yes, the battery is all the way down that side. So shall we walk back?
Yeah. Okay.
Yeah.
Let's walk back.
So this whole line, like I said, starts from that electrode roll. We make the jelly roll, and there are almost 25-30 processes that happen in this line, fully automated.
Okay.
And each step is manned by a girl. Actually, I shouldn't call it manned, woman by a girl.
Yeah.
Yeah, and that's another important story, Tamanna. The amount of change of life that a girl has when you give her employment in a place like this, a rural community.
Yeah.
Right? The whole family's life changes.
Correct.
And we've seen that goodwill be there for us as we've given all these girls a very respectable job.
No, and employment in manufacturing is huge. I want to come back to something like you said right when we started this interview, when you talked about the world we're living in.
Yes.
Tariffs. Someone says, don't buy oil from here, don't buy oil from there. A big concern right now is rare earth.
Yes.
And I think we need to focus a bit on what we're trying to do to solve that problem.
Yes.
And right now, of course, only for Ola, but does this become something that,
we can do broader.
Forward.
Yeah.
So tell us a bit about that.
Yeah. So I think the geo-strategic landscape, Tamanna, is increasingly getting more complicated. And I think there's broad consensus that the geostrategic landscape is only going to get more and more complicated over the next few years. As countries now start looking out for themselves, globalization is going through a different phase now. So, and this is also coming at a place where in India's journey, we are looking towards a Viksit Bharat dream, like the Prime Minister has said, where we have to develop ourselves. Now, how do we choose to develop ourselves? It's a very conscious choice we have to make, that we have to invest in technologies of the future, so that we can control the narratives of the future, the products of the future, supply chains of the future. Cell and this energy is one of them. Rare earths is another one, and we can see how our neighbors are really using it as leverage against us in a trade negotiation or whatever. The way forward for us is twofold, Tamanna. We have to partner with other countries. It's not as if only one country has the source. We have to partner with other countries, like-minded countries in Southeast Asia, elsewhere, western part of the world. And there are also, we have to leapfrog technologies. So now motors, electric motors today use rare earths. But the whole world has moved to rare earth-free motors now, increasingly.
Okay.
Global OEMs, Western OEMs are increasingly testing rare earth-free motors in their batteries. And Ola Electric is the first Indian company to do this. Our entire two-wheeler lineup will, by next quarter, be rare earth-free. So
does it work the same way? Sorry, very
absolutely the same way.
Because if there is an alternative, then why is everyone getting blackmailed by one country that has all this?
Because it needs some technology development. It's a next generation technology. It's like 3G था, फिर 4G आया, फिर 5G आया. उस sequence में चलती है ना गाड़ी. So rare earth है, then can you get the same performance from a non-rare earth magnet? Then from without a magnet itself, electromagnet के साथ. We've all studied physics in school. Electromagnets are magnets with electricity, just a copper wire with electricity. So increasingly motors can be without any magnet. It can be electromagnets only. So that's a direction of technology. It needs some level of technology development. We have done that because we've invested in technology for the last few years. Indian companies, other companies are behind on that curve, but other global companies are doing that. Many global EVs are actually without rare earth motors now, increasingly. Right? So our products will start coming in without rare earth magnets next quarter. And we do hope the rest of the Indian industry catches up. So that's one way we can kind of de-risk ourselves from the supply chain issue.
Now, if So what we're creating here clearly is important for the industry as a whole, not only for Ola. Of course, it has to do vertical integration, margins, etc. Is there a potential to have this available to the rest of the industry? Is there the ability to scale up to that extent required?
Yeah. So this is the output that comes here, Tamanna. You can see this is a cell. Yeah. It's इतनी बड़ी factory में इतनी छोटी सी चीज़ निकलती है.
That's what it is.
As you can imagine, the most complex factories in the world are for the smallest things.
Yeah.
Like the chip and the cell. Such a big process. ये suit wood पहन के बनाना पड़ता है. But in the end, it looks so simple. But a lot of complex technology goes in it. And you can see here, if I draw the attention of your crew, this line, you can see the cells are waiting there for this process. They're coming in over the line there. The machine picks them up, puts them in the process, and then.
What is the rate? How many batteries do you have per minute, or what is the sort of rate of production of these?
So this factory can produce 5 gigawatt hour of cells, and I don't know how many cells that means. I've never made that math. Yeah, but a vehicle takes 40 of these cells, so 10 of these cells make 1 kilowatt hour. So 1 gigawatt hour is a million kilowatt hours. That's 10 million, so 50 million a year.
Oh wow!
Yeah, so that's about 1 lakh or 2 lakhs a day.
Wow!
That's what this factory will totally produce.
Very impressed with the mental math.
I am a engineering student, so
correct.
I hope those numbers are right. By the way.
We'll check them. Okay, so now we're getting a great idea of scale of this.
Yeah.
Now my question is, what do you need to scale this up?
Yes.
There is a PLI scheme. But clearly more push will be required to bring this to fruition and to the scale that India needs?
Absolutely. Our scale right now is 5 gigawatt hour. We do aim to scale to 20 gigawatt hour as the Indian market grows. Today, the Indian market cannot digest a 20 gigawatt hour scale yet, but the Indian market is growing. So in the next few years, as we end the decade, I think we will have the potential to invest into the 20 gigawatt hour. And then beyond that, the market potential is huge. So just for automotive and energy storage, I believe India will need about a few hundred gigawatt hour a year capacity in a decade or so. Right? So it's a potential for many companies to enter and create a few large gigafactories across the country. Then beyond that, the world is also looking for de-risking its supply chains from China. And China is the largest supplier of these cells today, lithium cells. India can be a very good trusted supply chain source for the rest of the world, be it Southeast Asia, be it Australia, be it the West or Middle East, because you will not be able to build these factories in every country. They require a lot of depth, ecosystem, technology, and I think that's where India can become an alternate, a peer to China in terms of scale and technology.
Yeah. So this is it, folks. This mega Giga factory. You've seen the first logo exclusively right here on NDTV, and this is what comes out of it at the end of it. It may feel small, but it's definitely mighty. It is something that is hopefully
Cheers to that.
Power the future. Cheers to that. Thank you.
Thank you, Tamanna.
Thank you.
Wonderful speaking.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So viewers, Indian market started off the day, on a weak high note, but Nifty has reclaimed its 25,000 mark towards the end. The index, however, pared its gains to end around 24,800 levels. The 30-pack Sensex also ended trading nearly 1% higher, closing above the 81,000 mark. S&P Global rating upgrades on India and the proposed GST reforms appear to have prompted the Monday uptick. Big auto players like Maruti and M&M pulled up the benchmarks alongside Bajaj Finance and HDFC and HUL. On the other hand, ITC, Infosys and L&T added pressure. So the broader markets reflected a strong day of trade, ending over 1% higher too. Most sectors ended in the green, with Nifty Auto, Rural and Realty leading the sectoral upswing. Nifty Auto, in fact, posted its best intraday gain of 2025. The auto index ended with gains of over 4%. Now, this was largely boosted by the positive impact of the proposed GST reforms. Somani Ceramics reported modest Q1 of FY26 growth, with consolidated revenue up 4.4% year-on-year to around 604 crore rupees. Now, this was driven by a 3% increase in the tile volumes. So, however, EBITDA has slipped 1.6% to 48.2 crore rupees and margins have contracted to 7.9% from 8.5%. Net profit has fallen 15.6% to 10.4 crore rupees due to margin pressure and softer realizations, especially from the joint ventures. So the company has maintained high utilization in the bath fittings, but sanitary ware has lagged at 56%. So temporary disruption at the Haryana plant, responsible for over 25% of the output, now impacted by the operations. Management also has reaffirmed guidance for high single-digit revenue growth and 100 to 150 basis points of margin expansion for FY26. Vodafone Idea reports narrowing losses in the first quarter. Now, key factors include a higher average revenue per user helped by one additional day in the quarter,
Net debt also rises to 1.94 lakh crore rupees from 1.87 lakh crore rupees. Now, the company continues its streak with reported losses for nearly 30 consecutive quarters, accumulating over 2.1 lakh crore rupees in the total losses. So quarter-on-quarter revenue remains flat while EBITDA dips 1% to 4,612 crore rupees with margins slightly down to 42%. Net loss also narrows to 6,608 crore rupees from 7,166 crore rupees. ARPU has inched up to 165 rupees and the subscriber base stands at 19.77 crore rupees, which is marginally down from 19.82 crore rupees. Tips Films delivered a stellar Q1 of FY26, posting a record revenue of 95.36 crore rupees, which is up dramatically from 12.38 crore last year to swinging net profit of 4.74 crore rupees after 4 quarters of losses. Now, the strong operational performance and a 7.4% margin is has fueled this turnaround, showcasing robust growth in the entertainment sector as well. Signpost India delivered a strong Q1 of FY26 with revenue soaring 37% to 137 crore rupees and net profit also rising 35.7% to 15.2 crore rupees. Now, this is fueled by robust top-line growth. A 17% cut in the other expenses has boosted the efficiency, though EBITDA margins held steady at 23%, reflecting solid performance in the advertising sector. KC International has secured new orders worth 1,402 crore rupees across various businesses, including transmission and distribution, civil and cables and conductors. Now, this brings their year-to-date order intake to 8,400 crore rupees. The company's order book position stands at 34,409 crore rupees as of June 2025, with tenders under evaluation and in the pipeline worth over 1.8 lakh crore rupees. Fusion Finance has appointed Rajiv Sardana, a former HDFC executive, as an independent director. Now, the company's AUM growth and disbursements have been sluggish. However, collection efficiency has improved and delinquencies have decreased, leading to better credit cost. Fusion Finance reported a net loss of 92.3 crore rupees in Q1 compared to a loss of 35.6 crore rupees in the same quarter last year. So the company's calculated net interest income stood at 273 crore rupees with a 31.4% of decline. Zaggle's Q1 results turned out strong. Revenue has jumped 31% year-on-year to 332 crore rupees, with EBITDA increasing by 15.6% to 30 crore rupees. The company's margin has also improved, reaching a 9.3% compared to 8.9% last year. So, breaking down the segmental revenue, software fees saw a modest increase to 10 crore rupees from 8 crore rupees. Now, program fees also rose to 145 crore rupees from 126 crore rupees, while Propel platform revenue has surged to 175 crore rupees from 116 crore rupees. Now, the net profit has also seen a significant boost, rising 16% to 25.1 crore rupees. Glenmark Pharma's Q1 numbers fell short of expectations, mainly due to exceptional items related to a lawsuit settlement. Revenue also grew marginally by 0.6% to 3,264 crore rupees, while EBITDA declined 1.3% to 581 crore rupees. The company's India business saw slower growth due to underperformance in the diabetes segment. The US business contracted by 0.4% year-on-year. Net profit also took a significant hit, plummeting 86.2% to 46.8 crore rupees. The margin also compressed to 17.8% from 18.1% in the same quarter last year. Borosil reported a strong Q1 of FY26 with net profit soaring 87.4% to 17.4 crore rupees. This was actually fueled by a tripling of other income and a 62% drop in the finance cost. So revenue rose 5.2% to 233 crore rupees and EBITDA grew 11.7% to 37.3 crore rupees, lifting the margins to 16% despite a 31% tax increase. Morgan Stanley has downgraded Bajaj Auto to a tactical sell with a target price of 9,117 rupees. Now, the brokerage firm believes that Bajaj Auto will benefit the least from the potential GST rate cuts. Now, this is because 40% of Bajaj Auto sale come from the exports, and electric vehicles account for only 6% of its sales. So as a result, the company's weighted average GST rate may not drop significantly. And also, Bajaj Auto's business has low operating leverage